Everyone, good morning to all of you. Welcome once again to this live commodity analysis. स्टार्ट करते हैं आज का सेशन। फिलहाल के लिए देखोगे कल के लेवल हैं। कल क्रूड ऑयल ने रेंज ब्रेक कर दी है ऑलरेडी। निफ्टी बैंक निफ्टी गैप ओपन हुआ है, मोमेंटम में है कंटिन्यूसली। देखते हैं कुछ वहाँ भी मिलता है क्या। कल रहेगी एक्सपायरी सेंसेक्स की। एक बार लेवल रिफ्रेश कर देते हैं फटाफट से। लेवल ये नीचे सपोर्ट क्रूड का ब्रेक हो गया, रेंज के बाहर निकल गया, तो एक्सपेक्ट करेंगे अब थोड़ा मोमेंटम हो आज। एक न्यूज़ थी। हुआ है थोड़ा मोमेंटम आया, एक बार सेटल होने देते हैं इंडियन मार्केट को भी। नेचुरल गैस भी फ्लैट ओपन हुआ है, इसको भी थोड़ा सेटल होने देते हैं एक बार, फिर देखते हैं। न्यूज़ दैट इज यूएस ने कल कहा था कि दे ऑपरेट इन स्ट्रेट ऑफ हॉर्मुज। उन्होंने सस्पेंड कर दिए हैं अपने ऑपरेशन स्ट्रेट ऑफ हॉर्मुज में, एंड ईरान को एक और मौका दिया है एज पर द ट्वीट ऑफ प्रेसिडेंट डोनाल्ड ट्रंप। तो बेरियस न्यूज़ है ओवरऑल क्रूड ऑयल नेचुरल गैस के लिए, बुलिश फॉर इक्विटी मार्केट। व्यू के चार्ट पे कुछ इशू आ रहा है क्या यहाँ पे। लगता है सर आता बड़ा गैप गैप डाउन ओपन होगा। फॉरेक्स में देखोगे न्यूज़ के बाद एक बड़ा सेल ऑफ आया था, रिकवर कर गया थोड़ा बहुत ही, इसलिए इतना बड़ा गैप डाउन हुआ नहीं। ये जो न्यूज़ थी उसकी वजह से। देखते हैं एक बार क्या सेटअप बन सकता है, अभी थोड़ा वेट करेंगे। That news is a bearish news that US President Donald Trump suspend uh, Hormuz operation, claims progress on Iran deal. President Donald Trump Tuesday, he is suspending the new US military operation in the Strait of Hormuz due to the progress in the negotiation with Iran on an agreement to end the war. The major news right now. Equity market is bullish because of that. यहाँ पर एक छोटा सा सपोर्ट है क्रूड ऑयल में। ये फॉरेक्स में याद रखना बड़ा गैप डाउन हुआ था, मैं पहले भी रिपीट कर रहा हूँ। फॉरेक्स में यहाँ तक कहीं गैप डाउन हुआ था, न्यूज़ की वजह से रिकवर कर गया, इसलिए ये थोड़ा सा गैप अप दिख रहा है। तो ये फॉरेक्स में ऑलरेडी सपोर्ट ले चुका है, मुझे लग रहा है शायद ये नीचे ना ये सपोर्ट फाइनल सपोर्ट है, क्योंकि रेंज ब्रेक करी है। ये ब्रेक होने के बहुत ज़्यादा हाई चांसेस लग रहे हैं, अभी हुआ नहीं है बिकॉज यहाँ पर जो प्राइस एक्शन बन रहा है वो कुछ ऐसा है कि एक बार पहली बार यहाँ पर आया था, एक हाई बना था, दूसरी बार एक लोअर हाई बना था, एक थर्ड टाइम फॉरेक्स में आ चुका है, अभी भी आएगा नीचे तो फिर एमसीएक्स में थर्ड टाइम आएगा कुछ ये इस तरह का प्राइस एक्शन लग रहा है बनता हुआ। अगर न्यूज़ नहीं आती है तो ब्रेक डाउन हुआ तो काफ़ी बड़ा फॉल हो सकता है बिलो 9410। एक बार बाइंग आई है हाई, दूसरी बार लोअर हाई, ये थर्ड टाइम फॉरेक्स में आया है, लोअर हाई बना चुका है, एमसीएक्स में अब आएगा थर्ड टाइम, तो लोअर हाई कंफर्म ही है बनना। देखते हैं, लास्ट टाइम ही बाई करेंगे, कम क्वांटिटी से ज़्यादा नहीं ले सकते अब यहाँ पर रिस्क। के लेवल भी एक बार रिफ्रेश कर देते हैं फटाफट से। बाकी ये क्रूड में कल का जो लेवल था ये भी काफ़ी बार टेस्ट हो चुका है। परसों भी टेस्ट हुआ था, कल भी इसी लेवल से थोड़ा बहुत सेलिंग आ गई थी रेंज के अंदर। ओके, क्रूड ऑयल देखो वापस नीचे की ओर आ रहा है। कैंडल का ध्यान रखना, ओपन इक्वल टू हाई है, नीचे सपोर्ट दो बार टेस्ट हो चुका है। मुझे लग रहा है शायद ब्रेक डाउन होने के वेरी हाई चांसेस हैं, या फिर फेक ब्रेक डाउन, डायरेक्टली बाई तो नहीं करेंगे। नीचे आता भी है तो वी विल सी दैट। क्रूड ऑयल अगर इस लेवल को होल्ड नहीं करता है ना 9420 के नीचे कहीं, तो फिर हम एक्सपेक्ट करेंगे 9000 के आसपास भी हम गिर जाएं, 9100 टू 9050 के अराउंड। न्यूज़ तो वैसे ही बेरिश है, देखना पड़ेगा कितना और इम्पैक्ट पड़ता है इस न्यूज़ का। ब्रेक नहीं हुआ है जब तक तो होल्ड है। या विक्स भी देखोगे इम्पैक्ट पड़ा है, गोल्ड और सिल्वर पे भी इम्पैक्ट देखने के लिए मिला। यूएस डॉलर भी थोड़ा गिरा हुआ है वापस 98 के नीचे, 97 तक चला गया, 97.700 नाउ। बिटकॉइन अबव। कल ब्रेकआउट जैसा एक देखने के लिए मिला था, 81,000 82,000 तक पहुंचना वाला था बट रह गया, तो अभी भी 80,000 के ऊपर है। बिटकॉइन देख लेते हैं। बिटकॉइन बिटकॉइन ही चेक कर रहा हूँ एक्चुअली मैं। मुझे लग रहा है शायद बिटकॉइन वापस एक हायर टाइम फ्रेम पे देख रहा हूँ, तो लाइक लुक्स लाइक 85 के आसपास जाने की प्रोबेबिलिटी लग रही है इसकी तो। जिस तरह से निकला है ये 80 के ऊपर वापस। एक बार थोड़ा सा स्मॉलर टाइम फ्रेम पे, 1 आवर टाइम फ्रेम पे देख लेते हैं बिटकॉइन को। कल तो थोड़ा सा बुलिश बना हुआ है बिकॉज ऑफ द न्यूज़। अब पता नहीं वो न्यूज़ कितने दिन चलेगी। हायर टाइम फ्रेम पे बिटकॉइन में बिल्कुल क्लियर लग रहा है प्राइस में कैन गो टुवर्ड्स 88,500 टू 91,900। इस रेंज तक जा सकता है वापस एक बार फिर से इन हायर टाइम फ्रेम। ओके, 1 आवर टाइम फ्रेम पे अगर चेक करोगे बिटकॉइन को अभी के लिए तो थोड़ा सा कंसोलिडेशन कर रहा है आई थिंक। मैंने बताया दैट इज ऑन डेली टाइम फ्रेम. इट माइट पॉसिबल इन फ्यू अपकमिंग डेज वी कैन गो टुवर्ड्स दैट if everything is fine. There is no this news in Bitcoin. ओके ये नेचुरल गैस का सॉरी ये लेवल ये कल के लेवल थे. रिफ्रेश कर देते हैं एक बार. तो बिटकॉइन में बाकी 1 आवर टाइम फ्रेम पे वो सपोर्ट नीचे था. वो मैंने आप लोगों को परसों ही बताया था 76,000 के आसपास. वो ऑलरेडी सपोर्ट लेके जा चुका है तो वहां तक वापस गिरेगा चांसेस कम है. बट या दैट इज अ सपोर्ट नाउ 76,000 से 75,300. 1 आवर टाइम फ्रेम पे वही सपोर्ट है. सो आई डोंट थिंक सो वहां तक वापस गिरने वाला है. मुझे लग रहा है वो डेली टाइम फ्रेम का रेजिस्टेंस है. वहां तक पहले जाने के ज़्यादा चांसेस है. बाकी अगर 1 आवर टाइम फ्रेम पे वापस प्राइस थोड़ा सा ऊपर आता है तो सेम 83,600 टू 84,000 विल बी रेजिस्टेंस इन 1 आवर टाइम फ्रेम. तो ये 1 आवर टाइम फ्रेम का सपोर्ट रेजिस्टेंस है. रेजिस्टेंस मैं बता रहा हूँ ये 1 आवर टाइम फ्रेम का और डे टाइम फ्रेम का स्ट्रॉन्ग ही है. 84,000 के आसपास के ऊपर जाएगा चांसेस थोड़े कम ही हैं. गोल्ड ने काफ़ी अच्छी रैली करी है लोअर एंड से आज अर्ली मॉर्निंग फॉरेक्स चार्ट में। हल्का सा गैप डाउन ओपन हुआ था, कंटिन्यूसली रैली में है, ऑलमोस्ट 2% अप। फॉरेक्स एमसीएक्स भी लगभग 1.5% अप है, 1,50,000 वापस आ गया। सिल्वर भी लगभग 4% की रैली है। एमसीएक्स में 3% की रैली अप्रॉक्सीमेटली। मॉर्निंग ओपनिंग से कंटिन्यूसली बाइंग में ही है दोनों गोल्ड और सिल्वर। कल 72 का हाई लो बनाया था, नाउ 75, नाउ अगेन नीड टू सी कितने दिन और कंटिन्यूएशन में जाता है ये। फॉरेक्स में निफ्टी ने भी सारा गेन निकाल दिया मॉर्निंग पे गैप अप के बाद। सडनली देखो कि क्रूड ऑयल में गैप अप ओपन है कैंडल विथ ओपन इक्वल टू लो। लुक एट द करंट कैंडल, इट इज ओपन इक्वल टू लो। लग रहा है गैप फिल करने जाने वाला है। वोडाफोन आइडिया में क्या हुआ है? ऑलमोस्ट 4% अप है इंट्राडे में, गैप अप देन मोमेंटम। कुमार मंगलम बिरला अपॉइंटेड नॉन एग्जीक्यूटिव चेयरमैन ऑफ वोडाफोन आइडिया। नॉन एग्जीक्यूटिव चेयरमैन ऑफ, अच्छा ये न्यूज़ है। वोडाफोन आइडिया अपॉइंट्स कुमार मंगलम बिरला एज अ नॉन एग्जीक्यूटिव चेयरमैन इफेक्टिव मई 2026। Vodafone Idea in talks to raise 35,000 crore. SBI may be lead lender. ऑलमोस्ट निफ्टी ने सारा ही गेन लूज कर दिया है। कल की क्लोजिंग पे वापस आ गया प्राइस। ऑलमोस्ट डायरेक्शनल सेलिंग। बैंक निफ्टी स्टिल होल्डिंग। गैप अप के बाद पहली 15 मिनट की कैंडल के नीचे मुझे लग रहा है अब शायद ब्रेकडाउन की कोशिश कर रहा है। बट निफ्टी तो ऑलमोस्ट सारा गेन लूज कर गया। गिरा कौन रहा है इसको पता नहीं। भी है सेंसेक्स की। सेंसेक्स भी देखोगे थोड़ा पॉजिटिव ही है अभी तो फिलहाल, बट मॉर्निंग पे गैप अप के बाद ये भी फॉल ही कर रहा है ऑलमोस्ट। थोड़ा सा नीचे आ जाए तो मुझे लग रहा है निफ्टी में वापस से बाइंग हो सकती है। कल का जो क्लोजिंग का एरिया है, मोस्ट प्रोबब्ली इट इज अ बाइंग एरिया। क्लोजिंग होते होते एक बाइंग एक्टिवेट हुई है वहां पे। जब तक अब प्राइस बैंक निफ्टी, सॉरी निफ्टी 50 फ्यूचर में 24,000 के नीचे प्रॉपरली सस्टेन नहीं करता, इट इज अ सपोर्ट 24,000 टू 24,070 is a support area right now. देखो क्रूड ऑयल में प्राइस थोड़ा बहुत नीचे आया है, कैंडल ओपन इक्वल टू हाई बनी है, ध्यान रखना कैंडल इज ओपन इक्वल टू हाई। देखना पड़ेगा कोई न्यूज़ तो नहीं है। सडन मोमेंटम, बोथ क्रूड एंड नेचुरल गैस। सपोर्ट है क्रूड में, देखते हैं। याद रखना प्राइस एक्शन यहाँ पर क्या है। एक बार बाइंग आ चुकी है, हाई बना था, दूसरे बार लोअर हाई बना था, थर्ड टाइम आ रहा है एमसीएक्स के अकॉर्डिंग यहाँ पर। तो वीक हो गया होगा ये तो लेवल थोड़ा सा। फॉरेक्स में ये ऑलरेडी गैप डाउन हुआ था एग्जैक्टली जहाँ पर हमारा ये सपोर्ट है। यहाँ पर ये कल हमारी क्लोजिंग के बाद यहाँ ओपन हुआ था, उसके बाद अभी ऊपर गया है। तो फॉरेक्स में तो ये इस लेवल पे फोर्थ टाइम आएगा, एमसीएक्स में थर्ड टाइम है इस लेवल पे, तो थोड़ा कम क्वांटिटी में बाइंग करेंगे। नेचुरल गैस को देखोगे तो बिल्कुल साइडवेज चल रहा है स्टिल। फर्स्ट 15 मिनट की कैंडल के अंदर ही है प्राइस। कुछ खास प्राइस एक्शन इसमें बन नहीं रहा अभी फिलहाल के लिए। 12 PM हो चुका है, आधा घंटा और है. 12:30 लंदन सेशन will open. We'll expect some more move. Natural gas तो almost कुछ move ही नहीं आ रहा है. Let's see. यूरोपियन मार्केट भी देखोगे तो ऑलमोस्ट न्यूट्रल टू पॉजिटिव ही है. डेक्स पॉजिटिव है, CAC 40 पॉजिटिव, FTSE 100 इज नेगेटिव ओनली.
That the consumer doesn't have to cough up that much more.
But it's
there's uncertainty still.
Shipping this stuff around, diesel, that costs a lot of money right now. But we still don't know what's going to happen on the agricultural side, what's going to happen with food prices. That appears to be something that is still in train, but difficult to understand at this point. Coming up, Philips delivers a strong beat, boosting confidence in the Dutch firm and whether or not it can withstand these shocks in the Middle East. The CEO is next. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football. And you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Wednesday morning, good morning. 30 minutes to go until the start of trading here in Europe this morning. And futures are pointing to a very positive picture, particularly here in Europe. As you can see, we're up by circa 1%. There's a bit of a tailwind coming out of the States. There's also a set of quite good earnings numbers coming through this morning. It's going to be interesting to see how Ahold trades, how Infineon trades. It looks like it's going to be strong. We've got Philips on deck. We'll talk to them in just a moment. So the corporate news is also adding to the upside kind of momentum trade story that we're certainly seeing in equities.
Yeah, so the corporate story is certainly set to influence the trading day for equities ahead. In terms of the bond market story, then, we do see yields coming down, actually, in contrast to yesterday. So yesterday we saw yields going higher on concern about what was happening in it was a global picture, wasn't it? US Treasuries, we've seen the 30-year yield go above 5%. So we saw the rest of the markets sort of reflecting that Monday into Tuesday. Well, later Tuesday and now we see a move away from that, and yields are coming down, reflecting that weaker oil price, perhaps. Still, so we're down by 1.8% on Brent at 107. Let's move on to check what's going on in FX markets, because this could add some volatility to things as well. The yen has been moving away from that 160 mark, so we've got some strength coming through in the Japanese yen. And April the 30th, we're seeing basically the yen building on the gains that it made on April the 30th, when people familiar told Bloomberg that there was some intervention from the Ministry of Finance taking place. And so people are asking questions today, again, Tom, as to whether there is further intervention taking place.
Yeah,
that's certainly the question to ask.
Quite a start move there in the end. We haven't had it confirmed yet, but certainly there is speculation out there, isn't there? Let's get back to the earnings story. Philips reporting first quarter earnings that beat expectations after strong orders, giving confidence the Dutch medical technology firm can withstand the burden from geopolitical turmoil and rising costs. Joining us now is the CEO of Philips, Roy Jacobs. Roy, thank you for your time. What is the Middle East impact on the business? Where is it being felt most acutely? You beat on the earnings, but clearly there will be an impact, presumably, from the US-Iran war. Where are you seeing that?
So you saw indeed that we had, as Philips, a strong start of the year. 6% order growth, 4% sales growth, and we had margin expansion by 40 bips, despite higher tariffs and additional cost inflation. And also we do see that cost inflation will be an impact of the Middle East conflict. We are expecting energy prices, we're expecting component prices to go up. We're taking additional productivity measures to offset that, and we have, of course, built a very strong muscle and cost discipline also in the recent period. So on the back of that, we also reiterated our full-year outlook, where we continue path to driving profitable growth with solid cash generation, and as a result, we also even doubled the net income in the first quarter.
Can you just break down for us, Roy, where across the supply chain you are seeing the most acute rise in prices? Is it helium? Is it other input costs? Where are the strains most acute right now?
Yeah, so if you look on our supply chain, you call out one very important part, which is helium. Helium is, of course, for medical imaging crucial. 1/3 of global helium is used by medical imaging resources. We have come out with an innovation, the helium-free, that actually does not use significant amount of helium to do the same diagnostics. That is going to be the new industry standard. And actually we need that because 20% of helium capacity has been taken out by the conflict in the Middle East. So we need to ensure resilience in the supply chain for our customers so that they can continue to scan their patients. So that's one where we are really dialing up. We see also increased momentum and demand for our solutions. So that's a way to counter. On the other hand, indeed, we see energy, electricity, we see plastics, we see some components going up in price or expected to go up in price. And actually, we are proactively dialing up our measures to counter that. One example is, with the help of AI, we are now doing 30% of all company coding with the help of agents and AI. That's a big efficiency driver that actually helps to offset the cost rise. We also had 126 million of productivity savings already in the first quarter. In the new 3-year plan for Philips, we laid out a 1.5 billion productivity plan. We are very well on track with the first start in the Q1, but we're also dialing up further mitigation in the rest of the year. And that actually allowed us to then also say within that, we can, in due course of the year, mitigate the increases and remain firm on our commitment to the year, also in margin perspective.
Roy, good morning. It's Guy. I'm hearing you talk about efficiencies. I'm hearing you talk about self-help and measures you can take to deal with some of the cost increases that you are seeing. Does that imply that actually you don't have much pricing power right now? How much of the cost increases that you're taking can you pass on to your customers?
Yeah, from a price perspective, and we had that already also with the earlier challenges, even after COVID, we have selective pricing actions we take. On the consumer side, we need, of course, to also make sure that we remain competitive. So we are offsetting first and foremost with own cost actions. Then where need be, we also, of course, put on some selective pricing. In the healthcare side, it's more difficult because you have longer-term contracts, you have committed conditions that you have agreed upon, and also the pull-through is longer because you first need to kind of get your orders in with the new prices and then sales comes in later. So you see that there's a bit of difference where you can do selective pricing. Main remediation that we count on is indeed self-help. Is a lot of cost actions that we're taking, supply efficiencies that we are driving. How can we run Philips in a leaner way? We have been doing that by generating $2.5 billion of productivity savings over the last 3 years, and we want to do another $1.5 billion in the coming 3 years.
Okay. Can I ask you about how much you're paying for semiconductors and chips? How much demand? How much have prices gone up? What is the story there in terms of your supply chain?
So, of course, in our demand, we see that with our innovations that becoming more and more also AI-powered and AI-driven, of course, we also use chips. Now, we expect price increases. That actually is baked into the guidance that we have. But I think what's really exciting is that if you look to the quarter, we doubled the amount of regulatory approvals on new innovations that we have. One of those being, for example, a smart heart innovation, AI-powered, which actually reduces the clicks from 14 to 1, so it becomes much easier to do an examination. It goes faster for the patient, so better experience. So we see indeed that we are building an AI in every single product that we have. It has an impact on healthcare, but also for the consumer practice. And therefore, we do need chips. So we make sure that kind of we get the right access. And actually, we have built that into the plan as well.
Roy, good morning. I want to ask you about AI. You've already mentioned how you've been using it internally, but there's a lot of focus on how AI can deliver benefits broadly for healthcare in many different areas. And I wonder how you make sure that some of those benefits of AI accrue to Philips. Is it about control of data? Is it about control of workflows? How do you make sure that you get those benefits and not software providers, hyperscalers and others in the supply chain?
Yeah, so when you look at kind of the strategy that we laid out, we said kind of our innovations are platform-based. The platform is a combination of hardware, software, and AI. And actually that combination combined delivers the value. I give you, again, go back to the example of the helium-free MRI. You need a hardware solution to come up with a helium-free magnet. Then you need a software solution to work on the imaging workflow. AI helps us to generate the image much faster, but also to simplify the workflow. We sell that as one package to our customers so that they get the benefit, both on kind of how they manage more patients through the workflow and get better outcomes. That's how we can capture the value. In monitoring, we are the #1 leader in the world. We have the biggest data set, and many customers want to work with us on the data together to provide better alarm management, better surveillance management. So very specific applications that are deeply clinically embedded, and therefore actually combined with the work that we do with hospitals really can actually support what we do with them. We had an example of the 10-year technology partnership that we closed with WellSpan. Those are examples of where you see that actually together with customers we are embarking on a roadmap where the latest technology and especially AI helps them to deal with their staff shortages, to deal with more patient volumes. And actually we are getting kind of support from that in terms of the deal that we get, but also they get the latest technology over a longer period so that they get access to the latest and greatest all the time.
Roy, always great to catch you up. Always great to get your insight. Thank you very much indeed for sharing some of your time with us this morning. Roy Jacobs, the CEO of Philips. Let's turn to the semiconductor sector. We're just talking about it a little bit there. Infineon raising its full-year guidance this morning. Its AI power chip business continues to boom. There are also some signs of a more positive picture emerging into the auto sector. A few minutes ago, I caught up with the CFO, Sven Schneider, and asked him about pricing for AI power chips and how much longer demand will outpace supply.
If you look at the current fiscal year, there is very clearly the supply is limiting the revenue. And that's one of the reasons why, and it's a great timing, because you may be aware that we will be opening our next module in July in Dresden. This is exactly the additional capacity we need to bring more AI and also related capacity to the customers. So this will eventually over time fade out. So currently we are in an allocation phase, very clearly, but the more capacity we build, the more capacity the industry builds, the better the situation will be. Now, to your pricing question, indeed, as we said last time already in the earnings call, on the back of this super strong demand and on the supply-demand situation, there is a possibility, and we have used them and advised our customers that we will raise prices in AI and adjacent areas from the 1st of April onwards. So there is a positive trend which we believe will continue at least during this fiscal year.
Do you see any issues currently coming out of the Gulf relating to things like helium supply? Are you in any way being impacted by what is happening here? I'm hearing a lot of chat in the industry about concerns around this, but I'm wondering if they're real yet.
Yeah, so there are, I think, very, very different perspectives on that, depending on how an industry is affected. For us, yes, we need helium. Yes, we need the transportation of our products also through this area. But as of now, we do not see any material supply issues. And why is that the case? It's because of the multi-sourcing strategy we have. Helium and other goods we need in order to produce our chips are sourced not only from that region. What we clearly see is price increases for helium, price increases for gold, for copper, for other commodities, for freight and logistic costs, but that is baked into our revised guidance.
The CFO of Infineon, Sven Schneider, speaking to me a little earlier this morning. The stock was up circa 6% yesterday. I'm seeing some calls higher today, but some calls lower as well. Maybe it's better to travel than arrive when it comes to Infineon this morning.
A lot of mentions of helium on the show this morning. I don't think we've mentioned helium quite so many times as we have this morning, but that's the times we live in. 7:42 here in London. Coming up on the programme, the European Union calls for a swift return to the agreed terms of the trade deal with the United States. We'll speak exclusively. We'll be hearing from the US ambassador to the EU. For the latest details next, this is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. And this is Bloomberg.
Welcome back to the opening trade. Now, the European Union wants the main parts of a U.S. trade deal adopted by July, pushing Washington to respect its previous commitments. This after President Trump said he would slap 25% tariffs on EU autos, accusing the bloc of failing to honour its prior commitments. For more, we're joined by Oliver Crook, our Chief Europe correspondent for Bloomberg TV in Brussels, with a guest. Ollie, good morning.
Yeah, absolutely, Anna. So a lot of confusion at the moment about where the status of that EU-US trade deal is. Everyone says they're sort of adhering to it. The real question is whether or not we're going to get more tariffs from the United States. And we're joined now by somebody who can shed some light on that very question, Andrew Puzder, who is the U.S. ambassador to the European Union, who's been working on this trade deal for a long period of time.
Yeah, you got that right.
And so, of course, a part of the frustration here from the U.S. side is that it's taking so long to actually implement this deal on the European side. Is that what this auto threat is about? Is it just about that? Is it about retaliation to the Germans for some of the comments we've heard from Chancellor Merz? What is this about?
If you look at the president's Truth Social post, where he announced the increase of the tariff on automobiles, it specifically says the problem is the delay. There's been now, for nine months, the European automakers have benefited from the trade deal. They got the U.S. tariff on trades reduced to 15%. The United States has gotten no tariff reductions on anything, over this 9-month period. We've gotten absolutely no benefits. The process was initially moving pretty quickly. The Commission approved the deal. The Council approved the deal. Looked like we were going to go forward. And then the Parliament started to drag its feet and canceled hearings, and it dragged on. And finally, when they come up with a vote, they want to renegotiate the deal. They've added 4 or 5 points that changed the deal. So I think that what the president was saying, look, this has gone on long enough. We're done debating. We are negotiating. We cut a deal. President von der Leyen and I cut a deal in July. Our representatives put it to paper in August. We cut the tariffs retroactive to August 1 on automobiles. Mm-hmm. You've done nothing for 9 months.
So establish for us what the timeline is now for these conversations. We hear from the European Union they would like to get this accelerated, get it through by July. Is that fast enough for the United States? Would that be sufficient action to dodge those 25% tariffs?
I don't know that July would be fast. That's a year. And that's a year since von der Leyen and Trump met and agreed to this. That's a long time. I think the president's saying he's pushing for something more rapid, something quicker. Really, all Parliament has to do is approve the deal. And then there's no need for trilogues because Council's approved it, the Commission's approved it. All the Parliament has to do is say, yes, we're approving the deal, and we're there. So I don't know why that takes till July.
Well, as you know, those conversations will be happening this evening here in Brussels, the trilogue, that reconciliation and discussions about that trade deal. What is the message to them if they do not get this over the line this week or make significant progress? When can we anticipate those tariffs being imposed by the United States? Is the executive order ready to go at this stage?
President Trump, in his Truth Social post, said within a week, I think. He said, or next week. So on autos, unless we see some substantial progress, I think you probably should expect those relatively soon. What he does with other tariffs on, and this, by the way, this was a very limited increase. In other words, it just was aimed at autos. He doesn't even mention auto parts in this. So it was a very specific increase. I think it was meant to say to the European Union, you're not moving fast enough. You're trying to change the deal. That's not going to work. So you got time to fix it. Time is now.
Yeah.
And it's not July. It's not next year. Now, if there was a strong message to the United States that we're going to approve this deal, we're going to approve it as we agreed to, and not change it, and we're going to do that quickly, then you probably have a chance that the president would take another look at it. I mean, he prefers deals to trade wars.
And I think that's the message we've heard from everybody in Brussels. That being said, they did say that everything is on the table if things do not go in a way that they can that they're happy with. Is the United States willing to walk away from the trade deal if it comes to that?
If the European Union doesn't abide by the deal that was reached. If a deal isn't a deal, then the United States, I think, would walk away from it.
And then thinking about what is inside the deal, because of course there are very specifics, but then there are other things that are more abstract in terms of the non-tariff barriers, right? This is something that obviously these can be defined in a great many ways.
That's the tough part, which is the interesting thing is the tariffs aren't supposed to be the tough part.
Right.
The tough part is the non-tariff trade barriers. But geez, we're having a tough time even with the simple part of the agreement.
But do you see those as sort of fully segregated, i.e. the tariff is part of the one deal and then the discussions will be separate on the non-tariff barriers, or does another conversation reemerge where you get another threat of 25% auto tariffs because of some non-tariff barriers, or is that deal, you think, fully segregated from that conversation?
So we've lowered our tariffs. Now European needs to lower its tariffs, and during that process we need to be discussing these non-tariff trade barriers, because if you lower your tariffs but you keep in place barriers to trade that are just as bad as having the tariffs in place, then you really don't have a deal. So we're going to need to talk. They've been identified in the document. We're going to need to discuss them. We've already made some progress, and we made progress on the Corporate Sustainability Due Diligence Directive that was cut back. I was hoping we'd see progress on the deforestation regulation, but I'm not. They issued new guidelines. I haven't had a chance to go through them in detail, but I don't think we're there yet on deforestation. So we're going to need to keep negotiating, but it needs to be done in the context that the tariffs are down.
And one of the main sticking points for the Europeans, something we know they're still quite unhappy about, is the steel and aluminum tariff, the scope of it, the size of it, 50%, and the scope of it, all the things that it applies to. Is there scope for sort of a reduction for that for the United States? What is the U.S. position? Is there any scope to change that in these negotiations?
So on steel and aluminum generally, both the United States and the EU have a 50% tariff because we're both trying to fight overcapacity from China. The United States also has a tariff on derivative steel products because obviously, again, the same. You don't want to let the Chinese dump this subsidized, inexpensive steel in the market through putting it in products and then selling the products to the U.S. In the framework trade agreement that President von der Leyen and President Trump agreed to, it says that we're going to talk about ring fencing iron, steel, and aluminum. And so I think we need to proceed with that discussion. But to proceed with that discussion, we need to get these tariffs down.
And a final question, I'm sure you're getting some questions about this too. We had the other sort of big news over the weekend as far as Europe is concerned, as the President of the United States saying they're going to pull 5,000 troops from Germany in the next 6 to 12 months. That number may increase. What message do the Europeans interpret from that action?
Well, we have about 100,000 troops in Europe. I think we have about 40,000 of them, 39,000 in Germany. So there's still going to be a significant military presence. But I think the message is, when the United States, when the United States determines that a particular action is in its best interest, the best interest of its allies, if you expect support from us, we expect support from you. And if it means using the military bases that we're paying for in your country to defend you, if it means flying over your country that we have our bases there to defend, then you should back us up. And if you don't back us up and you make comments that are derogatory of the position we're taking, then maybe you're not as good an ally as we thought.
Well, Andrew Posner, thank you so much for your time today. The United States ambassador to the European Union, focusing on that trade deal, trying to accelerate that process in July may not be good enough.
Ollie, thank you very much indeed. Oliver Crook joining us in Brussels. And our US colleagues a little later on will be speaking to the USTR, the US Trade Representative. He, of course, is Jameson Greer. That will be happening from Paris as he attends the G7 trade meeting. That exclusive conversation, 1:30 p.m. London time.
Quick chat about where we go next then. Market open is due shortly and futures are pointing higher. We've had so many earnings out, so we'll be looking for which of the companies that do well out of that. I mean, Zalando is one that I see could be on the move higher. I see various calls around Infineon, actually. I mean, so that one certainly going to be one to watch.
Absolutely, our hold is going to be out as well. You've got the tech story to factor in, but we're up circa 1% after a decent session yesterday.
There's some decent catalysts alive. The yields are lower, oil prices are lower, the dollar is a little softer as well. We've been talking about the Japanese yen and potential intervention there. Futures pointing to a very solid session after gains of, 0.7% yesterday. Futures currently pointing higher by a full 1% then in Europe. Coming up, it is the opening trade. This is Bloomberg.
a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gurray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. How are you doing? Wednesday morning. There's a lot going on. There's a lot to factor into these markets this morning. This is the legacy out of yesterday. This is the US session. This is where Europe went out. There's a little bit of upside still to price in. But after hours, you get AMD. You get all kinds of other factors that could potentially lift the European stock story this morning. Oil prices are down. The president is making positive comments, the US president, about the situation vis-a-vis Iran. That seems to be helping out the mood as well. You've got this kind of melt-up, let's call it that, in the tech story, continuing to drive things. Do you have fear of missing out this morning? I think Tom's about to tell you what you're seeing in the future story.
Well, the handoff has been very strong, to your point, Guy. The Kospi is still king over in Asia. You've got the Samsung at $1 trillion valuation. You saw the rally in the semiconductor chip stocks yesterday, stateside. Fresh record highs for the S&P 500, fresh record highs for the NASDAQ 100. So all of that is a handoff for Europe. And currently, futures pointing to a very strong session, pointing higher by 1% after 0.7% gain yesterday. FTSE 100 futures looking to add 118 points, so a decent session as well here in the UK. DAX futures looking to add 0.9%. Individual stocks as well in focus, Anna.
Yep, absolutely. Let's focus in on some of those. So Novo Nordisk, strong numbers coming through there in terms of the estimates. So the numbers certainly beating estimates. They're talking about the Wegovy pill, which of course is the focus for this earnings season. They're saying success of that will limit the sales decline that they're going to see from other parts of the business. Infineon also in focus. There again, we got numbers that came in above expectations. The spending boom on AI infrastructure, of course, has been something that has boosted that company. We'll also keep an eye on the retail space. In the UK, we've had an update out of Next talking about pricing, which is interesting. And Zalando also in focus in the retailers. The first quarter earnings reassuring on the e-commerce outlook, according to some analysts this morning, Guy.
OK, here we go. Time for the Wednesday session. We're expecting a positive performance out of Europe at the index level. Circa 1% is the overall number. You're looking for a more stable picture emerging for the FTSE after it returned yesterday. So let's see what we get here and how the individual equity story bottom up is going to get priced into the indexes as well, because the legacy out of Asia and the United States is a fairly positive one. The Stock 600 is up by 0.4%. The FTSE's up by 0.5%. Both are kind of stable at the moment. I'm not sure sure where the action is going to come from yet. The FTSE picks up a little bit. The CAC is expected, 0.9% to the upside. Might take a while to get the DAX going this morning. The IBEX is up by circa 1% as well. So the kind of positive performance we were anticipating, that circa 1%, largely being delivered upon at the moment. But let's see how Germany trades. There's a lot of interesting stocks in that market this morning. Tom.
Just one sector in negative territory so far, and that is energy on the lower oil price in the session today. So energy down 0.5%. Every other sector across Europe currently in positive territory. The gains being led by basic resources. You've seen strength in pricing for gold and copper and silver. And basic resources is rallying on the back of that, up 2.3%. Travel and leisure, interestingly, gaining 1.7% after being one of the laggards across your sectors yesterday. Lufthansa coming out with a smaller loss than had been expected. Banks also doing well as well, gaining 1.6%. Again, across your sectors, there is strength. Tech gaining 0.9%. That was the leading sector for the upside for Europe yesterday, and it's putting in a positive performance as expected once again, Anna.
Yeah, so most sectors then in positive territory, as you say, only energy to the downside. Some real divergence, though, between the various players, and I'll just focus on one that's going lower this morning, and that is Ahold Delhaize. I wonder if the management story is anything to do with that, but that was an interesting conversation we had with the outgoing CEO seems to stretch, doesn't it? He's not going for a year, but still, there's a succession plan in place, at least there now. Novo Nordisk up by 5.8% on the back of the numbers there that on various metrics seem to beat analysts' expectations, much revised of late. And I'm interested in Philips and where that one opens. We spoke to the CEO earlier. It's halted, it seems, so a lot of interest, at least, in that particular stock. Wait to see which direction it lunges in.
Infineon's up 1%, 2%, no, 2%. My early call was 5% up. It was up 6% yesterday. Then I saw a call for it to be down 5%. So I think the market was struggling early to price that one, but it looks like we're getting a positive performance coming through. But it's interesting, Novo is very strong on the back of what it's delivered this morning. But what is interesting as well is that you've got the metals moving higher. So you've got a series of commodity stocks also on the upside. But oil is definitely down. One day to the next, how do you get a clear read on what is happening there?
Absolutely, with oil prices down 1.3% today. That's today's move. 108.44 is where we trade on Brent. Joining us now to talk about the markets in more breadth, Helen Jewell, International CIO for Fundamental Equities at BlackRock. Helen, very nice to have you with us. We've got lots of earnings coming through this morning, so no doubt the earnings conversations will factor into what we're thinking about this morning. We started the programme, Helen, the last hour, talking about tech and the strength that we're seeing in tech stocks in the US yesterday. Some of them up by more than 11%, things like Intel. AMD numbers after hours looking strong. Samsung now a $1 trillion company. There's a big tech theme happening here. Is the narrowness of these gains, is that a danger or is that an opportunity? How do you think about that?
Yeah, good morning, Anna. And you're absolutely right. I mean, the tech names have been fantastic, and they are what is driving the market and resilience in the market at the moment. And it's not just those names that you said. We also see some in Asia as well. Hynix, incredible, TSMC, so some really incredible names globally in this space. Now, when it comes to the narrowness, well, on the other side of that, it's not just about AI. It is also about energy. And when it's energy, it's not just about the oil and the oil price, even though, of course, that has been very strong over this quarter. It also is the breadth of those names. You've got power demand, you've got cooling infrastructure. There's a lot going on there. And I would also say, when we think about diversification, it's probably the one thing that Europe has got going for it at the moment, because actually you are seeing more breadth in terms of what Europe is able to deliver. The earnings growth has not been as high as we've seen in Asia and in the US, but you are seeing more breadth in Europe. So is it a worry? No. Is it something we need to keep an eye on? Absolutely. Is there ways that you can diversify? Yes, that's where Europe is providing that little bit of diversification.
OK, so in terms of that diversification, you go to a wider suite of companies then in Europe that are set to benefit from the AI trend? Is that still the message?
Well, it is and it isn't. I mean, there are more companies, there are a breadth of companies, but there are more companies in the US and Asia that benefit from AI. That's just a fact. Within Europe, it tends to be more in terms of the energy infrastructure space that we see it. But it's actually more of a breadth in terms of what is delivering some of those returns. Now, they are smaller returns, Anna, so we are talking about a breadth with a smaller overall number. But that is important when we're looking at diversification. And I think that is why what we're seeing is we're still seeing actually flows hold up reasonably well in Europe, even though actually the returns are perhaps a little bit stronger in the US and Asia. Flows are still holding up well in Europe. So it isn't just about the AI theme in Europe. We are seeing banks' names still continue to do OK. In the consumer space as well, you mentioned it this morning. Yes, there's diversification, but it isn't a case that there is one set of numbers and names that are doing very well and another that are not. You are seeing a little bit more diversification within Europe.
It sounds like you're telling me that diversification equals underperformance.
No, I'm not absolutely not saying that. I mean, diversification gives you risk-adjusted returns, and that is something that you absolutely need. If you are going 100% all in for where you think the high returns are going to be, maybe that's not quite within Europe this quarter, maybe not for the next few. But I don't think, I mean, it goes back to Anna's point as well, if you put everything into where AI and where the US is, you're not going to have a well-diversified portfolio. So
why do I want a well-diversified portfolio?
Why do you want a well-diversified portfolio?
No, in all seriousness.
Because
I'm getting massive outperformance if the chip story carries on, if the tech story carries on. Why do I want to be diversified?
Maybe you don't. If you want to avoid drawdowns of significant basis points on any given day, that's where the risk is. And again, you are seeing that. Let's not forget, you've seen moves yesterday, last week. You're seeing moves, quite considerable moves. I mean, the three of you see that day in, day out. Of triple-digit basis point moves in markets, in stocks, therefore in any portfolio that is focused in that space. So if you are willing to take huge undiversified bets, then absolutely you go for it, Guy. But that's not how we build our portfolios.
See, it turns out Guy's all in on the AI trade.
There are people that are, and they're chasing this narrative, and the returns are epic. But most portfolios aren't structured that way. You can't have that level of overweight.
Well, another key question we've been asking, and kind of on repeat, but I think it's worth putting to you as well, Helen. And it's interesting. The Man Group CEO was talking to this to Bloomberg as well, and saying that for her, head of this hedge fund, this was a key conversation as well, which is the gap between the equity market performance, record highs, and the reality of higher prices and fewer products as a result of the closure of the Strait of Hormuz, and whether or not that gap closes and how to think about that.
Yeah.
How much of a concern is that, and do we need to think about future-proofing portfolios for the second half of this year if that all comes to bear?
Yeah, I mean, the key thing there is that earnings word again. So the earnings have been incredibly resilient over this quarter. You're actually seeing earnings growth in every single region, and that includes Europe up 5%. So far, obviously, earnings season is still ongoing. Now, of course, a lot of that mathematically is driven from where so much of that earnings has come from. It's come from the materials, it's come from the energy, it's come from the AI-exposed names. And they are the bigger market caps within the index. So you have that multiplier effect. On the other side of things, travel and leisure weaker, but travel and leisure is a third of the size in the stock 600 than the energy stocks. But again, this is why diversification in portfolios is important, because it is something that we need to be thinking about. Actually, in some ways, it's the other way around. The Strait of Hormuz opens, that energy pullback and the energy price that we've seen go up, that will be a pullback in terms of some of the earnings numbers. The earnings numbers this quarter have a lot been supported by the strength of those earnings numbers, those energy numbers. But it is the AI theme as well. The AI theme is so dominant not just in the AI theme, but again in these energy infrastructure plays, that is the theme that actually is the longer structural theme that is driving markets at the moment. So, yes, there'll be some volatility around the edges, but we still do need to be kind of concerned or thinking about what we were talking about in the first month of this year. And the first month of this year was about all of the CapEx spend and how much of the CapEx spend will actually come through to revenue numbers and maybe any lumpiness that we might see in that. And that's what we're trying to protect in with portfolios. So you've got the energy piece, and you've got the AI piece, one more cyclical, one very structural at the moment, but not a straight-line structural spend.
And it was interesting to hear from Roy Jacobs, the CEO of Philips, saying he is seeing some efficiencies as a result of AI as well. Does that mean that we can just look through rate increases then? AI, energy, more important than anything that the central banks do on higher rates?
At the moment, it does seem that way. The way that actually I've been looking recently at perceptions of where we might go in terms of rate hikes, and it's still looking that we'll be flat with rates. We're taking out rate cuts, is the impact on the currencies. So actually, if you look at dollar and dollar strength, the yen as well has actually been quite an interesting play. that in some ways is what we're seeing more coming through in terms of the markets and conversations with companies than we are necessarily in terms of the consumer. I am concerned about the consumer for the second half, but actually in terms of what we're seeing coming through with numbers, there is actually a real resilience in the consumers that perhaps we should be baking in a little bit more than we are at the moment. But it's the impact of rates on currencies, which I think is particularly interesting at the moment.
What do you? The earnings season is we're in full swing. What do you are going to get the skinny on lots of earnings calls, and you're going to get them all amalgamated. What is there a message already that we can take away? Because this, as you say, the E looks pretty good this time round.
Yeah.
But going forward, what are you looking at? What are you picking up on? What are your models telling you about what actually companies are saying at the moment?
Yeah, there's very few companies that have talked about the implications of the Middle East on numbers. Luxury we saw a few weeks ago, but since then there have been fewer. What we are seeing in a little way is a little bit of stabilisation in terms of the multiple. The multiple for Europe is hovering around 14.5. That's a decent multiple, slightly lower than it has been. It's certainly not rating upwards. So I think it's in the re-rating of the multiple that you're probably seeing some of this uncertainty coming through at the moment. It's not going up. It's maybe come down just a smidge. But actually, we're not actually hearing as much from outside of those luxury goods companies that we might have done, and the airlines as well, which I know is something that you've been super focused on recently.
Yeah, you had Lufthansa out this morning. Helen, nice to see you. Thank you very much.
Thank you, Guy.
Thank you. We always appreciate it. Helen Jewell, International CIO, Fundamental Equities, joining us from BlackRock. Let's take a look at what the core 6 looks like this morning. This is the picture that we find ourselves with. Generally a very positive one, as you can see across Europe. Tech in particular on the front foot. ASML is up by 2.5%. Schneider's having a fairly good session as well. But take a look at the left-hand side of your screen. Novo, absolutely smashing it this morning. That stock strongly to the upside. Let's get some more details as to what we are watching. I'm going to start with the airlines, actually. Chloe, over to you.
Good morning, Guy. Indeed, Lufthansa is doing quite well today after posting a smaller than expected loss. And so it was because long-haul flights and good demand for long-haul flights actually managed to offset some of the impact from higher fuel costs and labour actions as well. And given that the sentiment going into those earnings was quite down on airlines in general, those results were seen as quite encouraging, quite reassuring. And so we're up almost 3% for Lufthansa this morning. It's also a good story for BMW, which also reported earnings that were actually a little bit better than expected. The margin was hit by intense competition in China and by tariffs, but orders were actually quite good, and orders for electric vehicles in particular were quite good in Europe, and so that was seen as quite reassuring. And so we are up very strongly this morning, actually about 6% for BMW. It's also good news for Pandora, with earnings and guidance coming ahead of estimates. This is also great for a company that had been hit earlier in the year by those really high silver prices. And so we are up about 10% on the back of those strong earnings. Zalando is also in the green. There's a lot. Oh no, actually, well, it was in the green at the start. It had actually pretty good earnings and no impact from the Middle East. But this seems to now have been reversed a little bit, and we're down about 3% for Zalando. And finally, Hold Delays is also down. It's also in the red this morning after some management shake-up. So the current CEO will be replaced by the current CEO of Kingfisher in 2027, and maybe this is casting some doubt around the strategic direction of the company, and therefore we are seeing a little bit of weakness, and we're down about 3.6% this morning.
OK, Chloe O'Malley, thank you very much indeed on some of the stocks on the move. There's been a bit of choppiness around some of them. Zalando is one, to your point, Chloe, and Infineon is currently now down 2%, having been higher early in the session. We are going to be speaking, by the way, and we'll stay on the earnings story, because we're speaking to Norway's Kongsberg, seeing order intake more than double in the first quarter. We're going to discuss what is driving that performance with the company's CEO. The stock is currently up around 10% in terms of Kongsberg, at 10.2% right now. We're going to speak to Eric Lee next. This is Bloomberg.
is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars.
Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up to the minute geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
Welcome back to the opening trade. Let's kick this part of the programme off with some data out of Spain. We're tracking the services PMI story this morning, and the Spanish April services PMI has come in really weak. It's much weaker than March, is the story here. So 47.9, so that is fully into contraction territory against decent growth in the month of March, which was 53.3. That means that the composite, so some suggestion of whether we're in growth or contraction territory for the Spanish economy, the composite is at 48.7, which is in contraction territory, which is really interesting. And actually tourist visitor numbers had held up really well. In fact, were really good in March. I wonder if that's changed in the month of April.
Sounds like what we need is a rate hike.
Grist for the mill. To your point, grist for the mill for those who say that the ECB should not be hiking rates given softer growth, even if inflation is higher. Let's get back to the earnings story with a focus on defence. You're seeing a very strong increase in terms of the share price for Kongsberg right now, currently up more than 9% on the back of some earnings strength from that company. The Norwegian defence tech firm reporting first quarter revenue up 26% on a year ago, following what it calls record high demand. Joining us now is Eric Lee, CEO of Kongsberg. Eric, thank you for your time. What is the key driver of demand right now, and does that continue in the quarters ahead?
Yeah, thank you, and good to meet you. I would say that in the geopolitical situation we see today, the demand for our main products, like strike missile capacities and also nascent air defense systems, I would also highlight counter-UAS systems, are very much in demand these days and driving the growth we see currently.
On the air defense systems piece, Eric, there's a view from many in the industry that your system is best placed to make up for any lack in the Patriot system, that it's on many measures equitable to the Patriot system. Where is the demand for the air defense system coming from, and are you able to meet it?
You know, I think based on what we have seen in Ukraine and currently seeing in Ukraine, and also in addition to the Middle East, it shows that air defense is a fundamental defense system in the world. And so we see an increased demand for air defense systems in Europe, in Middle East, but I would also say that on a larger scale internationally as well. So the demand for air defense system is there. And if you look at NASAMS, NASAMS is the most sold air defense system in the world in its category. And we are including more counter towards threats like counter also drones.
Obviously, everybody wants the product. Everybody wants to get their hands on it. The threat is enormous. We've got 2 hot wars that are running currently right now. Eric, can you build this stuff fast enough? Where are the bottlenecks? Can you deliver? What execution challenges are you facing right now?
Obviously, I think we on our end, when it comes to producing NASAMS equipment, we have enough capacity. We built up this as we see the demand is growing. At the same time, it's mostly focused on the supply chain to secure that the supply chain is able to ramp up in the pace we need. And that's where we work every day to secure that that ramp up is progressing. And I would say that so far we have been able to do this. And obviously we will continue to do so.
Are there any key bottlenecks within that supply chain? Smaller suppliers that provide key pieces of kit, are they able to deliver? On the civil side of the aerospace business, we have seen years of challenges around the supply chain. Is it the same in the defence space right now?
It's both yes and no. I would say that we're facing challenges in some areas. At the same time, we are building up a more resilient supply chain, meaning that we have multiple sources to the different components. So that has been one way for us to address that challenge. The other mechanism we are using is to buy in stocks of what we call long lead items, so that we are able to deliver even though if we have a hold up in the supply chain. And that is a good method for us to secure that we are able to deliver on our promises in the order backlog.
Eric, good morning to you. We've got 2 active conflict zones, of course, that we reference almost daily, it seems. I wonder how you're prioritising delivery. On top of those active conflict zones, we have a structural shift towards Europe spending more on its own defence. How do you prioritise?
No, we are in constant discussion with our customers and potential new customers. So we secure that we are able to have enough visibility into their procurement plans so that we can ramp up and build capacity so that we are able to deliver when they need the different type of systems. So I think the visibility we get from the customers give us confidence that we can scale up, invest in our production capacity, both in Norway, but also in US, in Europe, and for instance, in Australia, as we do currently.
You said this morning, and I know Tom was asking you about it a moment ago, you've seen increased demand for your air defence systems. Can you give us any size and scope on that, Eric? To what extent are we seeing, what fold increase in demand or interest are you getting for those products?
Currently, with the NASAMS system, we have sold that to 15 countries, and we expect that to increase. At the same time, we also see that existing customers for NASAMS, they are buying more because of the fundamental defense system aspect of an air defense system. I wouldn't go into directly to state how much we see of growth in the NASAMS system for the NASAMS systems, but generally speaking, we are close to a 30% increase in our revenue. So that gives an indication on how we are growing per year.
Eric, there's a potential deal. You announced a potential takeover of a sonar business in the US, Sonar Tech. Is that deal going to get through? There were some reports that maybe the US government was going to stand in the way of that. How confident are you that it's going to get through, and how important is that for your US business?
Well, we are working with the US government in this and awaiting a formal response. But we are also working in parallel to see if we could do this in a different way. I think we, as a company, together with Sonatech, has a good match when it comes to product portfolio and how we complement each other. So we just have to wait and see for a formal response from US government related to that.
Eric, Europe is trying to figure out how it is going to rearm. It is talking about spending significant amounts of money. As we stand now, what is your assessment of the rearmament program that Europe is looking to deliver? Do you think we're moving fast enough? Is it going to be successful? What problems do you think we need to solve right now?
The way I interpret Europe now is that they are doing quite a lot to being able to do this ramp up. Obviously, from a very low level, and it takes a while to secure that this ramp up is being, seen in enough defense equipment. But I'm quite confident that most of the nations in Europe are on this plan and on track to get to the 3.5% and finally 5% when it comes to NATO targets. So I'm positive, and I also, when talking to many politicians and governments in Europe, I also get the same feeling in that they are on a good track. If it's fast enough, it's a little bit difficult to state. I think EU is trying to harmonize platform and systems, and I think that's a good path forward, because that will be a much more efficient way of being able to ramp up.
Eric, thank you very much for joining us. The Kongsberg CEO, Erik Lie, joining us there from Oslo, or from Norway. And interesting story there. I mean, harmonising the kit that Europe buys. That's been a theme that we've talked about for some years now, hasn't it? About whether Europe can really get on the same page. Yeah,
lots of national governments
hailing their champions.
Yeah, the money's there, but domestic politics gets in the way.
America doesn't produce many tanks. Europe produces a lot of tanks and fighter jets and things like that.
Coming up on the programme, we will pivot to another earnings story this morning. Continental shares surging after the German manufacturer sticks to its outlook amid risks of higher costs driven by the Iran war and potential auto tariffs. The market focusing on the upside this morning. We'll speak to the CFO. That's next. This is Bloomberg.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
This is the opening trade. We are 30 minutes into today's session. Happy Wednesday. A very strong session for European equities then after a decent session in Asia and the US. Fresh records in the US. The handoff was strong. European stocks then up 1.2% on the benchmark. Over in Germany, the DAX adding 295 points, almost 300 points over on the German index. In France, the CAC adding 1.2%. And a strong session here for the FTSE 100 as well, up 1.4%. The catalyst is there, a change in rhetoric once again from President Trump when it comes to Iran to being more positive. You've got the earnings story and you've got AI as well. Guy.
The earnings narrative is really strong this morning. Look at what we're seeing in terms of the breadth of this market and what you're seeing in terms of the higher and lower stocks. 490 are up. Only 97 are down. That is, you don't see that often. A near 5-to-1 ratio. Volume is also supportive of the move that we're seeing in the market this morning, which, as Tom says, is driven by an earnings narrative, a decent legacy out of the States and Asia, a positive geopolitical story maybe developing as well. So that's all very positive. Therefore, let's talk about some of the leaders that we are watching here this morning. Novo, with its upgrade, is really rallying. That stock is up by nearly 7% this morning. It's off its earlier highs, but that is a very decent performance. Diageo also painting a positive picture as well. BMW up by 4.22%. Even some of the laggards that have been hurt recently are bouncing back quite strongly. So BMW up by 4.2%, Anna.
Let's move on to some of the other stories that we're covering for you then this morning. Guy, President Trump says he is pausing a US-led effort to help stranded ships exit the Strait of Hormuz to see if an agreement can be reached with Iran to end the war. He didn't provide details on what, if any, negotiations are in the works. His comments marked an abrupt shift from recent days when he had voiced frustration over the pace of talks and indicated he wasn't satisfied with Tehran's proposals. The yen has hit the strongest level in over 2 months this morning, spurring speculation that Japanese officials may have intervened again after stepping in to prop up the currency back on April 30th. And Samsung has reached a $1 trillion market valuation after shares in the world's largest memory maker more than quadrupled over the past year on booming demand for AI chips. The milestone came as the company's shares rallied as much as 13% in today's trade, making it only the second Asian firm after TSMC to hit the $1 trillion milestone. The gains boosted the Kospi benchmark above the 7,000 level for the first time. Guy.
Let's talk about another corporate story that we are watching very carefully this morning. Conti shares are up really strongly in the German market this morning. The first quarter results from the company are boosted by the sale of high-margin products, high-margin tyres and various other products. This despite actually the Middle East conflict threatening to trigger a surge in raw materials prices over the coming months. The company has stuck to its full-year guidance, which I think is being taken as a really positive picture for the stock this morning. Roland Welzbacher is the CFO of Continental and joins us now. Roland, good morning. Thank you very much indeed for your time. What gives you confidence, given the uncertainty out there, to stick to your guidance?
Yeah, good morning, Guy. Well, first of all, let me put it a little bit into context. Operationally, we started very strong in the first quarter. EBIT margin came in at 11.9%. That's 120 base points up versus the first quarter last year. Free cash flow net income also came in above last year. It's still a challenging environment. Markets are soft. We pay high tariffs with ongoing headwinds. And despite all of this, we were able to increase profitability at Tires and ContiTech. Of course, we're watching the Middle East crisis. We're trying to understand the impact this has. We're expecting now raw material prices to go up, along with transport cost and energy prices. And that will provide headwind for us as the year is progressing. We expect a low to mid triple-digit million euro amount additional cost. We're putting together a mitigation plan to offset a large portion of this cost. It has many different legs, the plan. First of all, we need to increase productivity in manufacturing, watch carefully the fixed cost development, stocking up critical materials, and we're also working on commercial measures. It's going to take them time before it hits us. We expect for the first time at the end of Q2 and then fully unfolding in the second half. And we're putting together a package to mitigate all of this. And this makes us confident we can actually confirm the guidance today.
How quickly are you seeing any effect already in terms of the situation in the Gulf? And how quickly can your mitigation efforts sort of kick into a high enough gear to deal with them?
It usually takes some time because we're not buying that much material on spot. So we have long-term contracts. That means it comes with a delay. We're expecting this to happen late in Q2, and then we'll see the full cost obviously coming in the second half. So we also need some time to put together measures to offset this cost. Also takes a couple of weeks. We'll be ready in a second half, and we hope we can fully offset this. But of course, we need to watch what's going to happen. We have a base case scenario in mind, and this is where we base our financials and our plan on. If this is going to change because the crisis is going to last longer than we expect today, then of course we need to look into the details and adjust accordingly.
Okay, Roland, so that's quite a lot of detail on the outlook. Can I ask you about the outlook for ContiTech and your plans with regards to that business, for your plans for selling the ContiTech unit? I mean, this is a business that, of course, uses rubber, plastic, fabrics to make conveyors, hoses, belts and the like, and all kinds of things that are going to be reliant on energy markets to a large extent. So do these developments have a bearing on the timing of the sale of that business? And if not, why not?
So first of all, we started to sell OESL. That was part of ContiTech already last year. We completed the transaction beginning of February, and now the focus is on the industrial business. The M&A process started earlier in the year. It's in full swing. We're making progress as planned. We're confident that we can sell ContiTech by the end of this year. Why is that? Because you have seen our financial results. It's better than the first quarter last year. Also, all the measures in order to separate ContiTech from Continental Group are progressing as well, almost complete. Credit markets are holding up. This all gives us confidence. Now, speaking of the crisis, of course, we also looked into the cost increases. It's a similar picture than for tires, although the magnitude, of course, is lower. And we're also putting together a mitigation plan. So the answer is it remains to be seen. Right now, we see no roadblock, and we're going ahead as planned.
Roland, in your first answer, you talked about the tariff impact. What would the impact be if President Trump does indeed raise tariffs on European autos into the US market from 15 to 25%? What would that mean for your business?
Well, first of all, we need to understand whether tires are really covered. Usually they are. It was a lot of talk about autos, so this is the first thing we need to understand better. Assuming that it does, we looked at the financial impact it might have, and to our best guess, it is a mid to high double-digit million euro amount. Additional cost we would face for 2026. And again, like we did last year, we need to look into mitigation measures. You know our financial results 2025. We were able to offset a large portion of the additional tariffs, and we're confident we can do that again.
In terms of, therefore, what comes next, you've stuck to your guidance, Roland, but I'm hearing a lot of uncertainty. At this point, was it the rational thing to do to stick to the guidance, given the potential for change later on this year? How certain should we be in terms of what you're telling us today?
Well, if you look in the past, it's not the first increase in raw material prices we have seen in the tire industry. We've always managed to offset this price increase in costs with measures to offset this over time. This gives us the confidence that we can do it again, whether this is raw material price increases or additional tariffs or other costs. The job is always to protect the margin. So we need to, of course, be very cautious when it comes to other cost development. We need to squeeze out every bit of efficiency in production. And of course, we need to think about commercial measures as well. So we're confident. This is why we confirm our guidance today.
OK, that's on the guidance. You've talked about the prices you might face, Roland, and obviously everyone's very aware of the difficulties with what's going on in the Persian Gulf right now. Are your questions about the future all about the price, or are some of them about availability? Do you have any concerns about the availability of any of the products that you need?
Of course, we're watching carefully what's going on. As I said, we're also stocking up critical materials to some extent, which should cushion us a little bit if it comes to disruption in a supply chain. We talk to suppliers. We try to understand the upstream supply chain as well to see as early as possible if there's any shortage coming. Right now, there is none which is significant for us. And of course, for every component, we have multiple suppliers, so we can switch to some extent. But as the crisis progresses, we need to be agile and need to watch closely what's going to happen.
OK, Roland, thank you very much indeed for your time and for that detail as well. On the back of those earnings, a beat coming through for Continental, and that stock is up more than 5% right now. Roland Welsbacher, the Continental CFO, with that detail.
OK, what else we've got coming up for you a little later on in the morning? We are going to be speaking to the Novo CEO. Novo Nordisk shares having a very strong session, better than expected quarterly income, certainly driving that upside. Wegovy, the pill, is looking to do well in the United States. Everything appears to be back on track, maybe a little bit on that front, and as a result of which the stock is up, outperforming much of the rest of Europe this morning. Details to follow. This is Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. It's Jobs Day, and Bloomberg has the report under surveillance.
Let's start with the labour market data.
This is no longer something that's temporary. What's the tipping point here?
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
There's a lot of uncertainty about where the economy is going.
Has the unemployment rate peaked at 4.5, or are we headed back down?
If AI is really that good, it's going to hurt the jobs market over time, at least in the short term.
This is a really big deal.
The April jobs report, Friday on Bloomberg.
44 minutes past the hour. I have 2 words for you. Risk on. There you go. You can see the numbers on the screen in front of you. We are very positive in terms of the performance we're seeing out of Europe. Some of it's the kind of the macro picture. Some of it's just the earnings that we are seeing this morning, which are by and large, on average, quite strong and are certainly having a very positive picture. But there's a combination of factors. But the net result is what you can see on the screen in front of you. Another solid session.
Another solid session and supported, as you say, by earnings. Let's go to one of those positive earnings stories now. Novo Nordisk shares have surged after reporting better than expected first quarter income, lifted by its Wegovy pill sales of that in the United States. The Danish company has raised this year's guidance for both adjusted sales and adjusted operating profit. Let's bring in Bloomberg's Sanna Vass, who's in Copenhagen. Sanna, take us through some of the key takeaways here, because they really beat against some of the metrics that we were watching here. But the uplift to guidance still looked, I mean, it was there, but it wasn't sort of standout. So it's interesting to me the market has taken this quite so positively.
Yeah, well, I guess at the moment any positive news from Novo will be well received by the market. One thing that investors have really been looking forward to is to see how it's going with the rollout of the Wegovy pill. Novo launched this pill in the US in January, and so it's the first time that we're really seeing the results of that in the earnings, and the numbers are encouraging. Novo beat analyst estimates on the sales of this Wegovy pill quite significantly. It said that more than 1 million people have been using the pill since its launch, and also during the media call earlier, management talked about that there are some signs that people are moving from competing products to the pill, which is good news, and it helped also for Novo to raise its full year guidance, and the market is rewarding it for that. But yeah, there's still a long way to go for Novo to regain that trust, and we are still expecting, and it is still guiding for a decline in revenue for the full year.
Is it good enough to regain ground against Lilly? That's the question everybody's asking.
I think that's a bit too early to say, but I mean, Novo has really been betting on this pill to help it claw back some of the market share from Eli Lilly alongside other initiatives. So, of course, these results are a good start, but Eli Lilly, remember, has just launched its competing pill, and we're still waiting to see how that competition plays out. Novo management says that so far they haven't seen an impact of Lilly's launch on the scripts for its own pill, but it's definitely a major risk for Novo, as it was with its injectable obesity medicine.
Bloomberg's Copenhagen reporter Sanna Vass on Novo's results and the upside coming through for the stock. Thank you for that update. We're going to be speaking with the Novo Nordisk CEO, Mike Douster. That's on the pulse at 9:20 a.m. London time, so stay tuned for that. Let's get back to the tech story, though. This has been one of the key catalysts we've been watching through the last 24 hours. Infineon, over in Europe, of course, over in Germany, has posted a forecast revenue that beat analysts' expectations in the current quarter. You can see it's down a little bit, just down 0.4%. It's been quite choppy in today's session. This is the German chipmaker benefits from a spending boom on AI infrastructure. Let's bring in Matt Bloxham from Bloomberg Intelligence. Matt, what do you make of the numbers from Infineon, and whether or not their exposure to data centres can give them further upside through the quarters ahead?
Yeah, I think they were good results. Obviously, the shares have had a big run into this, which is perhaps why we're seeing them come off a little bit. You know, the kind of guide was encouraging, but I think the market had already kind of got there. And I think that they're benefiting from two things. One, that they're very exposed to the autos industry, and through the pandemic, autos manufacturers had stockpiled processes to kind of manage themselves through that supply chain issue, and that's coming back. So the autos manufacturers have been working their way through those inventories, and now incremental demand's coming through. And then there's this new market, AI data centers. Everything's about AI data centers at the moment, and their chips are being used to help manage power. And obviously power's a massive part of the whole data center story. And so that's perhaps been an incremental, not expected source of demand for them. So I think those two things together are going to continue with the strong momentum.
And Matt, how excited are you about what we heard from AMD? They look as if they could hit a record today if they continue what they did after hours yesterday. I mean, this is seen by many as one of the companies that's trying to close the gap with
Yes.
NVIDIA, of course, which has been doing so well after the data center story. So how impressive is AMD at the moment?
Yeah, very good, and it's a big gap. So NVIDIA's revenues are about 7.5 times AMD, so it's massive, but they are kind of growing, kind of 50% plus in data centers. Again, there's kind of two axes to the story. One is they are gaining market share in the GPU market, graphic process unit, which is obviously where NVIDIA has kind of created its big moat. But as AI shifts from training to inferencing, people are realizing that actually you need these kind of classical central processor generalist computing power in the data centers too. And so they're getting a second leg of demand from that part too. So yeah, really encouraging. The CEO making lots of very optimistic noises about their ability to outpace their own very ambitious revenue growth guidance. And so I think, yeah, we're going to see upgrades to analyst estimates on that one for sure.
What do you make of the rally in tech? Tom and I were debating this earlier. Are the numbers there to support it? Is this a blow off top that people are talking about? Is this the euphoria phase? Kind of, what do you make of the numbers you see on the screen in front of you?
I mean, I think certainly, 2 or 3 months ago, we were still in that phase of is the end user, the natural demand from enterprises coming through. I guess what you would take from the current quarter results is, yes, that there is durability to that demand. And actually, we're just seeing more companies go from proof of concept to kind of actual kind of real deployment. And that can only help. And everything you see, again, about the kind of CPU demand and more inferencing suggests that momentum is still there. So, yeah, I think that the signs are encouraging.
Where do you think, in terms of what we're seeing on the kind of the model level and Anthropic working with the financial sector, and we saw some pressure on the likes of Morningstar and Moody's and others in that space, how material is that? I mean, they're all just driving hard for revenue ahead of the IPOs. I mean, we're thinking of OpenAI and Anthropic. Yeah. They're now valued on some metrics at $900 billion. How are you thinking about that? And how are you thinking about whether or not those IPOs drain a lot of liquidity out of the markets when they come?
Well, I guess we'll see how much they actually float, how much of the free float there's going to be. It will be the big question about how much liquidity they do or don't drain. It could be a super thin amount of liquidity they give. I mean, I think generally we're still in a bit of a discovery phase about particularly how these agentic solutions can help all of us in our daily lives. And I think there's a huge amount of effort going into understanding how agentic can kind of be deployed to improve workflows. So I think there's still a huge opportunity there. Certainly all of the feedback we get on Anthropic's Claude is incredibly positive. I mean, if I was a junior investment banker, I probably wouldn't necessarily be worrying so much about my job. I think if these things can be effective, it means I'm not going to be working 24 hours a day, 7 days a week, which is, almost what a lot of junior bankers do.
Somebody's dream.
Yeah, exactly. they may well be having a bit more of a work-life balance coming into without impacting the actual end product.
I'm sure someone will find them another IPO to work on.
Probably, yes.
Such is the world.
Matt, thank you very much indeed. Matt Bloxham from Bloomberg Intelligence. Let's look at what else we are thinking about throughout today. Then G7 trade ministers are meeting in Paris. We'll keep across that for you. We also have an interview with the US Trade Representative Jameson Greer as the US, of course, threatens additional tariffs on Europe at 9 a.m. UK time. It's the ECB Chief Economist Philip Lane speaking on a panel on central bank independence in Berlin. We get data out of the US on mortgage applications and employment. The data out of the US yesterday was essentially broadly in line with forecasts. 1:30 p.m. UK time, we get US Treasury quarterly refunding announcement. And on the earnings front, Disney, Uber and Arm as well.
OK, let's talk about what is happening in these markets. Iran fatigue leaves tech to power equities higher. That certainly feels like maybe it is the narrative this morning. Scarlett's here, she wrote that. But that feels like the narrative.
Yeah, I mean, absolutely. Yeah, I mean, what you're seeing is that, it's helpful if energy prices decline for equities. We've seen that today. But you just need them to range trade for equities to kind of power higher. And I think a lot of it has to do with fatigue. So if you look at story count on the terminal for Iran, that peaked when you had the initial conflict. You got another little bump higher on ceasefire. And it's now lower than it was in June 2025. So the last time we had kind of tensions around. We've moved on. But tech, if you look at tech story counts, that's been, it's now above Iran story counts, and it's been flat throughout the time. And I think the key is that betas decrease between equities and the oil price. So, when you have energy prices rise, it certainly hurts your energy importers, your less tech-heavy ones. But when you have energy prices just range trade, other narratives can come to the fore because you've had volatility be lower, and that means you can have tech power U.S. equities in particular higher.
We seem to be willing oil prices lower. We're now down by nearly 3% on Brent. 106 is now the handle, Skylar. The longer we sit here, the lower oil prices seem to get. And we do, I mean, the ceasefire seems to be holding. Everyone's willing that to continue holding. But are you also seeing signs that people are factoring in a higher for longer oil price? So it's falling, but our outlook, surely, we're not ignorant of the fact that the Strait of Hormuz is still not yet open.
Yes, absolutely. So as you say, oil prices are a bit lower today. I think there's some optimism around kind of a backing down from the Trump side of things. Today, certainly, they'll be watching out for headlines on whether or not Iran backs up those headlines or backs up that kind of progress in negotiations. But I think the worry is we've done too much doubt already in a couple of markets. So like gas markets, for example, if you look at the futures curve, that's been elevated across the curve for a while now, and that's now feeding into oil markets as well. So if you look at the Brent or the WTI curve, it's in backwardation still, but those further out contracts are drifting higher. So it's getting flatter on that recognition, and it's definitely seeping into your rates market. So if you look at break-evens in the U.S., the 10-year break-even recently reached levels that it hasn't since 2022, and so there's definitely more concern about that oil price feeding into higher inflation longer term.
Skylar, has the Japanese Finance Ministry, or the BOJ, the Japanese Finance Ministry, I should say, intervened again? We've got the yen. We've got the yen higher by more than 1% versus the US dollar in the session today.
Yes, so we know there was intervention last week for sure at the tune of around 30 billion. And what you typically see is when they do intervention, they like to get kind of bang for their buck, because the idea is that you don't have a limited amount of dollars that you can use to buy the yen, and so you want to see as much upside in the yen as possible. And we are in a holiday, like, thin liquidity week for JPY, so certainly we could be getting more intervention now. I think maybe the risk is that there's definitely a limit to that unless you get coordinated intervention or unless there's a change in fundamentals.
Bloomberg M9 strategist Skylar Montgomery-Coney, thank you very much indeed on those key market moves that we're seeing and potential intervention there in Japan. The BTV of Bloomberg Milken Institute coverage continues, by the way. The Pulse is up next. European markets up strongly. Stay with us. This is Bloomberg.
Tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
You know how the market day started.
Find out how it finishes.
public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
President Trump says he will pause an effort to help stranded ships exit the Strait of Hormuz to see if the U.S. can reach an agreement with Iran to end the war. Sales at Novo Nordisk are fueled by the drug maker's new obesity pill as it slashes prices to get back in the race with Eli Lilly. We discuss with Chief Executive Mike Dustar later this hour. And the yen rallies to its strongest level in 10 weeks, triggering speculation that Japanese officials may have intervened again to prop up the currency. And of course, beyond the Novo Chief Executive, we also hear from the Chief Financial Officer of mining giant Vale this hour. Plus, we talk commodities with Jeff Curry, Senior Advisor at Carlyle. Now, first thing is first, before we get onto the markets with our great panels of guests. Look, there's just a lot going on. Global stocks once again rallying. Again, they're driven actually by technology stocks, blockbuster earnings and deals related to artificial intelligence, which is why today, not something we do usually, but we're looking at the Nasdaq futures gaining some 0.7%. Investor optimism also buoyed by President Trump touting great progress towards a final peace deal with Iran, leading to a decline in Brent crude and a decline in bond yields, and finally the yen actually touching its highest level against the dollar, once again spurring speculation that Japanese officials may have intervened again to prop up the currency. This is what the picture looks like in Europe on the back of some of the buoyancy that we saw in the U.S. or certainly in U.S. futures. We're seeing green across your screen when it comes to the CAC 40, the FTSE and the FTSE MIB. Also, AMD, the leading challenger to NVIDIA in AI computing chips, delivered a blockbuster forecast after a flood of data center spending, and you can see pre-market AMD gaining 16.2% higher. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, President Trump announced he was pausing a U.S.-led effort to help stranded ships exit the Strait of Hormuz to really see if an agreement can be reached with Iran to end the war. Now, in just a moment, we discuss the wider market implications with Sam Linton-Brown from BNP Paribas Markets 360 and Kathy Hepworth from PGIM Credit. But first, let's look at how geopolitics is actually shaping earnings season for the big defense players in Europe and how they're also being impacted by the war in Iran and the Russian invasion of Ukraine. Well, Jerry Doyle is our global defense editor. Jerry, you've been so busy. How is this, first of all, growing rift between the U.S. and Europe affecting defense spending at large?
Well, I think as we saw with the Ukraine war, that sort of spurred this initial buildup of defense spending in Europe. And now this rift between European countries and the U.S., as the U.S. criticizes Europe for not getting involved with the Iran war, for not supporting U.S. efforts there. Now you're starting to see more of an impetus with European countries to spend more domestically, to try to look for European solutions to a lot of these defense technology needs that they have historically relied on for the U.S.
So how does, I mean, we also hear that there's a lot of news about U.S. troops being pulled out in Germany. Does that affect domestic companies like Hensoldt?
Yeah, I mean, Hensoldt CEO said today that he's sort of expecting this to be a structural change at this point, that Germany is going to make an even more concerted effort to build up its defense industry, to buy domestically. And in fact, Germany just in the last couple of days said that it was going to spend 4% of its GDP on defense in 2030. So you can see that spending taking root in an even bigger way than it did before.
And finally, Jerry, I mean, Leonardo had a pretty strong performance for the quarter. They had some big contracts also in Austria and the UK. I mean, it is political why the chief executive departed, but what does that mean to you?
Yeah, well, Leonardo is a state-controlled firm, and even though their first quarter order intake was up by 31%. They had a lot of big wins. The CEO, Roberto Cingolani, did not always communicate his plans in advance to the prime minister, made a lot of decisions, both tactical and strategic, that weren't necessarily vetted by the government, and that sort of friction led to his ouster.
Yeah, Jerry, thanks so much. We'll continue following, of course, these stories very closely. Jerry Doyle, our global defense editor. Now we're joined by Kathy Hepworth, head of EM debt at PGIM Credit. Kathy, thank you so much for joining us. There's so much to talk about in the emerging market space because there's just so much going on. When you look at, emerging market resilience, spreads are sitting there at their tightest level in over a decade. How do you make sense of that resilience, given everything that's going on in geopolitics?
I think that the most common denominator is there's a lot of global liquidity out there, and investors are still willing to reach for yield. But there has to be good reason to want to reach for yield in emerging markets. And you have that on one side of the equation because there's good fundamentals. Mm-hmm. There's supportive technicals, and there's decent relative value. And on the fundamental side, what we've really seen and what investors, I think, appreciate most about emerging markets is that there is dispersion, right. And that's across spreads, rates, as well as FX.
So, Kathy, what does that tell us? Again, investors thinking about risk right now, how much appetite should they take?
I think you need to be measured in the overall amount of risk that you're taking, and you have to differentiate between spreads, rates, and FX. What we've seen in spreads so far is clear outperformance of the higher yielding issuers. And that's because a lot of these countries have been able to issue debt. They don't have funding needs. So that's important. And there's good carry there. When it comes to rates, I think it's a little trickier because we're beginning to see the first round inflation impact in a lot of these different countries. And there's a lot of differences between how policymakers are responding to that inflation.
And so, it's very clear in your mind, right? If you look across emerging markets, where do you see the most interesting opportunities? First of all, I guess on a country level, but also, as you say, the currencies, local rates, or hard currency bonds.
So let's start with hard currency bonds, and let's define the winners and losers.
Yeah.
What we've seen so far in terms of the winners are the higher yielding ones, so the lower rated ones, and often these are countries that are oil exporters. Okay. So these are countries in sub-Saharan Africa, countries like Angola. Within Latin America as well, you see some of the lower-rated countries for other reasons, perhaps because of what's happening from a local policy perspective, like in Ecuador, like in Argentina, holding up relatively well. There is changes in policy that are impacting from a credit quality perspective there. On the countries that are not faring quite as well, that is in Central and Eastern Europe, obviously, because oil importers, as well as some of the Asian countries. And I think a common denominator there is policy. Countries on the FX side who have not intervened properly or have over-intervened negatively impact investor confidence, and the currencies respond in kind.
Kathy, talk to me a little bit about Latin American, countries. So I have to say, we don't, given everything that's going on, we don't just spend enough time on some of these countries. But when you look at Colombia, so there are elections this month, Brazil is then in October. Again, how do you see prospects for regime change or politics change in these countries, and what does it mean for investors?
So I think let's take Colombia because that election is coming up first. It's very hard. It's a binary outcome, and I don't know that we're going to get the change. I think that perhaps we're going to get more of the same, which isn't necessarily a good thing for Colombia fundamentally because they have a large fiscal deficit as well as a current account deficit. You're getting compensated for that in some of the local markets, and perhaps in the higher carry currency, you're not necessarily getting compensated for that in spreads. But what Colombia has done, and so many other emerging market countries have done, has been very proactive in debt management.
Yeah, and that's crucial. And that's kind of like to be said across the board, right? If you put in the work for some of the structural reforms, especially in debt management, it's in these times. Anything else that you see maybe in opportunities in local markets elsewhere?
I think in countries like Brazil, right, which seems to be a little bit more removed from the current conflict in terms of the sensitivity to oil, I think they're continuing to cut interest rates, and they have the capacity to do so.
Okay, Kathy, let's also bring in Sam Linton-Brown, Global Head of Macro Strategy at BNP Paribas Markets 360. Sam, there's a lot going on in the market, and the market seems today to have taken a bet that actually there will be some kind of resolution in the Middle East. I mean, what do you see as the way forward, and what does it mean at a macro level?
I think at a macro level, what's fascinating is the degree to which the market's bifurcated, where on the one hand you have energy prices that, as you point out, they're a bit lower today, but they're still very high. You've got yields that are also high. And then on the other hand, you've got credit and equities, and to some extent currencies, which are very far off their extreme levels during the war. So I think you can rationalize that type of price dynamic where the market is of the view energy prices will be very high in the near term, they'll be higher for longer. That will mean central banks need to deliver some tightening, and certainly those who are due to deliver cuts won't be able to do so. But at the same time, it's not going to be sufficiently bad that it derails the growth backdrop. That has been conducive to risk-taking.
We were having a great conversation on emerging markets. I mean, the two most important stories, or interesting stories, I would say, away from emerging markets is the UK, with that massive move that we saw in gilts, and yen. So which one? I mean, the UK, there seems to be little good prospect out there, given the local elections tomorrow, and then given everything else that we're seeing around the energy markets.
So it's a big week for the UK. I think the market is pricing quite a hawkish profile now for the Bank of England.
Yeah. Too hawkish?
I'd say so. It's not impossible to see both the Bank of England and the ECB deliver the type of tightening that's expected for this year. Yeah. But conditional on that, it seems quite unlikely they wouldn't reverse a bit of it later down the line. And that's not priced of it either. We're pricing hikes, and then we're pricing a continuation of that.
Sam, just on bonds, what exactly is going on? Because is it a fear that, debt will be out of control if Keir Starmer gets replaced? Is it that the Chancellor may be changed in a kind of cabinet reshuffle? Or is it really just energy prices and the fact that the UK economy is so dependent on those?
I think first and foremost, it's a global phenomenon. We've seen a sell-off in the US, we've seen a sell-off in Europe. So it's been a global duration sell-off across developed markets. So that's sort of the main driver. I think you then have the additional kicker for the UK, as you point out, that there is political uncertainty. Currently, the government is quite fiscally conservative, and that means if the market's fearful of any new type of government setup, it's not going to be as fiscally conservative. It could be the same, but it's not going to be more. And so that adds an additional kicker to the market. I'd say from a fundamental perspective, though, if one looks at the UK and looks at projections for bond supply, net what's going to redeem this year and net what the central bank's doing, net supply net of QE/QT. In the UK this year, it's actually going to fall by about 20%. That's quite supportive from a fundamental perspective for the bond market if we can get over these political concerns.
Yeah, are you expecting gilt to go higher, even from here?
We're not. We think that that's actually one of the DM bond markets that should be a little bit more insulated, given how cheap valuations already are.
Okay, Kathy, Venezuela, I feel like we're going from problem child to problem child. So there's been a lot of attention, of course, on Venezuela. There's been an easing in sanctions. There's been a lot of investor trips to Caracas. Bond prices have rallied a lot since the capture of Maduro in January. So what happens from here?
I think that we're beginning to see the first signs that the debt will get restructured. And that's really important on the investor side of the equation. Clearly, on what's happening in the oil sector is likewise important. And I think a lot of oil companies have been giving incentives to want to invest again in Venezuela so that you can get production up. Because at the end of the day, that's what's going to pay off the bonds once they're restructured.
And so do you see that? I mean, is that something soon? Or is it, again, is it a little bit too late for real opportunities for investors?
No. I still think that there are going to be opportunities to invest in Venezuela.
Okay. Sam, Japan. Are we looking at another intervention, given where the currency is today?
I wouldn't want to speculate about that, but I could note that the move today looks of a similar magnitude to Thursday. Yeah. And on Thursday, intervention was subsequently widely reported. So it wouldn't be a stretch for the market to assume so. I think what we've seen time and time again in Japan is currency intervention can buy time for fundamentals to change, but it's not going to change the underlying trend if those fundamentals don't change. given the view that we've got on the US that's really quite positive from a cyclical perspective, we think that dollar yen's actually going to recover the recent pullback and probably heads back to where it was before the recent pullback, so back to 160.
Yeah, I mean, to you both, I mean, what happens to dollar in this kind of dynamic?
I think that the dollar, for fundamental reasons, is supported by the strong economic growth in the United States, and that makes perfect sense. However, if you look at the debt dynamics in the United States, I think that over time, the dollar is likely to continue to be somewhat weaker. That doesn't mean it's going to lose its prominence in the global economy, but I think that there are other factors at play.
And you see euro dollar at 121 by the end of the year?
I couldn't have put it better. I think that's really the key point. Everyone knows that US growth is likely to be exceptional versus its developed market peers. They know that the US equity market is a disproportionate beneficiary of AI because of the companies that are there. This is already priced in. So that already is reflected in market levels. I think the key point to what Kathy was saying is structural diversification flows away from the dollar in the medium term. They already started last year. The dollar already started to trade quite cheap to its fundamental cyclical fair value, and that process seems like it's going to continue.
But Sam, so that would be supportive also of emerging market FX in general, right? And that's your view as well?
That is our view as well. And there's an underlying structural positive story for emerging market in this as well. You mentioned the UK, where perhaps there's some fiscal concerns in the market. That's not just the UK. It's a general story where across developed markets, policy is seen to have become somewhat less credible, especially on a spread to emerging markets where it's become more and more credible. And you see that in many metrics, such as inflation expectations compared to history. DM is much beneath history. DM is much above. EM is much beneath. You see it in fiscal dynamics where there's a convergence. You see it across many factors that really supports the structural case for emerging markets to have a larger share of global portfolios.
And importantly, what we're seeing in the current conflict, the starting point in the balance of payments is really healthy. And I think that means a lot, and in particular to help support the currencies.
Kathy, anything in emerging markets in Asia that you really worry about given the energy complex?
I think that when we look at the policy response in countries like Indonesia and India, it raises some concerns. And I think that the market is responding to that. However, I will observe that I would characterize China as being a stabilizing force for the region, and you see that play out with growth.
What's your take on China?
I think it's fair to say it's certainly a stabilizing factor for currencies in the region, because when the realized volatility in dollar China is so low, it anchors in everything else lower. And I think it's not controversial to say China in particular is going to be taking a larger share of global cross-border portfolio investment for the foreseeable future.
How concerned are you, Kathy, on China? I mean, even if it's a stabilizing force, it has a complex economy to deal with at home. What are you most worried about?
I think it's going to be interesting to see what happens next week when the U.S. and China meet. I think the role that China plays in the global economy, particularly on the trade side, as you mentioned, is something that we have to continue to watch, because there will be responses to that if they continue to publish such huge trade surpluses.
Sam, overall, I mean, there is a belief in the markets, I mean, rightly or wrongly, that if there's some kind of peace deal that lasts between Iran and the U.S., then everything goes back to normal. I mean, I'm reading, LNG capacity has been hurt by 15, 20, 30% in some cases. Like, how long does it take for the oil prices to go back to what they were in January?
We're not going back to normal. We would very much push back against that assertion. Before the war, the market was looking at Brent around 65 at the end of this year, perhaps even lower than that. Now it's going to be looking at 85. You mentioned LNG capacity also being hit. That takes time to come back online. Some of it's going to take a long time, up to 5 years. Oil, it depends on the country. Some countries can restart production quickly, but some countries are going to take up to 6 months. So we're not going back to where we were. We're in a situation where energy prices are certainly going to be higher for longer. Inflation's going to be higher for longer, and that justifies that yields are also going to be higher for longer.
And we completely agree. And I think it's just another chapter in this whole book of the New World Order and how that impacts structurally the global economy.
But are markets really aware of that? They seem to be quite optimistic, actually, that, we have resolution, boom, back to normal.
Yeah, I think the markets are overlooking the medium-term and longer-term impact, what recent events are going to potentially have. So while I think you're meant to have some risk on, you need to be cautious.
Sam, I mean, overall, where do you see the biggest dislocation? I don't know whether it's in the markets or a country's response, but this, I guess, creates opportunities for investors, but from a macro point of view, it could also be quite dangerous.
Yeah, I think the equilibrium that we have at the moment, where the market price is higher for longer energy, but it doesn't expect that to have a big impact on growth, is by definition unstable. It makes sense if we get a resolution relatively soon. It doesn't make sense if the war is going to go on with no flow through Hormuz for 3 months plus. At that point, the market's going to have to be really quite concerned about the global growth impacts. The good thing, though, is the starting point is very strong. Momentum was actually picking up in Europe. US growth is very strong. And the market expectation of the growth that AI is going to deliver in the future has also been revised up quite a lot over the past 2 or 3 months. That's also providing some offset.
But Sam, do you worry about labor markets? Because if you're a central bank today, and I really don't envy their jobs, I mean, you kind of think actually at some point this really could have a big impact on the labor market. You see it again, these problems distilled in the UK, but it's worldwide.
The data looks good, though. I mean, you look at the US, the high-frequency ADP numbers look excellent. The jobless claims are very low. We think payrolls this Friday will be solid, as does the market. You could have a scenario where the market is quite concerned about AI leading to job losses. But in the near term, because you have a positive sentiment impact and because you have a lot of investment related to AI, a lot of capex, it actually can provide a near-term support to growth and might actually be neutral for the labour market in the near term. So we tend to lean against the labour market concerns.
Sam and Kathy, thank you so much for joining us. Kathy Hepworth, Head of EM Debt at PGIM Credit, and Sam Linton-Brown, Global Head of Macro Strategy at BNP Paribas Markets 360. Now on to corporate news, and Novo Nordisk rallying after better-than-expected first-quarter income, lifted by its Wegovy pill sales in the U.S. Now the Danish drug maker is slashing prices and hoping that the new pill will put it back in the race with its major rival, Eli Lilly. Well, joining us now is Mike Dustar, the Chief Executive at Novo Nordisk. Mr. Dustar, as always, thank you so much for speaking to us. I mean, maybe let's start with an important but broad question on, in this obesity pill competition, which is the one thing that you really need to get right. How's it shaping up between yourselves and Eli Lilly?
We are very excited about the pill, and of course, that's a result of also us today upgrading our previous projection. After 16 weeks of having launched this product in US, we see more than 1 million people having used it, or 2 million prescriptions have been written. This puts the Wegovy pill amongst the best launches in the pharma history. So we are very, very optimistic and excited. And this has happened, of course, despite the fact that for the last month, we have seen competition having arrived.
So at what point would Wegovy pill prescriptions actually surpass Wegovy injection prescriptions?
That's a great question, actually. So one of the leading indicators to market share is usually the new-to-brand prescription, so it's the so-called NBRX. We have seen that right now, when you take all of the Novo Nordisk products versus our competitors, 65% of all the prescriptions are being written for Novo Nordisk GLP-1 products. So that is super exciting, of course, and we see the impact of the Wegovy pill positively influencing our Wegovy injectable. I also have to say we have recently launched Wegovy HD, or the so-called Wegovy high dose. That puts the weight loss magnitude of Wegovy injection on par with our competitor, knowing that we have a label for reduced cardiovascular events, reduced heart attack, reduced stroke, tells me that patients are now able to understand the benefits of Wegovy just beyond weight loss, on par with our competitor, and hopefully the future will be bright.
And so, Mike, I mean, if we speak, and I hope to have many more interviews before then, but if I speak to you in 2 years, I mean, again, what's the difference between the pill and the injection?
Well, the efficacy of the taking a daily pill versus taking a Wegovy injections 2.4 is exactly the same. So with the pill taken daily, you basically lose some 16.6% of your body weight on average. That is incredibly above and beyond anything else right now in the market in the pill format. I have to remind you, Wegovy pill is the only peptide in a pill. The word peptide has become quite famous nowadays in the US. Well, this is a peptide pill, and because it's peptide, it's powerful. And patients are very much being attracted to it because of its power of weight loss. In addition, of course, when they see that this is a very tolerable product and it is Wegovy, so it sits on the back of millions of lives of safety data over years, then it makes it very powerful for quarters to come, I would say.
And Mike, would you rule out any future price cuts actually this year in your obesity portfolio, especially for the direct-to-consumer sales?
Well, I think we have priced the product right now exactly at where we wanted it to be. We have a starting price in the U.S. at $149 for the Wegovy pill starting dose, and we see this crazy uptake, I would say, that has been the result of many more patients being affording this product. So based on this, we have no intention right now to look into the price, but really continue via different channels, expanding our coverage and making sure that our products gets to the hands of everyone who needs it.
What's the most important gap you see that Novo needs to fill in its experimental medicines? I know in the past you talked about M&A. Is that still in the cards?
I think we basically are focusing on few areas, diabetes and obesity and all of its comorbidity. It means that we need to be able to compete with everyone who is interested in coming in this area. And there are many companies, of course, now that are excited to come, especially into the obesity field. To do that, we need to have the richest, the broadest, the best pipeline. We have a lot of that in-house, and I'm very excited that we are seeing an acceleration of our in-house pipeline progression. But I also have said that we continue to search outside for other innovations that are not invented in our own backyard, and the team is very busy doing that. So once we find molecules that are complementary to what we do, then we will not shy away about bringing them on board. And we have seen the best version of that with the so-called UBT251 molecule. This is a triple agonist molecule that is now entering phase, moving into the clinical development further on. And it's probably the best in class, and that was an acquisition from a Chinese company. So we will continue, of course, showing the best of our BD approach as we go forward.
So are you looking for a startup or someone doing a special molecule, or is there another gap that you need to fill?
I think when you take a look at obesity and all of its comorbidities, that's where you're going to see Novo Nordisk focusing on. You're going to see Novo Nordisk focus on weight loss, the magnitude of the weight loss, quality of weight loss, how often you inject yourself, injections versus pill, but also into the areas like cardiovascular benefits, liver benefits, kidney benefits. Many of the areas where we have been involved in will be expanding over years to come.
Novo, I understand, is currently hiring actually, outside or more towards the U.S. or even China instead of your home market of Denmark. Is that going to be a longer-term trend?
I didn't understand the question. Could you repeat that again?
So the question is, I understand that you're hiring more abroad instead of in Denmark, that you're hiring people in the U.S. and China. And do we read anything by that? Is that a longer-term trend?
No. Denmark is a country with 5 million population. So, of course, it's an important market for us, but it is a small market. We have historically, for many, many decades, have had more people and more growth of people outside of Denmark. That's where the population of the world is. That's where, of course, our largest part of the business is. So you should not read too much into it. That's just business as usual.
Okay, how do you, I wanted also to ask you about Medicare and actually how you see that developing. How do you see Medicare access in 2028 and beyond, given some of the delays, but also what does that mean for access to obesity medications in the shorter term this year?
Excellent question. So first of all, we are very happy that now we will soon have access with our Wegovy and anti-obesity medication in Medicare. The reason I'm especially excited about the Medicare population is because these are elderly individuals that typically would benefit from the product profile that we have versus, let's say, our competitor. Wegovy being the only anti-obesity medication out there with a label for cardiovascular risk reduction, heart attack reduction, stroke reduction, fits perfectly into the population of Medicare that might be suffering or be worrying about some of these conditions, in addition to wanting to reduce weight loss. So I actually hope that this would be a good place for us to operate and tell our story and how wonderful Wegovy pill, as well as Wegovy injection and Wegovy high dose is.
Mike Dustar, thank you so much for joining us. As always, a terrific interview, the chief executive there of Novo Nordisk. Now, for many companies, of course, earnings season is also being dominated by discussions of geopolitics, with energy and commodity firms grappling with supply shocks from the conflict in the Middle East. Now, later this hour, we speak to Marcelo Bacci, the chief financial officer of the Brazilian mining giant Vale, the world's top iron ore producer. Its latest results were dragged down by operational pressures despite higher prices. In just a moment, we also discuss the situation in the Strait of Hormuz and the commodities outlook more broadly with Jeff Curry, senior advisor at Carlyle. But first, let's get more on the latest U.S. strategy in the Strait of Hormuz as the U.S. pushes to see if an agreement can be reached with Iran to end the war. Let's bring in Stuart Livingston-Wallace, Bloomberg's head of Middle East, North Africa and Russia. Stuart, thank you for joining us. So what's the latest state of play?
Yeah, good morning, Francine. So it's very hard to say. I mean, the state of play is that we had Project Freedom announced on Monday and then it was withdrawn on Tuesday. And the reason given for that rather abrupt turnaround was that there seemed to be progress made on the deal. I think the reality was that you had this very violent reaction from Iran to the start of that. You saw attacks on ships around Hormuz. You had missile alerts here for the first time in about a month. And I think that gave everyone pause for thought about the wisdom of doing that. Quite what's going on behind the scenes is really hard to parse out. We know that Pakistan is, to some extent, the lead mediator on this, but of course, I'm sure there are lots of other countries involved because this has impacted just about every country and just about every economy on the planet. So there's a great deal of interest in getting it resolved. You had the Iranian foreign minister in China today. Again, could we see perhaps a stronger line taken by China to resolve this? We'll wait and see. So it's going to be some time before we figure out what exactly is going on. But clearly the interest from at least the consuming side of the planet is that this needs to be fixed quickly.
Stuart, does any possible peace deal remain distant then?
I mean, it does seem, based on what we can see today, that it is going to be complicated. The question is going to come down to what exactly are the red lines that both sides are prepared either to concede on or potentially stick to. So where we started was we want discussions around the nuclear file. We want discussions around missiles, about support for proxies. And that's rather been superseded in the last several weeks by we need Hormuz reopened and everything else perhaps can wait. It's not clear going forward just who will concede what. And it's also not clear what the future of any of those particular topics will be because, as of today, Iran has said we're not going to discuss nuclear, we're not going to discuss missiles, we're not going to discuss the proxies. And if we're going to discuss Hormuz, it has to be on the basis of we now have control over this and we're going to start imposing a tariff on ships going through. Now, given the scale of the traffic going through Hormuz, that potentially represents a windfall for Iran, which I'm not sure was necessarily one of the goals going into this conflict in the first place. So we'll see. You know, I mean, we can't be too skeptical that eventually a deal can be reached because, again, the economic pressure is starting to get rather immense.
Stuart, thanks so much. As always, Bloomberg's Stuart Livingston-Wallace from Dubai. Now, President Trump says great progress has been made on a final agreement to end the war with Iran, sending oil prices lower. Still, Brent crude has climbed more than 50% since the conflict started at the end of February. I'm so happy to speak to Jeff Curry, Senior Advisor at Carlyle, who will make sense to all of this. Thank you, Jeff, for joining us. First of all, how much supply is getting lost?
Right, we're still in that 14, 13 million. By the way, there's more because you have Russia. Forget Ukraine is took out 1 million barrels per day of Russian supply. So we're not just talking about Iran, but let's use the 13 to 14 million barrels per day of lost supply. And that's been pretty constant. That's accounting for all the redirection. And then you have what's being lost out of Ukraine or out of Russia right now. So this is a lot of supply that's missing from the market, right?
I mean, it's a lot. And so the markets are kind of ignoring it, which we'll get to in a second. But when do storage tanks run empty?
Your parts of the world like Australia, Philippines, Thailand, you are. But the question is when and where. I still say the review, it's going to be, sometime in the month of May that you're going to end up with Europe hitting tank bottoms. And in the U.S., it's somewhere in that July 4th time period. If not sooner, by the way, the inventories number coming out of the U.S., the ones we got last night, the ones last week, I've never seen anything like that before. The analogy I think is like in that movie Jaws, when the mayor declares the beaches are open and you can see the fins swimming around there. And the fin are these inventory numbers. And I think that it's important to remember that these inventory numbers, let's define terms, a deficit versus a shortage. We have a deficit today, meaning that demand is above supply and we're drawing inventories. It's not a shortage yet. So to answer your question, you have the shortages in places like, Asia, and it's not that bad yet because you're not completely at tank bottoms. But in places like Europe and the United States, you're in a deficit and you don't hit the shortages until you hit tank bottoms.
But so, Jeff, I mean, first of all, what fuels are going to run out first?
Distillate, jet fuel, because the LPGs, those are the ones in which the Gulf was a big exporter of. Yeah. And then the other one is like diesel. Those crude oils that come out of the Middle East were very rich in diesel. And like inventories, even in the U.S., are 11% below the 5-year average on diesel as a starting point. So, watch jet fuel, watch diesel, watch the LPGs.
I mean, these are huge vulnerabilities for any economies. It means, it could impact travel. It could impact, of course, how many airplanes fly. Yeah. Even if it were to stop today, does it go back to normal, or are we still going to have these shortages?
Oh, it's going to take a very long time to get back to normal. Let's just begin with, let's say we open tomorrow. You got to be really confident there's no mines in that main passageway. Before, then you got to get the insurance. The insurance guys have to be confident there's no mines. And then you got to get all the ships back in the right place. That's 3 months, bare minimum. And then you got to restart the production that has been shut in, and how much of it's damaged, we don't know. I like to point out, when we shut all that production in during COVID, it took 2 years to get it back all online again. So we're talking about a very long, drawn-out process in terms of thinking about the recovery. So even if everything stopped today and they say, resume production, you're talking 3+ months to even start to get even a resemblance of this stuff beginning to flow. And then we're going to find out what kind of damage was done.
But so even if it were to stop now, there's going to be fuel shortages in certain parts of the world.
It's baked in.
Full stop.
Full stop. Because at this point, it's going to take so long to get all of this restarted that those inventories will continue to draw. And again, going back to how big, I just want to put some, I've only seen inventory changes this big once other time in my life during COVID. Because remember, I think as we were talking once before, this shock is the mirror image of COVID. So it is appropriate we're seeing these inventory draws on that level. Last week it was roughly a 25 million barrel inventory draw. And we're in the shoulder months. This is the weakest period all year long of economic activity, oil demand, and everything. So we have no stress on the system, and you're already seeing 25 million barrel builds. The API has confirmed another 25 million barrel draw, that is. So what is it going to look like when we get to Memorial Day, July 4th?
But what is it going to look like July 4th?
It's going to be, think about it, demand's going to grow 5 million barrels per day more between now and at least the next 6 to 7 weeks. So we're going to have so much more stress on the system. And I think when we think about, there's a difference I want to say is everybody focused, well, the markets have no impact because prices it's a smaller share of the economy. I think you probably have many people tell you that story. Prices are not the point here. Prices are like a fever and an illness. They're not the illness. The illness is the lack of supply. Or, like I say, where you take your temperature, the fever is measured. The price is like the measure of where your fever is. But the reality is the illness is that gap between supply and demand. And right now that gap is being filled by inventory. And then once you have that inventory exhausted, we wrote a piece, back in March, you can't print molecules. Yeah. Boom, that demand has to come down in line with supply. That's going to hurt.
But, Jeff, what I don't understand is that, sure, prices are 110, 113 Brent, but actually markets are pretty cool about what's going on, right? So they're not seeing the picture that you're depicting.
Yeah.
Why not?
I think it goes back because they can't feel it and they can't see it. And again, there's so many, if it's policymakers, other pundits that are, macro, oriented. You and I were sitting here it was the exact same situation in 2020 and 2021. We're going, these are real shortages coming down the pipeline. And I think if you ask me where the macro community failed in 2020 and 2021 is they think about the world in notionals and not in volume. And that is a distinction. Commodity people think in metric tons, barrels. They think in volume. And so when we think about, so they look at prices and it doesn't have that much of an impact. But what happens when you take those metric tons out of the system? It hurts.
What do you think is the aggregate estimate for the Hormuz supply loss? Is it too difficult to say right now, to be lost?
Bare minimum, I'm just going to go, it's 1 billion barrel plus. And you think about what is the gap between tank tops, because we know we hit tank tops in April 2020. And by the way, how did you force that violent correction supply and demand when you ran out of storage capacity? We went to minus $36 a barrel. So what's going to happen when we hit tank bottoms? Yeah. Let's do the reverse of minus 36. I don't want to speculate, but we've already seen Brent at 150, and we've already seen Oman near 200. So the explosive nature of that is going to be,
Jeff, let's say there's a peaceful environment. How fast can the UAE ramp up production of LNG? And other, like if you look at the Gulf states.
Let's take like Qatar. I mean, the Ras Laffan damage, we're talking years. That's 20% of global LNG exports. And also we take the crude, let's say, in Iraq. Iraq was one of the first to have to shut down. These are older technologies. They have a lot of water cut to them. And when you shut them in, let's take Iran. It was at 6 before the Iranian Revolution, went to 0, came back slowly back up to 4. Yeah. We don't know how much is going to be lost. And so when we come back up, is there going to be any spare capacity left in the system?
Jeff, I mean, if you look at the current market influence, it's pretty crazy, the market conditions and the dislocations. Is that why you've transitioned your role to advisor so you can do other stuff?
By the way, I want to say that I absolutely, I'm sticking around Carlyle. I love the opportunities in the private space. But I think your point is what's going on in the liquid space right now is unprecedented. And I want to get back out there and have a voice and be forecasting again in the liquid space and in thinking about oil prices. And what I want to point out is like the products. The last time we created investor products that you could do was back in like 05, 06 when I was at Goldman way back then. So when these cycles, they're 15, 20-year cycles, and we were sitting here on this show. Going back, before the war, talking about the revenge of the old economy and the rotation away from asset light to asset heavy, halo, whatever you want to call it. That was already occurring. All this did is turbocharge it. And I think the opportunity set in the liquid alternatives in commodities in particular is going to be unprecedented over the next couple of years.
So you're expecting more products or more? I mean, how does that really change from an investment point of view?
It's like I myself try to actually. I put my money where my mouth is these days because I can. It took me days to be able to put a old economy halo position on. It's so hard. You can't just look at the things. So we want to be able to provide that opportunity to investors so that they can really, have the opportunity to own the halo opportunity here.
Jeff, thank you so much. As always, Jeff Curry, their senior advisor at Carlyle, with some great insights, as always, on supply lost and actually how much time it would take to get back on track. Coming up, we talk to Marcello Bacci, Vale's chief financial officer, as the Brazilian mining giant looks to boost dividends and share buybacks. He'll be joining me here in the studio next. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Welcome back, everyone. Now, despite missing quarterly profit forecast due to high operating costs, Vale is churning out its highest iron ore shipments since 2018 and seeing strong base metal growth. The Brazilian miner says it's confident about paying an extra dividend and stock buybacks throughout 2026. Well, I could not be more happy to speak to Marcello Bacci, the Vale Chief Financial Officer, joining me here in the studio. Mr. Bacci, thank you so much for joining us.
Thank you for having us here.
I have a million and one questions about commodities and iron ore, but actually, how exposed are your clients to the Middle East, to this conflict, and are you having to adjust shipments or supply chains as a result?
Today, about 60% of our volumes go to China, and we have an important part of our volumes going also to Europe. Middle East is an important region for us, but in terms of volume, it's not too relevant to affect the results of the company.
Talk to me a little bit about, your quarter was very strong operationally. You did have some headwinds, added to the financial performance. What should investors focus going forward?
I think we had a quarter where cost went up, but we have a very balanced market in the iron ore industry, which means that as a consequence of cost going up industry-wide, prices also went up. So the margins were preserved. So it was a quarter that we showed a lot of resilience and a lot of robustness in our operations. So I think going forward, it's important to monitor what happens in the industry as a whole in terms of cost changes as a consequence, especially of oil prices, which are important for us. And what happens with the price on the other hand. So we are very confident because in the main markets that we have, notably China, the market is very robust. So we see, the coming quarters in a positive way.
Is there anything, when it comes to costs, is there anything that you could have foreseen? Why did costs go up by so much?
Actually, we had a view that the prices or costs could go up as a consequence of oil prices. We have the shipping fuel important for us, diesel in the domestic transportation also important for us. So we took some measures in terms of hedging our position back a few months ago that are paying off very nicely and reducing the impact of what we see today.
I mean, this is also partly due to the stronger Brazilian real. As you say, it's also, freight rates and, of course, diesel prices. So how and why are you so confident that you can still stick to your annual guidance?
I think, from the demand point of view, we see a very strong market. And when you see supply and demand in iron ore, you see a very balanced market. So when you have an industry-wide effect on costs, in a situation like that, the prices respond, which is what we're seeing. Prices were about $100 before the war started. They moved up to 108, 109, which is where they are today, which is more or less the same percentage that cost also went up. So to the extent that the market continues to be balanced and that the demand is there, we are not too concerned about the results. Of course, the costs are going up. We have to fight against the cost every day, but we are positive and confident about the margins.
You're hinting at special dividends and more buybacks. When will you go for it?
That's a decision for the second quarter, for the second half of this year. We started the year with a very nice and positive cash flow, better than we expected as a consequence of these market dynamics that I just mentioned. So to the extent that we continue to generate more cash and we have a capex program which is already very large, about close to $6 billion of capex this year, that is not going to change much. So the additional cash that we generate normally will be diverted to the shareholders in the form of dividends or buybacks, and we're going to choose between the two depending on market conditions.
But that's something for the second quarter that you'll decide in the second half of the year.
Second half is the decision, yes.
How would you describe the situation in China when it comes to real demand for iron ore?
Very robust.
Okay.
In China, more recently, we saw an important change in where the demand was coming from. The real estate sector was very important for us and continues to be very important, but there was a very sharp decline in construction in China, which is a heavy user of iron ore, of steel, and therefore iron ore. But on the other hand, the exports increased, and also the domestic consumption of consumer goods, especially durable goods like cars, refrigerators, and other things, also is picking up. So there was a change in the composition of the demand, but the total demand continues to be very robust.
And that is for the rest of 2026 as well? In China?
Yes, we had a very strong first quarter. We see demand very good in China. India growing very nicely, and also the Southeast Asia. Europe is weaker, but that's a continuation of a trend that we've been seeing in the last months.
I mean, there are many question marks, of course, about what happens in Iran. If it stays like this and there's no real peace solution, or even if there is some kind of agreement in the short term, what does it mean for global demand of iron ore?
I think for global demand, the main concern is a long war that could lead to a destruction of demand as a consequence of high costs and therefore high prices. That's the main concern that we have today. But if we continue in the trend that we have today, things are normal, but we have to be careful about the length of the war.
I understand also that China has been pushing for much more influence when it comes to iron ore pricing through CMRG. I mean, is that changing the balance of power and the dynamics, and how is Vale responding?
Yeah, we have a very positive relationship with CMRG. We move an important part of our volumes through them to the final clients. It's always, the normal dispute between buyers and sellers. Both sides, they want better conditions. But the relationship has been very positive. We have we've been selling to China for decades. I don't think there's going to be any disruption in that kind of relationship.
Okay, thank you so much for joining us for a very interesting conversation. Marcelo Bacci there, the Vale Chief Financial Officer. Now, in the last 20 seconds or so, we are just getting some breaking news out of Axios. saying that U.S. and Iran are closing in on a one-page memo to end the war. Whether there's a memo that will be signed by both or actually agreed on is still unclear, but it does seem like things are moving in the right directions. And of course, this is also having an impact on not only futures in the U.S., but what we're seeing in European equities. So a flood of data center spending has boosted AMD's sales forecasts. Let's just finish the program with more on this. Neil Campling, Bloomberg senior strategist, is here. Neil, hyperscalers spending finally feeding through to AMD. So what stood out from its earnings?
I think the main takeaway is that they are guiding to the server-based revenues, where the AI spending is, to grow 70% year on year for the following quarter. They also described a $120 billion TAM, total addressable market, for the data center spending by 2030. So high expectations into the quarter were met and exceeded, hence the stock price moving up substantially overnight. A quite incredible statistic is that AMDs are now trading on a price earnings multiple of 45 times, twice the number that NVIDIA, the original AI enabler, is trading at. So high expectations were met, incredibly huge, high triple-digit growth in terms of the addressable market that AMD sees from here. So quite a stunning set of results for sure.
Neil, with Samsung joining the elite $1 trillion club and the FT reporting that DeepSeek is nearing a $45 billion valuation, are these justified?
Well, I suppose on DeepSeek, if we look at the $45 billion, that's like 1/20th the valuation people are ascribing to US equivalents such as Anthropic. And on Samsung, we mentioned in terms of the PE multiple just now, and quite incredibly, because of the enormous growth that Samsung has enjoyed lately, it's only trading on 5 times forward earnings numbers, because earnings estimates have increased by 230% for this year alone. So if they can continue this growth, then the valuation certainly is justified, given where the US peers trade at significant premiums to those valuations.
Neil, what are you looking for next in this space?
I think the next big number definitely will be coming through in the next couple of weeks from NVIDIA, of course, in terms of whether they can continue to provide upside surprise to the ecosystem. The key for other enabling AI stocks to keep a close eye on.
Okay, Neil, thanks so much. Bloomberg senior strategist Neil Campling. Now, U.S. and Iran are closing in on a one-page memo to end the war. That's according to Axios. Let's quickly have a look at what kind of impact that's having on markets overall. But remember, they were still rising. They were again rising ahead of this as there was expectations of optimism, of course, on what was going on between U.S. and Iran. Now, our U.S. colleagues will also be speaking with U.S. Trade Representative Jameson Greer from Paris as he attends the G7 trade meeting. That exclusive conversation starting at 1:30 p.m. London time. A lot going on when it comes to the markets. Let's also check what's happening with yen and a couple of other things that we have on our radar. Look, global stocks still gaining. Technology stocks driving rallies in global equities as a wave of blockbuster earnings and deals highlighted the relentless pace of investment in artificial intelligence. Again, strategists warning that equity markets are moving too fast as oil prices threaten to reignite inflation and weigh on the economy for as long as the conflict in the Middle East remains unresolved. Up next, it's Bloomberg Brief, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country.
We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Project Freedom on hold. President Trump puts his new Hormuz plans on pause while seeking a deal with Iran. The White House now reportedly believes a deal may be close. Marching higher, peace talk, hopes, and blowout tech earnings push global stocks higher. We have Disney results on deck today. And intervention speculation around the yen once again as the currency touches a 10-week high against the dollar. Let's take a look at these markets because we closed yesterday at records, not just for the S&P, but for the Nasdaq 100, the semiconductor index, and on and on. Even the small caps were at records. Just in the last few minutes, though, we've had breaking news from Axios that the White House believes that they're close to a deal on Iran, and they're waiting for an Iranian response within 48 hours. Now, according to this Axios report, the details of the deal would involve Iran not enriching uranium, a moratorium on uranium enrichment. The U.S. would release money that had been sanctioned, and there would be opening of the Strait of Hormuz on both sides. So several elements to the deal. This is the White House saying it believes a deal is close, but we are seeing oil move off the back of that. We have Brent crude all the way down to 103 plus change, New York crude at 95 and change. Now again, we had already been seeing some moves. Let's take a look at yields because they were already a little bit lower just off the back of the positive sentiment surrounding equities. Today we have the 10-year all the way back down to 434, so down almost 8 basis points right now. We have the dollar index also lower by about 0.7%, and that's partially why people think maybe there was intervention in Japan to take advantage a little bit of the weaker dollar. And look, the VIX below 17, so all calm out there. Let's get a roundup, though, of what's been happening around the world in the last few hours. We'll get to Justina Lee in London. Justina.
Good morning, Bonnie. Now, as you mentioned earlier, we have to start with the dollar yen. Now, it's a holiday in Japan today, but it feels like the authorities have been hard at work with suspected intervention, kind of resulting in this stronger yen today. Now, elsewhere in stock markets, it's all in the green today. And I have to draw your attention, especially to that staggering move in the Kospi, up 6.5%. Samsung Electronics joining the $1 trillion club. Now, if we flip the board here to Europe today, of course, it's also a bullish picture everywhere, with the Stocks Europe 600 up today, and generally a weaker dollar being reflected in a stronger euro today. And kind of with hopes for a peace deal in the Middle East, we're generally seeing bond yields lower today. And it will be especially notable in the gilt markets after that huge move up in yields yesterday. Now, of course, when it comes to the UK, it's not just about geopolitics. It's also about those local elections tomorrow, which we'll be watching with you here. Bonnie.
Justina, thank you so much. Justina Lee there in London. Let's get to some individual market movers now. Here's Natalia Knichevich.
Hi, Vani. Shares of AMD are up by almost 19% in pre-market after they gained by 11% after the bell yesterday. The company reported strong results. Sales for the first quarter came up by 38%. Revenue from its data center division jumped by almost 60%. And the management also said that it's confident that the company will generate about tens of billions of dollars of revenue from its data center division next year. Now I'm also watching Supermicro. The company reported better than expected results on key metrics. The stock is up by 17% in pre-market. Reported adjusted margin that came at 10.1%. Analysts expected 6.75%. But the stock is still down on a year-to-date basis because remember in March it was accused, the management was accused of violating of U.S. export controls. And then finally I'm watching shares of Arista. They are down by 8.9% in pre-market today, despite the fact that revenue and earnings came better than expected. However, sales forecast was in line with expectations, and Bloomberg Intelligence is saying maybe that's not good enough, Vani.
Natalia, thank you so much. Natalia Knichevich there. She'll be back later in the hour. Also coming up this hour, more on the strength of this earnings season with Keith Lerner of Truist. Back to breaking headlines, though, which is moving markets. Axios reporting that the U.S. is seeing an agreement potentially very soon with Iran on a memo of understanding to end the war and set the stage for more nuclear talks. Let's get more details now with Owner Ant in Dubai. So, Owner, we're getting all of these reports from Axios that the U.S. is potentially nearing an agreement with Iran on a memo of understanding. This is the U.S. side we're hearing, though. Are we hearing anything from the Iranians or mediators that Iran is party to this?
Well, that's one of the key points to keep looking at in terms of what was just broken by Axios. They say that this memorandum of understanding that is currently under discussion needs to be approved by Iranian leadership, and that has proven to be tricky in previous rounds of discussions when the U.S. thought that it was nearing an agreement, and that was widely telegraphed by President Trump himself. But we never came to a point where an agreement was actually clinched since the first round of direct talks between the two sides failed to yield an agreement when they met in Islamabad last month. What is different this time, though, is that the U.S. expects a response from Iran on this comprehensive MOU from the way it looks within the next 48 hours. Whether or not it's going to happen, we don't know, but that's what's driving markets as we speak at the moment, with oil basically crashing.
Exactly. And President Trump has set deadlines before and then extended them, right? And it's not clear that the other party was even worried about those deadlines. Meantime, Abbas Araghchi is in China. And then all of the conditions that it seems are in this memorandum of understanding are things that we've seen before. So, yes, the U.S. would agree to release frozen funds, agree to lift sanctions, but also Iran would have to commit to a moratorium on enrichment and so on. Is there anything new about the details that we haven't seen?
Well, as you said, China's involvement can actually be a game changer, given the fact that Trump and Chinese President Xi Jinping are expected to meet in China. And today was the first time we saw Chinese foreign minister so forcefully basically come into the picture and add his voice to the international community, calling for an end to the war. So that, in that sense, stars are kind of getting aligned for the two sides to come to an agreement. But when we look at the early indications of what that agreement might look like, it really focuses on three things that we've been talking about since this war began in February. And that is the reopening of Hormuz, which is obviously very, very important to both sides as well as the rest of the international community. The limits on Iran's nuclear enrichment, nuclear facilities, nuclear program that has been at the heart of the demands made by the U.S. and has long been portrayed as one of the main reasons that the U.S. went into this war, along with Israel, on Iran 2 months ago. And finally, the lifting of sanctions and unfreezing some funds for the Iranian government to access. Those are going to be the main issues that the two sides will start discussing in over a matter of 4 weeks, 30 days, if they can agree on the memorandum of understanding that we're talking about right now over the next 48 hours, Vani.
And this, of course, all coming after the U-turn on Project Freedom. Owner, thank you so much. That is Bloomberg's owner and in Dubai. Tech also pushing stocks higher. AMD shares leading the rally in pre-market trading after delivering a sales forecast that beat estimates by almost $1 billion. The leading challenger to NVIDIA's AI computing chips says a flood of data center spending will generate $11.2 billion in revenue in the second quarter. Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, is all this thanks to the extra $125 billion or so that we are seeing hyperscalers promise to spend this year?
I think that's certainly part of the story, but I think there's some other things going on here too. The first is that a lot of companies are looking to diversify the supply of AI accelerator chips beyond NVIDIA, which is obviously by far and away the market leader. Obviously, we've seen the likes of kind of Google and Amazon entering that space too. The second is that the technology is shifting away just from AI accelerators, what used to be called GPUs, into more of the kind of classic CPU or kind of general purpose compute processing. And that's happening as the AI story shifts away from being heavily training oriented to more inferencing or kind of deployment of AI into kind of real life enterprise applications. And so they're kind of getting this kind of dual benefit of both taking market share in AI accelerators and seeing more demand for their kind of classic CPU products too.
So taking some of the pie, but also the pie is growing, I guess. What about Supermicro? Is it over all of its difficulties now?
It's a good question. I mean, it was a mixed print. So it's interesting to see the shares up so much, and it kind of shows you a couple of things the market's trying to struggle with. One was that the revenue for the quarter and the revenue guide was kind of fairly weak, and it kind of shows that perhaps there's still some kind of bumps in the road for them that they need to kind of navigate. But we saw this very positive surprise on gross margin, which has been enough to kind of compensate for that kind of rather muted revenue outlook. And that's obviously something the market has been looking for with all of the kind of supply shocks we're seeing across the tech space, particularly on components, that actually they're managing profitability to a much higher level than the market was expecting.
All right, Matt, thank you so much. Matt Bloxham there of Bloomberg Intelligence. The yen had strengthened against the dollar to the strongest level in more than 2 months. It was trading at a 155 handle, right now at 156.07. It all sparked speculation. Japanese officials may have stepped in again to intervene. Let's bring in Bloomberg M Live's David Savage. David, did that happen? Obviously, the Japanese authorities are not commenting, at least yet.
Yeah, good morning, Vonnie. I think traders here in Asia have been very much on the lookout for follow-on intervention. We've had a lot of holidays. Japan markets closed again today, which provided a really attractive thin liquidity window for further intervention. And the action we saw today was very similar to what we've seen over the last week, where a sort of knee-jerk jump higher for the yen fades pretty quickly as there seems to be quite a bit of fundamental support behind higher dollar yen. But certainly the drop we've seen in oil is providing another boost for the yen.
Absolutely. So traders may try to chase this higher. How many more times can the Bank of Japan intervene? It's capped at a certain number of times, right, before it can't call itself a freely floating currency anymore.
Yeah, that's right. And I think the goal, is certainly to introduce two-way risk on dollar yen. And to that extent, I think authorities have, given if they have intervened, have been successful. And we saw in 2024 authorities, supposedly spend, upwards of $100 billion. And so, again, I think in the very near term, I think traders are going to be cautious about pushing dollar yen too much higher. But in the medium term, I think it's going to be a challenge because the yen is being pressured by external factors, namely trending higher oil prices, which today is working in the favor of the yen as oil prices come off, but also that the BOJ has been reticent to normalize policy rates and was thought to be behind the curve on inflation prior to the conflict. And so that interest rate differential is also really working against the yen as well.
Yeah, perhaps the monetary authorities are buying time for now. David, thank you so much. David Savage there. Now to other top stories trending on the terminal this morning. Novo Nordisk's new Wegovy obesity pill fueled sales in the first quarter. The struggling drug maker also said the worst profit and sales drop will likely be 12% this year instead of 13% as earlier forecast. Novo is slashing prices and relying on the new pill to put it back in the race with rival Eli Lilly. Samsung's market cap tops $1 trillion. Shares of the world's largest memory maker more than quadrupled over the past year on strong demand for chips used in AI. Israeli Prime Minister Benjamin Netanyahu and UAE President Sheikh Mohammed bin Zayed held a rare phone call after Iran attacked the Emirates on Monday. According to the state news agency, Netanyahu expressed support for all measures it takes to safeguard security. The call showed deepening ties between the countries. The UAE is one of only a few Arab countries to formally recognize Israel. Coming up, we'll bring you part of our conversation with Pfizer CEO Albert Bourla next. This is Bloomberg.
Tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemima Bersecci in Davos, Switzerland, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Pfizer's first quarter sales beat estimates, and that helped offset a decline in revenue from COVID products. CEO Albert Bourla spoke to Bloomberg's David Weston on how AI is going to change the drug maker.
AI will change the way that we do things. And as a result, because of this big disruption, we'll create a new list of winners and losers. And those that they will be able to transform themselves by using AI will be on the top of the list. And those that they will not will go in the bottom. Pfizer wants to be on the very, very top of this list.
One of the challenges for the CEO of such a big and complex company as Pfizer is you have to do more than one thing at a time. And I don't mean just develop more than one pharmaceutical at a time. You have to really manage the costs at the same time you're investing in the R&D and the development. How are you coming on that front?
You're right that you need to multitask if you are a CEO, and you mentioned some of the things that R&D, which is my passion, and I want to work with my scientists to understand what we can do. Of course, to control the cost, but we have to do also politics, if you are asking me. So I was spending more time in Washington than with my R&D people all the whole last year and this year in the beginning. So. You need to be able to multitask, and as long as you have a good compass, a North Star, you know where the organization should go, and you select the right people that they can take you there, you are okay.
You do spend some time in Washington, as I understand it, and part of that, I suspect, is with the FDA. Mr. McCary, and there are a lot of reporting about Mr. McCary. I'm not going to ask about that specifically, but how has the FDA been for you? They were going to revolutionize the way they approve new medicines. Are you seeing that in practical effect?
I don't see it yet, but I wouldn't expect to see it also in such a short period of time. I'm very encouraged with the comments that they made. Martin McCary made some comments recently about how he plans to modernize the FDA so that we can accelerate drug development, because China has already eaten our lunch. I have seen Dr. Oz speaking about how we can make HHS much more productive. So I'm encouraged by that. We haven't seen it yet, but I'm encouraged that they are thinking in the right direction.
There's been some back and forth, at least for those of us on the outside of the FDA, about the schedule for vaccinations for COVID. Has that affected your sales?
Yeah, it was mostly on the CDC, the schedule. There was some variation that FDA asked us to do on COVID, which we did, although we disagree scientifically there was any merit to do it, but we did it because they are FDA. CDC was a very painful story, I think, and they did things that hurt the credibility of this renowned institution. Things that forced, for example, the American Academy of Pediatricians to start issuing their own guidelines because
और गाइस ये क्रूड ऑयल में एक बाइंग का ट्रेड लगाया है, बट याद रखना ये कैंडल इसके नीचे क्लोज नहीं होनी चाहिए। इसके नीचे क्लोज हुई तो फिर ये ट्रेड इतना बड़ा जाएगा ही नहीं। बाकी अगर ये प्रीवियस कैंडल के ऊपर भी क्लोज हो गई तो फिर ये अपर रेंज में चला जाएगा छोटी सी। नीचे क्लोज होती है तो फिर नीचे सपोर्ट है और यही लेवल रेजिस्टेंस बन जाएगा। तो कोई बड़े टारगेट मुझे लग नहीं रहे। सेलिंग करी है तो ये लास्ट कैंडल का हाई लो मार्क करके रख लो। इस कैंडल का वेट करते हैं, क्लोजिंग कहीं जहां आएगी उसी साइड का सपोर्ट रेजिस्टेंस बन जाएगा ये ऑटोमेटिकली। बड़ी स्ट्रेंज सिचुएशन में चला गया है। ऊपर वो सपोर्ट था, ब्रेकडाउन हुआ, रीटेस्ट करके आया, वो अभी भी स्ट्रॉन्ग ही है। अगर इसने प्रीवियस कैंडल के लो के नीचे क्लोज कर दी 8890 के नीचे तो ये सपोर्ट जरूर है, बट फिर ये कैंडल अपने आप में रेजिस्टेंस बन जाएगी। और अगर इसने मान लो नीचे ब्रेक नहीं किया, ऊपर ब्रेक कर दिया तो भी इशू है। फिर ये हमारा एक रीटेस्ट का रेजिस्टेंस है और फिर ये सेम लेवल सपोर्ट बन जाएगा ऑटोमेटिकली। न्यूज़ बेरी सी थी, कंप्लीट बेरिस कह सकते हो। सेंसेक्स को देखोगे क्या मूव किया है, स्टिल गोइंग अप 76,800 से 77,000, 72,000 का कॉल 240 से 1,000 चला गया ऑलमोस्ट विद इन 30 to 40 मिनट। अभी भी नहीं रुक रहा है। तो ध्यान रखना इस बाइंग ट्रेड का, ज़्यादा रिस्क नहीं उठाएंगे। अगर ये कैंडल नीचे क्लोज हुई इस लेवल के नीचे तो ये लास्ट कैंडल जो बनी है 15 मिनट की, दैट इज ऑलमोस्ट डिसाइसिव कैंडल फॉर द प्राइस मूव। किस साइड मूव करेगा।
Top $4.50 a gallon. That's for the first time since July of 2022. Let's get to these markets then, because as I said a half hour ago, Axios came out with a report that the White House believes it's getting close to an agreement with Iran. It would be a one-page memorandum of understanding to set the framework for more detailed nuclear negotiations and end the current war. That said, the White House is looking for a response from Iran within 48 hours, so it's not clear what's happening on the Iranian side of things. The deal would involve Iran committing to a moratorium on nuclear enrichment, the US agreeing to lift sanctions, release billions in frozen funds, and both sides lifting Hormuz restrictions. As you can see, the market reaction was immediate. Brent crude down to 103 and change. WTI down to 95 and change. Futures, that might be a little bit of a different story. We already hit records all day yesterday, and really we were higher on every sector in the S&P 500. Let's take a look at yields as well, because they are plunging today. We had the 30-year right back down, the 10-year down more than 7 basis points to 435. Weakness to the dollar, and that VIX index trading with a 16 handle. We're going to analyze all of that in just a moment. Let's get to some individual movers first, though. Here's Natalia Knichevich.
Hi, Vani. Occidental Petroleum reported better than expected results yesterday. The company also reduced its debt to $13.3 billion, moving closer to its goal of $10 billion. But the stock is down, just like other energy stocks today, on hopes of U.S.-Iran peace deal. Now let's move to the technology space. Shares of AMD are up by 17% today. The company reported stronger than expected results. Yesterday, we saw that data center revenue came up by almost 60%, and the company management is confident that the company will keep providing stronger than expected data center revenue next year as well. Supermicro shares are up by almost 17%. Also, results came better than expected. Specifically, margins were really strong. And then in the healthcare space, shares of Novo Nordisk today are up by 6%. The company also posted better than expected results, saying that its obesity pill drove sales in the first quarter. And the management also said that this year's declines won't be as bad as expected, Vani.
Natalia, thank you so much. That's Natalia Knichevich. Joining us now is Keith Lerner, CIO and Chief Market Strategist of Truist. Keith, I think it's going to be a pretty volatile day. Would you be comfortable getting into this market today, given what we know, an Axios report based on reporting that the White House thinks we're close to some kind of an agreement with Iran?
Yeah, well, great to be with you. And to answer your question directly, yes, we still think this bull market has earned the benefit of the doubt, and it's not going to necessarily be a straight line like it has been more recently, but we still think ultimately this bull market has further to go. And, in general, the market, in our view, had already, really kind of sniffed out that we had moved past the peak of uncertainty. Normally, markets bottom not when there's full clarity, but just as you move past that peak of uncertainty, which was, over a month ago now. And then I guess just on the news today, I mean, on the margin, this does show you with oil prices coming down that there was still some concern embedded in those oil markets. So in some ways, this move down in oil prices is providing some additional fuel for the market. Now, if we get a headline that goes the other way, we could certainly see kind of the opposite reaction. But I think all in all, the tech story is actually the biggest story for this market.
Yeah, absolutely. Just one more item, though, on the breaking news first, if you don't mind, and that is that, you mentioned we could see a reversal. And, I mean, it's true, right? President Trump has tried a lot of things to get the U.S. out of the Strait of Hormuz problem. Maybe this is just the latest, and if that's the case, then would we see a really violent reversal of all the moves we're seeing?
I mean, it's absolutely, a risk. But I think in general, based on what we've seen over the last year, especially after that terrorist shock, I think the road is towards some type of agreement. And we're getting closer. It can be messy. It may not be straightforward. But, again, I think that you really have to look also beyond just these headlines that, we're having a profits boom away from this story. So if we had a pullback as a result of maybe a headline that was more disruptive or saying that we're not towards an agreement, I think investors pretty quickly would be looking at that as an opportunity to add to longs.
Well, as you say, Keith, semis at records, obviously the NASDAQ 100 and so on at records. How did we go from talking about bubbles and the potential for something to burst right before the war started to now, where everyone seems comfortable with these valuations?
Yeah, and we never really bought into the bubble talk for technology. If we look back historically, I mean, in the 2000 peak, the technology sector had a PE of over 50. Last October, when we had a short-term peak in the technology sector. The peak was around 32, and even as we're looking today, I mean, because since October of last year, when the technology sector peaked, we're only up about 5% from that peak. Now we're up a lot from the lows, but that's because we had a big sell-off. At the same time, what's really notable, Vani, is that from that peak of last October, the valuation for the tech sector is actually down from that 32 multiple down to about 24. And you say, why is that? Well, earning trends have been revised up at a really rapid pace. Now, listen, the semiconductor side is getting extremely hot. That rubber band is getting very stretched. There's a lot of hot money in there. But I would also say, here's one last stat on this, going back to that October period. The semiconductors, since that October peak, are up about 50%. The forward earning estimates are up double that, up 100%. So it is supported by earnings, but again, like the momentum is so strong one way right now. It's not necessarily, I would not necessarily be adding to semis today, but I do think tech remains leadership in this market.
So if you wouldn't be adding to semis necessarily, where would you be looking? Is there any discounted equity left in the space?
Yeah, listen, I think the broader tech story, maybe having more of the more diversified tech areas. So that way, if you see a little bit of pullback in semis, because I think still that's leadership. I just think, you're pretty extended short term. You're actually starting to see a little bit better action in software. I don't think software is leadership per se, but I think in general, I would still have maybe more broader technology, just not just on semiconductors. Small caps are also acting very well. What's notable about small caps, though, what's driving that, especially the S&P 600, is industrials. Small cap tech is actually up over 30% this year, and energy is doing well. So that's another area we like. The average stock or the equal weighted index actually isn't at a new high yet. So that's another area, trading around the median historical PE. And then, emerging markets are another area that we still like as well. So there's certainly other areas within this market, and it is, as far as the earnings side, pretty broad based.
Keith, can I ask you about this SEC proposal for companies to go to twice yearly reporting as opposed to 4 times? Would you be comfortable with that?
As an analyst that crunches a lot of data, I prefer more data to less. But from a market perspective, I think we'll be fine. I think what will happen is that some companies will report and keep it at a quarterly cadence, and other companies will not. And if you really zoom out a bit, if you look at an S&P chart and overlay that with forward earning estimates, ultimately markets will still move with earnings over time. But I think what can happen is if you have less guidance, you may have more drastic reactions when those earning reports come out if it's only twice a year. So again, I don't think it necessarily changes the long term. In the short term, I think it may cause more volatility because you just have less ongoing communication, as a whole.
All right, Keith, thank you so much for your time this morning. We really appreciate it. That's Keith Lerner of Truist. Now to other top stories trending on the terminal this morning. The SEC then unveiling a plan that would allow U.S. companies to report earnings semi-annually rather than quarterly. Move would reduce the amount of information publicly traded firms have to share with investors. Critics of the plan argue there is the potential for companies to bury bad news and that less frequent reports could increase the risk of insider trading. American Electric Power is threatening to remove itself from 2 of the U.S.'s biggest electricity grids over the length of time it takes to connect AI data centers. Frustrations over PJM interconnection, the largest regional grid in the U.S., in fact, are growing as wholesale electricity costs climb and reforms to serve AI demand move too slowly. Citadel CEO Ken Griffin doubling down on Miami. Griffin says he plans to make Citadel's Miami tower even bigger now in the face of his feud with New York City Mayor Zoran Mamdani. Speaking at the Milken conference, Griffin said Mamdani is triggering the trauma he went through in Chicago. Coming up, inching closer to a deal, the U.S. and Iran are reportedly working on that one-page memorandum of understanding to end the war. More on that next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Burrow.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. So, fresh peace talk optimism brewing as the White House says it believes it's close to an agreement with Iran to end the near 10-week war. This all according to a report in Axios. Bloomberg Government's Kate Ackley joins us from Washington. Kate, is it fair to say that we're hearing from the White House on this, but we really don't know who the White House is talking to or who's putting this together?
Right. And I mean, this sort of ties in with what we were hearing earlier this week about Trump's decision to suspend Operation Project Freedom, which was, where the U.S. was going to guide ships through the Strait of Hormuz, which is that very crucial pathway for oil and gas and a lot of other items. So it does indicate that Trump's trying to find a way to end this war. It's increasingly unpopular. We've seen it cause a rise in gas prices, and that obviously has political implications as well. Prices up to $4.50 a gallon is the latest news.
Yeah, I mean, the president won't want that sustained, right? And obviously the market is believing that this is leading to something, in terms of a memorandum of understanding, but that could all reverse very fast as well. But the president really has to do something about these gas prices, doesn't he?
Right. I mean, that's part of the reason why I think they really are. The Trump administration really is seeking an end to this. And again, it's increasingly unpopular in the public polling. That isn't good for, the midterm elections that are on the horizon for the Republican side.
So I want to talk a little bit about the elections and the primaries. Kate, Vivek Ramaswamy won the Republican nomination in Ohio. What do we think is going to happen in Ohio later this year? Is it potentially flipping back towards the Democrats, or are the Republicans digging in, on MAGA policies?
Well, in terms of, Ohio hasn't had a Democratic governor elected for, a couple of decades. But there are some indications, some of the political prognosticators moved that Ramaswamy will face off Democrat Amy Acton. So, there is a sign that could be competitive. In the Senate race, you've got Sherrod Brown there on the screen. Former Senator Sherrod Brown seeking to make a comeback. It's official. He, won his primary last night. He will face sitting Senator John Husted. that could be also a competitive race. We have, basically 6 months to go before Election Day. So that's sort of an eternity in our political cycles anymore. But I think it will certainly be a race that draws huge amounts of money, political money, outside money. We expect, big industry PACs could be involved in that race. And certainly a lot of attention, a lot of national attention will be on that Ohio Senate race.
That's for sure. Kate, thank you so much. That is Bloomberg Government's Kate Ackley. Turning to tech, Alphabet outperforming other Mag 7 stocks in the pre-market as the information reports on a deal with Anthropic. Let's bring in the host of Bloomberg Tech Europe, Tom McKenzie. So, another day, more Anthropic news. Tom, what's it today?
Yeah, and more co-investment. So this is the news from the information, as you said, that potentially a $200 billion worth of spend from Anthropic on Google and Alphabet's cloud services business over the next 5 years, which really has been seen by the markets as a validation of a cloud business at Google, an infrastructure business when it comes to its ability to support and power AI, and arguably its chips as well. And don't forget, Google has its TPUs, its own chips, which are increasingly in demand, particularly for the inference. So actually when we use AI. So it's a validation across all those metrics on this reporting. And so Alphabet getting a bit of a lift on that. Of course, Alphabet and Google in terms of the cloud business competes notably, of course, with Microsoft. But top of the list is really Amazon and what they're seeing in terms of AWS. So for many investors, this is validation that Google's very much in the race and is positioning itself in a strong role to kind of capitalize on those AI demands over a longer period of time with that potentially $200 billion worth of commitment from Anthropic.
Tom, last night, obviously, with AMD earnings, a blockbuster forecast. I think it took the market a little bit by surprise. It seems AMD is able to take a little bit more market share from NVIDIA potentially and even grow that pie.
Well, it's taking market share from Intel as well. It's taking market share from a number of competitors. It was a beat in the quarter. It was a beat in terms of the forecast for the current quarter. Yes, they have the GPU play, to which NVIDIA still dominates in terms of its production and demand for its own chips for AI accelerators. But to your point, AMD is increasingly carving out market share there, but also on microprocessors that go into data centers and CPUs. Again, part of that inference story. And again, AMD is seeing strong demand on that front. Just one stat that jumped out to me was the data center part of the business, which really speaks to those GPUs, that demand for AI accelerators. They saw growth there in terms of revenues of 57% year on year. So that just shows the strength that's coming through. And again, a reminder that AMD is well positioned as the hyperscalers commit to spend possibly $725 billion on CapEx through 2026.
Yeah, way more than we had expected. What about Supermicro, Tom? It seemed for a time that it just had trouble after trouble after trouble, but that might be starting to be behind it now?
Yeah, they've had some accounting issues they've had to wrestle with. They've had US prosecutors taking aim at one of the co-founders for apparent alleged shipments of some of these server racks to China. Not that legal case targeting the company specifically, but one of the co-founders. So yes, you're right, they've had to wrestle with a few issues. The earnings will provide some relief to investors in Supermicro that provides these servers. The margin was healthier, and it suggests that they're getting a control of costs as they try and ship and meet the demand that they're seeing for their customers and clients.
Tom, thank you so much. That is Bloomberg's Tom McKenzie. And do check out the next episode of Bloomberg Tech Europe, where Tom explores the battle between Waymo and Wave. That's out Friday, May 8th. Next batch of earnings under new CEO Josh D'Amaro. Geetha Ranganathan of Bloomberg Intelligence joins us now. Geetha, sentiment is a little muted around Disney. What will Josh have to tell us? I mean, he's obviously seen a few setbacks since he took over just not even 2 months ago.
Yeah, Vonnie, good morning. So it's all about the narrative, as you just pointed out, and sentiment has been a little bit muted. So I think it really is incumbent upon this new CEO to kind of reset the narrative a little bit. So we know that he has obviously been in charge of the parks division, but I think people are really looking for more color in terms of entertainment, in terms of streaming, and if they can really get that streaming growth kind of fired up, at least in terms of profitability. They've done a pretty good job so far, but it's really about setting more ambitious targets and seeing exactly what roadmap Josh D'Amaro has for the company.
So we'll essentially be looking for subscriber growth for Disney Plus, Hulu, and the fact that they're not spinning off ESPN now as well, I suppose, would add to that. And then I guess there's parks. Should that be good news as well? Is there the potential for a beat in any of these areas?
So I'm not really sure about a beat in the fiscal second quarter, which they'll be reporting shortly. It's really more about the guidance tone that they set for the rest of the year. So we already know that the quarter that they're going to be reporting, Parks is going to be a little bit light. That's because of a lot of pre-opening costs that they had to undertake for some of the new cruise ships that they're launching, the World of Frozen in Disneyland Paris. So there's a lot of that going on. And plus, we've seen some softer attendance trends. I think really what investors are going to be focused on is whether this is going to continue to be a second half pickup story, because that's what Disney has been telling us all along. But all of these new geopolitical tensions, gas prices, as you had pointed out, is that really going to force them to take their guidance down a little bit? And that will be pretty damaging, I think, to the Disney narrative, at least for the rest of fiscal 2026.
Yeah, great question. Will subscriptions go if gas prices stay this high? What about the early review of the Disney-owned and operated ABC stations? Is that going to trickle down to the bottom line in any way? Will Josh even get a question about it? I'm sure he will.
Yeah, I think, it's kind of a little bit of a PR nightmare for Josh. I mean, just kind of coming into the role. But it's not like Disney hasn't dealt with this before. Obviously, they had that whole blow up last September as well. In terms of financial impact itself, the ABC stations contribute less than, 2.5% of revenue of the entire company. I mean, this is a company that brings in about $100 billion in revenue. Financially, not a great impact, but obviously, yes, from a PR standpoint, headline risk, yes, it does have, quite a bit of implications from that perspective.
Geeta, amazing. Thank you so much. Looking forward to those earnings. Now that we have the background, Geeta Ranganathan of Bloomberg Intelligence there. Coming up, more earnings and Fed speak in your day ahead. That's next. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
You up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. Earnings from Disney, Uber, Kraft Heinz all reporting before the bell. Warner Brothers and Snap among those reporting after the market close. That U.S. Treasury Department quarterly refunding announcement comes at 8:30 a.m. New York time. Plus, we get Fed speak from Alberto Musalem at 9:30 Eastern, Austin Goolsbee at 1 p.m. Eastern. This is going to be the story today, though, this macro environment. Look at Brent crude trading below $102 a barrel. This on an Axios report that the U.S. is saying there's a one-page memorandum of understanding out there with all sorts of conditions that Iran has 48 hours to agree to, in which case that would set the stage for an immediate end to the immediate conflict and longer nuclear negotiations. Unclear what Iran thinks of this or how much Iran has been involved in the process, but it would involve things like unsticking frozen funds, taking off sanctions, both sides allowing the strait to reopen, and a moratorium on nuclear enrichment. This all, again, is according to the White House via an Axios report. Futures powering higher after setting records yesterday across the indices. That's it for Bloomberg Brief.
The Italian Open is underway in Rome. Bianca Andreescu won the battle of the former major champions as she took out Sofia Kenin to reach the second round. The 2019 US Open champ closing out the 2020 winner in Melbourne, 7-5 in the second set. And don't forget, you can watch all the action live daily and head on over to tennischannel.com to download the app.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market. You can get that from a bank. You can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
It's not hard to really look at the results we've seen and be that surprised that the markets continue to rally.
I would not be outright short risk. Like I said, the weight of earnings is still too strong.
For now,
earnings and capex are really driving this market.
AI and that trade maybe continues to drive the market.
Right now, we're anticipating about a mid-single-digit climb for the S&P 500 from here.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Wednesday, stocks up, oil lower. The president doubling down, pushing for a diplomatic solution as China's foreign minister is urging Iran to find a lasting truce. The average gasoline price across this nation topping $4.50 a gallon for the first time in almost 4 years. We start this morning with this reporting from Axios. Checking out, it reads as follows. The White House believes it's getting close to an agreement with Iran on a one-page memo of understanding to end the war and set a framework for a more detailed set of nuclear negotiations. That piece driving this price action. Equity futures up by 0.75% on the S&P 500. Equities up across the board. The Russell up by 1.5. Crude down. WTI lower by 9%, $93, and Brent just about holding on to 100, down by 8% this morning. That's helping yields fall by 7 basis points on a 2-year this morning. 10s down by 8, your 10-year 4.35.
We've seen this movie before in terms of some of the rhetoric, the verbal intervention on both sides. This time, however, it's being received by markets with a bit more credibility simply because it follows a lack of desire to escalate the conflict, number one, which we've seen on both sides, and B, this idea that China is getting more involved in talking with Iran about maybe cooling it, coming to the table and having some sort of diplomatic resolution. Those two factors leading this market to take these headlines a little more seriously.
We're working through this story just piece by piece. Allow me to share another section of it with you. In its current form, the MOU would declare an end to the war in the region and the start of a 30-day period of negotiations on a detailed agreement to open the strait and limit Iran's nuclear program and lift U.S. sanctions. There's still a lot of work to be done here.
Right. It's the start, potentially the beginning of the end when it comes to the diplomatic route between Iran and the United States. And not only that, we don't even know word for word what is in this one-page memo. And then we need to wait 48 hours for the Iranians to respond. So, yes, there's a lot of hopiumism, as you call it, a lot of optimism right now in the market. But I think it's important as well to be cautious.
Well, let's think about why we've got this hopium this morning. Gasoline prices north of $4.50 and evidence of the last 24 hours. Think about the last 24 hours. If there is a commitment to anything, it's not resuming hostilities, turning a blind eye to what's happened so far this week. And the aggression that Iran has shown, I think, showed you just how committed this administration was to not resuming this war.
Operation Epic Fury is over. That's what we learned last night. And there is a new phase that has to do with reopening the Strait of Hormuz, and that's where the emphasis is. That's the reason why this market wants to look through this. It is important to note, though, the reason why this market wants to look through any kind of pessimism coming from the Middle East is A, people don't know how to price it, and so they're sick of thinking about it. B, they like the earnings that they're seeing, and they want to get bullish, so they're looking for any excuse to get bullish. And C, they often have seen oil price shocks as transitory, temporary. They want to see this one, too. They've been trying to, move away from that kind of thought process over the past couple of weeks, and now they're doubling down.
It's not even Operation Epic Fury that Secretary Rubio yesterday said is over and they're moving on to a new phase. Project Freedom was supposed to be that new phase to escort, guide in a humanitarian capacity ships out of the Strait of Hormuz. The president last night decided that is also on pause before we got this Axios report. So there's a lot of momentum going towards they really want to take the offer.
This is not the only bullish pillar underpinning this equity market this morning. AMD, by the way, in the pre-market, and we'll spend some time on this throughout this morning. AMD is up by 18%. 18 in early trading. Coming up this hour, we'll catch up with Max Kentner of HSBC with stocks adding to fresh record highs. General Karen Gibson of Academy Securities as the U.S. pushes for a final agreement with Iran. And Jay Goldberg of Seaport, he joins us with AMD sending tech stocks much, much higher. We begin this hour with stocks rising on reports the U.S. and Iran are closing in on a deal to end the war. Max Kentner of HSBC writing any step closer to the Strait of Hormuz reopening would likely be taken as a significant positive. Max joins us now for more. Max, welcome to the program. Is a resolution to all of this a prerequisite for further gains?
No, I don't think so, because I think what we're forgetting is the big buyers and the big drivers of this rally has been really not really discretionary investors. You guys were just talking about, people want to get more bullish and people want to be, they're sort of sick of the geopolitics here. They want to go and focus more on the earnings side of things. I would view that slightly differently. In the last month and a half, I've barely met any investor that really had great conviction, which you kind of get if you've got a mark to market every day, right? And things are just flip-flopping around so much. So it's not like discretionary investors, both on the fast money and the real money side, have really put on new trades in size and in conviction. What's happened was two things. Was number one, I think that was the first leg, was unwinding of a crazy amount of downside hedges. That has helped. And number two was really that very depressed positioning of systematic investors, of momentum players, CTAs, volatility target funds. And actually, when you look particularly at volatility target strategies, they've actually de-risked a lot more than what the pickup in volatility would have suggested. So particularly the vol target strategies still have a bit more room to re-lever. And overall, all of our systematic positioning stuff is only about 35th percentile. It was much lower. It was toward 10th percentile a month and a half ago. But we're not even neutral. So I do think actually any kind of incrementally good news or less bad news on the geopolitical side is enough to keep that systematic buying going.
So, Max, you make a good point. I'd make an additional one. The Middle East is where people had low confidence. They had a lot of conviction on tech, and they've been crowding into that trade. AMD, an example of that again this morning. The stock is up by 18%. The numbers are great. First quarter sales up 38%. Revenue from the data center business up by 57%. Strong guide as well. We've seen these names absolutely rip, Max, over the last month or so, as people have crowded into names they have confidence in. If we do settle the issue in the Middle East, does it at least open the door, set the stage to a broadening out of this rally?
Yeah, I think it does. I think it does, particularly for some of the cyclical names. If we go, if the front end of rates goes down like it does this morning, not only in the US, but particularly in Europe, in Asia, really across the globe, that should set the stage for the more cyclically exposed industries, cyclically exposed sectors to really rally a bit more. That means in the US, you want to be looking at things like XRT, US retail, like home builders, like the regional banks. Look at things like BDC spreads, right? You look at business development companies' spreads. We've all been really worried about private credit in the last couple of months. The fact is that in the last 3 weeks, BDC spreads have come down an awful lot. And that should give also a bit of comfort to the higher beta, to the regional banks. But also, I think, where we're still maximum overweight in equities, we have that maximum overweight on, particularly in emerging Asia, where you've got both stories. You've got the potentially positive news flow around the Middle East, but you've also got that earnings and the tech and the AI and semi story behind of you. So you can play both. So to us, the real preference is still really in emerging Asia.
Max, can you have big tech continuing to outperform, even with a broadening out to this degree?
I don't think they will outperform that much anymore. I think it's not a case of what we had in January and February, where people were playing AI funding concerns. Remember when, what John just was saying, that people are piling in and crowding into the tech trade. That was very different 2 months ago. 2 months ago, we were talking about, okay, do I need software? Do I need commercial real estate? Remember, we had 2 weeks of every day some other industry was sold off because of AI. And people were actually piling out of the AI and the tech trade and were playing much more the AI funding concerns. That was what was driving tech and AI valuations to near 10-year lows when we compare it to the broader market. So I don't think going forward it's a question of, okay, I need to get out of tech and I need to forget about the AI story. I'm just going to play the eco-weight S&P or the Russell. It's a story of tech and some of the other cyclical stuff. So I think it's more the other ones catching up rather than tech really catching down.
I would love to have Jeff Curry or Amos Hochstein here listening to what you were saying as they talk about the concern about molecules that are not getting through the Strait of Hormuz and the pain that is potentially deepening every single day. At what point do you have to factor that into your growth projections, your optimism, given the fact that there has been a hit, even if it hasn't been fully experienced to date?
Look, I think people have been, to be perfectly honest, just flat out wrong on that. Because when you look at earnings, right, it's not that the equity market is pricing something completely different than the rates market and it's totally out of sync and they're pricing two different outcomes. No, look at the S&P nowadays. You've got to deal with the cards that you've dealt with. You look at the S&P, you look at the market cap, it's no longer an index that is that economically sensitive. You look at proper consumer cyclicals in the S&P, that's about 4% of market cap. So even if we were to feel some sort of effect on consumption in the next couple of months, it's unlikely that the S&P broad risk appetite coming from equity markets, from US equity markets, is the right place to play it. Just to give you an idea, tech and AI stocks, the ones directly related to tech and AI, they've been 28% of market cap just 2.5 years ago. That's now 50% of market cap. So what's much more important is, what are DRAM prices going to do in the next 2-3 months? Are they going to go up or go down? That's much more important to the broader risk appetite outlook that comes from the S&P or from the US equity market outlook, and then spans to credit and to other risk assets.
Max, if the market is moving on from what is going on in the conflict of the Middle East, is the next big potential catalyst going to be next week when President Trump sits down and meets with Xi Jinping?
Yeah, I think that could be a potentially really positive catalyst, because I don't think if nothing comes out of it, I don't think it's going to be that much of a negative catalyst. Whereas if we do have some sort of commitment or some sort of saying, look, you know what, we're going to meet in 3 months again, and we've got some agreement on some things maybe around investment already, that already, particularly for tech and for AI, could actually be a real positive. Think about things like NVIDIA, right? Or overall, when you look at imports now coming into the US, right, from semiconductors, that's gone up hugely. Look at semiconductors and other electric equipment import prices. That's in double digits now. That's how strong, really, the demand for AI and tech and semis is in the US. If there's something coming out, just some bits of like, yeah, you know what, we keep on talking, we keep on meeting, we'll schedule the next meeting already, I think that's enough. Given that low systematic positioning that we've still got, it's enough, really, for another leg higher in risk assets broadly, really.
Hey, Max, it's good to see you and great to catch up. Max Kentner of HSBC, bullish throughout all of this. And if you are bullish on this market, you are getting the best of both worlds so far this morning. On the Middle East, some encouraging signs, reportedly on the diplomatic effort. Crude is down by 9%. Front end of the futures curve at 93 on WTI. On Brent crude around 101. But it's not the only part of the trade this morning. Tech is absolutely ripping. Bramo, we've talked about it a couple of times already. AMD is flying in the pre-market.
They said that second quarter revenue will be $11.2 billion. That compares to the expectation of $10.5 billion. You pointed to this figure, the fact that its data center business grew 57%. I mean, we're talking about mind-boggling types of numbers. They're putting up growth rates that we had seen a couple of years ago and said it's not sustainable. The semiconductor rush is real. There is $725 billion of spending this year behind it, and that is what is sustaining a lot of this optimism.
17 to 18% rally in the pre-market so far this morning on that single name. Let's get you an update on stories worldwide this morning. There are many. With your Bloomberg brief, Yahara has more. Hey, Yahara.
Hi, John. The White House believes it's nearing a deal to end the war with Iran. Axios reporting officials have outlined a one-page memo of understanding, including Iran committing to a moratorium on nuclear enrichment, the U.S. lifting sanctions, and both sides reopening the Strait of Hormuz. Israeli officials responding to those developments, the country's energy minister saying Iran must agree to all U.S.-Israel conditions and that the Hormuz blockade should be maintained as long as talks are still underway. And as you all just said, AMD shares are soaring nearly 18% in the pre-market. The chipmaker reporting first quarter earnings that beat Wall Street estimates and a surge in data center spending boosting its sales forecast. Shares of AMD already up more than 65% so far this year. That's your Bloomberg Brief. John.
Yahara, thank you. Thank you very much. More from Yahara later this hour. Up next on the program, closing in on a deal.
We have total control. As you know, the blockade's been amazing. It's like a piece of steel.
If everyone's ships are not getting out, your ships are not getting out either. That's not an act of war. That's a defensive measure. It's a counter to what they have decided to do.
Up next, we'll catch up with General Karen Gibson of Academy Securities, live from New York City this morning. Good morning.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Here's the price action this morning. Session highs adding to record highs. Equity futures up by 0.75% on the S&P, higher by more than 1% on the Nasdaq. Thank you, AMD, for the tech trade this morning. We'll talk more about that throughout this morning. Turn to the bond market. Yields lower, particularly at the front end of the curve. We're down by 8 basis points, 386. Unlocked by this move in crude. We're down by 9% on WTI. It's a break in 93, 92, and just about holding on to triple digits this morning, 101. On Brent crude.
Yeah, this expectation that there are going to at least be talks. We've been seeing the tea leaves step by step of the idea that no one wants to really escalate. Now there's actual discussion about bringing the two sides together with the involvement potentially of China, at least on an advisory role. And that, I think, is a really important fact.
It's our top story this morning. Under surveillance, closing in on a deal.
We have total control. As you know, the blockade's been amazing. It's like a piece of steel. Nobody's going to challenge the blockade. And I think it's working out very well.
If everyone's ships are not getting out, your ships are not getting out either. That's not an act of war, that's a defensive measure. It's a counter to what they have decided to do. If no shots are fired at these ships and no shots are fired at us, we're not firing shots. But if we're fired on, we will respond, and we will respond with lethal efficiency.
So here's the latest this morning. The US and Iran reportedly nearing an agreement to end the war. Axios reporting Tehran could respond to key points within the next 48 hours. Joining us now to discuss is Tyler Kendall from Washington. Morning, Tyler.
Hey, John, good morning. Well, this is the latest sign that the White House is pushing for a diplomatic solution, and fast, as Axios reports that the U.S. feels that it is nearing closer to a memorandum of understanding to declare an end to the war and then kickstart a 30-day period of negotiations to get to a more detailed agreement. Now, you went through some of the details at the top of the program, but as it stands, the process would see a gradual reopening of the Strait of Hormuz over that negotiating period with the aim of getting towards a deal that would put curbs on Iran's nuclear program and see a lifting of U.S. sanctions. But importantly, on some of the finer points, Axios is reporting that progress has been made on Iran removing its stockpile of already highly enriched material, something that is a key sticking point for the U.S., and that also Iran could potentially agree to an at least 12-year uranium enrichment moratorium. But we know President Trump has previously said that he only wants to see a permanent ban. Now, with all this said, nothing is final, and U.S. officials in recent days have really been trying to underscore that fractured leadership in Iran could risk derailing any progress towards a potential deal. But still, it does come after President Trump just yesterday announced that he was putting in place this, quote, short-term pause for those efforts to help guide ships through the Strait of Hormuz. He says at the urging of Pakistan, of course, a key mediator. And after we saw the biggest flare-up in fighting since the ceasefire began. But, John, at this point, shippers are still left grappling with what to do next. Secretary of State Marco Rubio, before Project Freedom was put on hold, said that the U.S. knows that it is going to take time to build confidence with shippers to get them to agree to put their vessels through the strait, as the U.S. right now says that nearly 1,500 ships are part of that backlog.
Tyler, appreciate the catch-up, as always. Tyler Kendall down in the nation's capital. To build on this conversation, General Karen Gibson of Academy Securities writing, as long as Iran retains the ability to contest the strait, we could face enduring challenges to navigation. This may not end until we have an enduring diplomatic solution. General Gibson joins us now for more. General, good morning.
Good morning.
How much closer are we to that diplomatic solution?
Well, I think the fact that there's an exchange of points, obviously that we continue to talk, and that now we've paused and we'll wait 48 hours to hear what Iran has to say, that's a positive development. It will be interesting to see what Iran has to say. And this is kind of, it sounds a bit like what Iran has asked for, to decouple, let's address the navigation issues first, and then get into the details of the nuclear negotiations.
How difficult will that sequencing be?
I think it'll depend on a couple of things. And of course, I don't know what the details are in this one-page memo.
Okay guys, क्रूड ऑयल देखो सपोर्ट पे आया है, न्यूज़ तो काफ़ी ज़्यादा बेरिश है, स्टिल कंटिन्यू सेलिंग. क्रूड ऑयल में ध्यान रखना, कैंडल ओपन इक्वल टू हाई है, 2 लोअर सर्किट लग चुके हैं ऑलरेडी. ये ऊपर इक्वल टू हाई कैंडल है बट सपोर्ट पर ही है. एग्जैक्टली आप कह सकते हो इट इज़ ऑन अ सपोर्ट. नेचुरल गैस में तो कुछ खास बन नहीं रहा. ये लेवल अगर टूटा प्रॉपरली ब्रेक डाउन, सो वी कैन एक्सपेक्ट फॉल. मुझे लगता है होल्ड होना चाहिए, इतना इजीली ब्रेक होना नहीं चाहिए. अगर ये सक्सेसफुली ब्रेक हुआ तो फिर 8000 पे वापस आ जाएंगे. नेक्स्ट सपोर्ट इधर पे ही दिख रहा है. टाइम आ रहा है प्राइस यहाँ पर, ये पहली बार नहीं है, 2 बार आ चुका है. हायर हाई फॉर्म हुआ है शायद, आई थिंक. पहली बार में एक हाई बना है, दूसरी बार में हायर हाई बना है, थर्ड टाइम है. थोड़ा पुल बैक आ जाए और फिर इस तरह से गिरे तो बेटर है. बाकी यूएस और ईरान के बीच में देखना पड़ेगा क्या डिटेल्स हैं, अभी कुछ ज़्यादा कंफर्म नहीं है, बट इट इज़ देयर दैट यूएस एंड ईरान इज़ गोइंग टू एंड दिस वॉर. ना इजराइल की ओर से अभी कोई स्टेटमेंट आया नहीं है, तो देखना पड़ेगा इजराइल की ओर से क्या स्टेटमेंट आता है, बट बिग ब्रेकिंग कह सकते हो. Spokesperson for Iran Foreign Ministry, we are evaluating Washington 14-point peace proposal.
Right there, in the black. Right, you in the black. Yes, ma'am.
Thank you, Mr. Secretary.
Where you? No, right there.
Oh, me?
I know you both are wearing black.
Thank you.
She's closer. No, you don't have black. You have blue on. I'm colorblind, but I know blue and black.
Thank you so much.
Right there. Yes, ma'am. No, you. The first one I called on.
Thank you, Mr. Secretary.
Thank you. This is chaos, guys. Go ahead.
Welcome to the White House. You've long been.
According to Exodus, Washington and Tehran are now closer to a deal than any point since the war began. ठीक है, तो ज़्यादा रिस्क मत लेना. न्यूज़ बेस्ड मोमेंटम चल रहा है, पता नहीं कितना और गिर जाए. लो क्वांटिटी, ऊपर कोई सिग्निफिकेंट रेजिस्टेंस भी नहीं है कि सेलिंग वाला ही है. बाकी जो सेलिंग में अगर मेरे अकॉर्डिंग चाहें तो निकल सकते हैं. अब इस एरिया पे देखना पड़ेगा लिक्विडिटी कितने देर मार्केट होल्ड करता है. अगर ज़्यादा जल्दी ऊपर नहीं गया, यहाँ से कंसोलिडेशन हो गया, तो समझना ये ब्रेक डाउन ही होगा. ऑलमोस्ट 90% चांसेस रहेंगे. अगर यहाँ पर कंसोलिडेशन हो गया, बाइंग आनी है तो फास्ट आनी चाहिए, क्योंकि प्राइस सेलिंग में बड़ा फास्ट आया है. यहाँ से कहीं पर ही बायर एक्यूमुलेट होने का मौका नहीं मिला है, तो एग्जैक्टली सपोर्ट पाया है, तो बायर वहीं एक्यूमुलेट होंगे अगर बचे हैं तो. अगेन थर्ड टाइम प्राइस इज हिटिंग दिस लेवल. वापस $77. बैंक निफ्टी क्या क्लोज हुआ है आज. वाओ, आज सेंसेक्स ने लॉस करा दिया एक्चुअली न्यूज़ के बाद. अच्छा ट्रेड चल रहा था, सडनली न्यूज़ आई and Sensex blow out all the profit, ultimately close in negative in Sensex, because जब न्यूज़ आई उसके बाद से मार्केट रुका ही नहीं आज. एक्सपायरी है, देखते हैं। गैप अप ही लग रहा है मुझे तो, मोस्ट प्रॉब्ली कोई और न्यूज़ नहीं आती है तो मोस्ट प्रॉब्ली गैप अप ही होगा इंडियन मार्केट। डॉलर इंडेक्स 97.500 97 के नीचे टूटा तो फिर 95 पर भी वापस आ जाएंगे। गोल्ड सिल्वर उस केस में और ऊपर जा सकते हैं। पुल बैक एक बार आ जाए तो मेरे अकॉर्डिंग बेटर ही है इन क्रूड थोड़ा बहुत। अगेन डोंट टेक टू मच क्वांटिटी ओवर हियर। न्यूज़ बेस्ड मोमेंटम है, जितना सेलिंग आना था आ चुका ऑलरेडी। मार्केट डाउन, सेलिंग प्रेशर इज स्टिल देयर। लास्ट सपोर्ट 2 टाइम्स ऑलरेडी टेस्ट कर चुका है, इसको थर्ड टाइम आ रहा है यहाँ पे। बाकी 5:30 न्यूयॉर्क सेशन ओपन होगा तो मोमेंटम एक्सपेक्टेड है। एक डेटा भी है 5:45 क्रूड ऑयल की इन्वेंट्री भी इवनिंग पर रहेगी। फोरकास्ट देखोगे लास्ट टाइम से थोड़ा ज़्यादा एक्सपेक्ट कर रहे हैं। बुलिस होगा प्राइस के लिए अगर फोरकास्ट के सॉरी बुलिस डेटा एक्सपेक्ट कर रहे हैं, तो अगर फोरकास्ट के अकॉर्डिंग डेटा आता है लास्ट टाइम से ज़्यादा, इट इज़ बेरिस। तो फोरकास्ट क्रूड ऑयल की इन्वेंट्री का इट इज़ बेरिस, ठीक है। फोरकास्ट अगर फोरकास्ट के अकॉर्डिंग डेटा आया तो लेट्स सी डेटा फोरकास्ट के अकॉर्डिंग आता है या फिर नहीं आता है। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। इम्पैक्ट तो इलेक्शन का भी नहीं पड़ा था जितना मार्केट में आज इस न्यूज़ का पड़ा है। देखना पड़ेगा इंडियन मार्केट ओवरऑल लॉन्ग टर्म में ऊपर जाता है या फिर डाउन ट्रेंड में थोड़ा जो बना हुआ है कंटिन्यू करता है। एंड दिस डेटा इज ऑल्सो इंपॉर्टेंट, नॉन एडीपी नॉन फॉर्म एम्प्लॉयमेंट चेंज। इंडिया का आज पीएमआई का डेटा आया था, दैट इज ऑल्सो गुड काइंड ऑफ, नॉट टू मच गुड बट इकोनॉमिकली ठीक ठाक ही था। Look at this this candle again open equal to high। लास्ट 3 कैंडल कंटिन्यूसली ओपन इक्वल टू हाई बन रही है। यहाँ पर भी सेलिंग हो रही है बिग प्लेयर्स में. अगेन आई एम रिपीटिंग, सपोर्ट पे जरूर है, थर्ड टाइम आया है इस सपोर्ट पे. कंटिन्यूसली ओपन इक्वल टू हाई बना रहा है बिकॉज ऑफ द न्यूज़ ऑलरेडी आ चुकी है, बट आफ्टर इफेक्ट इज देयर. डोंट टेक मच क्वांटिटी, ज़्यादा रिस्क मत लेना. यहाँ पर प्राइस कंसोलिडेशन नहीं होना चाहिए. अगर जाना है तो फास्ट बाइंग आनी चाहिए. कंसोलिडेशन में फंसा तो फिर ब्रेकडाउन के चांसेस ऑलमोस्ट 90% हो जाएंगे. नेचुरल गैस में अभी कुछ नहीं है, इसमें भी न्यूज़ का ही थोड़ा बहुत इम्पैक्ट पड़ा था. ऑलरेडी काफ़ी गिरा हुआ है, वापस 250 के आसपास पहुंच गए. देखते हैं क्या ये थोड़ा सा और डाउन आता है क्या नेचुरल गैस. तो नहीं है यहाँ पे. कैंडल का ध्यान रखना, फिर रिपीट कर रहा हूँ. क्रूड ऑयल ओपन इक्वल टू हाई कैंडल, लास्ट कैंडल तीनों ओपन इक्वल टू हाई है. ये कैंडल भी ओपन इक्वल टू हाई है. ओपन इक्वल टू हाई पर डायरेक्ट एंट्री मत करना. अपना ओपन इक्वल टू हाई एक बार निकाल दे, फिर देखते हैं. वैसे भी कमी क्वांटिटी करेंगे, इवन दो सपोर्ट पर ही है, बट स्टिल काफ़ी सेलिंग का प्रेशर बना हुआ है. नेचुरल गैस नहीं गिरा उतना जितना गिरना चाहिए था लॉजिकली, मे बी बिकॉज ऑलरेडी गिरा हुआ है इतना। स्टिल लग रहा है शायद कंटिन्यूएशन में थोड़ा जाना तो चाहिए अगर कोई न्यूज़ नहीं आती है। लास्ट सेलिंग वाली कैंडल में काफ़ी हैवी वॉल्यूम आया है। नीचे नेचुरल गैस में सपोर्ट ही है 250 456। अभी भी ओपन इक्वल टू हाई ब्रेक नहीं कर पा रहा है। क्रूड ऑयल स्टिल ओपन इक्वल टू हाई एंड लास्ट 3 कैंडल में से एक भी कैंडल का ओपन इक्वल टू हाई ब्रेक नहीं किया। दिस कैंडल ओपन 8797 हाई 8797। कैंडल का ध्यान रखना, फिर रिपीट कर रहा हूँ, ओपन इक्वल टू हाई ब्रेक होना जरूरी है एंट्री के लिए। डायरेक्टली ओपन इक्वल टू हाई पे सपोर्ट पे बाय नहीं कर सकते, लाइक ओपन इक्वल टू लो पे सेलिंग नहीं करते रेजिस्टेंस पे। अगर ऐसे ही जाता चला गया और 2 कैंडल एक के नीचे क्लोज कर गई फिर तो बाई करेंगे ही नहीं। कि अगर इसको देखो ब्रेक करना है तो प्रॉपर ब्रेकडाउन होना चाहिए तभी रिटेस्ट कर पाएंगे, अदरवाइज नॉर्मल ब्रेकडाउन हुआ तो भी रिटेस्ट नहीं होगा। इस अगर ब्रेकडाउन हुआ तो चल गया अगेन ओपन इक्वल टू हाई। क्रूड ऑयल तो ऑलमोस्ट ओपन इक्वल टू हाई करके ब्रेकडाउन के करीब है। याद रखना ओपन इक्वल टू हाई के ऊपर निकल जाए प्राइस तभी एंट्री करना। ऑलमोस्ट क्लोज होने वाली है। इसके नीचे अगर एक और कैंडल क्लोज हो गई तो फिर ये ब्रेकडाउन हो जाएगा सिंपल सा। क्लोज हो गई तो विक बनाई तो ब्रेकडाउन कंसिडर नहीं कर सकते, फिर उसका लो कंसिडर होगा एज अ ब्रेकडाउन। ऊपर गया तो मुझे लग नहीं रहा यहाँ तक जाने की भी पॉसिबिलिटीज की। इतना ही चला जाए काफी रहेगा। क्रूड ऑयल कैंडल ऑलमोस्ट मुझे लगता है, देखो अगर क्लोजिंग हुई नीचे तो फिर एंट्री के लिए फिर तो मुझे लगता नहीं मिलेगी वापस बाइंग साइड पे। सेल भी नहीं कर सकते, वेट करना पड़ेगा, बहुत सेलिंग आ गई है ऑलरेडी। गिरता है तो जाएंगे वापस। बाइंग की एंट्री भी अब तभी होगी जब प्राइस वापस इस ओपन इक्वल टू हाई के ऊपर कहीं सस्टेन करने आएगा। बाकी दोबारा एक और लोअर सर्किट लग गया है। लोअर सर्किट में देखते हैं वापस रिकवर करता है तो तभी बाइंग करेंगे, वापस गिरता रहा तो अवॉइड थर्ड लोअर सर्किट फॉर इंट्राडे। देखो वापस थोड़ा सा नीचे आता है, ये लेवल का तो हो गया है, कैंडल एक के नीचे क्लोज, ये लेवल गॉन, इसकी अब जरूरत नहीं है। नेक्स्ट लेवल दिस, ठीक है मैं अभी इस पर रिटेस्ट एक्सपेक्ट नहीं करूंगा जो सपोर्ट ब्रेक हुआ है, बिकॉज ऑलरेडी काफ़ी हैवीली गिरा है मार्केट, तो लगता नहीं है उस पर इस तरह से रिटेस्ट मार्केट होल्ड कर भी पाएगा। बाकी उस लेवल के ऊपर बायर तभी आएंगे जब अब ये ओपन इक्वल टू हाई के ऊपर प्राइस निकलता है। नेक्स्ट सपोर्ट आप इस लेवल को मानेंगे। अगेन सेम सिनेरियो है, ओपन इक्वल टू हाई पे बाई मत करना, नॉर्मल कैंडल पर ही बाई होगी फिर से, क्वांटिटी कम टारगेट बढ़े। ठीक है, ओपन इक्वल टू हाई पे मत लेना, बस इस चीज़ का ध्यान रखियो। बाकी नेचुरल गैस में कुछ नहीं है अभी, इवन दो सपोर्ट पे भी आता है तो भी अवॉइड ही करेंगे। स्टिल ऑन लोअर सर्किट, एक बार ओपन हो फिर देखते हैं कहाँ पर ओपन हो रहा है। ठीक है, नॉर्मल कैंडल ही होगी, अगर ओपन होता है तो नॉर्मल कैंडल पे दिख रहा है ओपन होता हुआ। ओपन इक्वल टू हाई बनना, क्लोज बंद। ओपन इक्वल टू हाई पे मत लेना, ठीक है, नॉर्मल कैंडल पर ही एंट्री करना है, क्वांटिटी थोड़ी कम। लास्ट लेवल पे जैसे ओपन इक्वल टू हाई बन रहा था नहीं ले सकते थे। ठीक है, ओपन हो गया है लोअर सर्किट, फिर से ओपन इक्वल टू हाई है कैंडल, लुक एट द कैंडल, फिर से ओपन इक्वल टू हाई। 8535 ओपन, हाई 8535। ठीक है, सेम ही सिनेरियो है अपना, ओपन इक्वल टू हाई निकाल देगा एंट्री कर लेंगे, नहीं निकालेगा तो फिर लेट इट गो, जाने देंगे नीचे। दिस कैंडल अगेन ओपन इक्वल टू हाई। कल एक्सपायरी भी है क्रूड ऑयल ऑप्शन की 7th of May। NSE क्रूड ऑयल ऑप्शन एक्सपायरी, नॉट MCX। NSE ऑप्शन में ट्रेड कर रहे हैं, ध्यान रखना। प्रीमियम पुट के काफी ज्यादा इंक्रीज हो गए बिकॉज ऑफ सडन फॉल। नेचुरल गैस में भी वेट करेंगे, अभी डायरेक्टली कुछ कर नहीं सकते, थोड़ा सा कुछ बन नहीं रहा है इसमें खास। इंपॉर्टेंट लेवल रहेगा इसके नीचे भी हुआ हो तो 7000 ही है इसके नीचे। Extend losses on US-Iran peace deal hopes. होप थोड़ी प्रॉफिट बुकिंग तो दिखाए क्रूड.
In late February, early March, when demand for crude oil is at its weakest. Then we went through March, April, when refineries are in their turnaround season, their maintenance season. They are buying fewer barrels of oil, getting ready for the summer. Well, guess what? The summer is here, or it's about to be here. Refiners are coming out of their maintenance season. They have to buy these barrels, and therefore that is keeping the bid in the market. And that is most likely kind of the impetus of the White House to push this narrative that a peace deal is almost afoot because the hammer is about to hit the market. The demand, the one variable that's been missing from the market, has now returned, and it's going to return with a vengeance in the weeks ahead.
Also, it comes, as Jonathan has been saying, U.S. gasoline is above $4.50 a gallon, the highest we've seen since 2022. Could we get to $5 in the next few weeks?
Not likely. So what we've seen here, and the Federal Reserve has a study that's called Rockets and Feathers when it comes to retail gasoline prices. When we see a disruption in the flow of oil, prices at the pump will take off like a rocket. But then when we see some sort of resolution to whatever disruption it is, prices fall back to earth like a feather. So there will be a lag. Now, retail gasoline prices on average, where you're looking at the EIA or AAA, are about $4.55 on a national average. They're going to remain there for the next few weeks. Can we get to $5? At this point, I do think it is unlikely given where wholesale gasoline prices are trading in the United States. So if we are not at the peak of retail gasoline prices currently, we are going to near that price. We're going to near that level within the next few weeks. But that's not to say we're going to see a continued pullback, because keep in mind, in 3 weeks, 4 weeks, it's the Memorial Day holiday. So now prices will begin to remain high. So that feather aspect will remain high. Prospects of $5 gasoline, looking at 10 years worth of regression, is very limited proposal at this point.
Stephen, it's good to see you. It's good to hear from you. Stephen Shock there of the Short Group. The most encouraging sign out of all of this reporting so far this morning. The most difficult point to negotiate is going to come later in the process, and that's Iran and their nuclear ambitions.
People want to reopen the Strait so we don't have a Memorial Day Halloween, because that would be problematic, but that is how commodity strategists could potentially see it.
What did Paul Donovan say? Sinking into the abyss earlier, right?
Yeah, we're not doing that right now.
We'd like to avoid all those things.
Exactly.
Geetha Raghunathan joins us next.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Check it out, big moves in crude. We're down by more than 10% on Brent. Similar move on WTI. WTI breaking 90 earlier in the session, down by 11%, down by close to 11 on Brent crude. In the bond market, yields down across the curve. 2's down by 8, 10's down by 8, the 10-year at 4.34. Later on this morning, quarterly refunding coming in about 60 minutes' time. Where on the curve will the Treasury issue throughout the quarter? That's an important topic of conversation, not just for this quarter, but for the next several years as well. Take that move in the bond market for now. Look at the equity market. Equity futures up across the board. On the S&P higher by 1%. Outperformance on small caps. On the Russell up by 1.9. Just a massive rally this morning.
The people who have been worried, bless their hearts, but ultimately it hasn't come to fruition, at least not in markets. Even as they point to the physical world, it hasn't come to fruition. Earnings have been good. People point to the resilience of the U.S. economy, and people point to the tech trade. And frankly, you can feel that people want to be optimistic and buy. You just wonder, are there any shorts left out there to potentially be skeptical of some of what we're hearing? There's plenty of skepticism among analysts and among Anne-Marie and among commodity strategists, but do we see it among market participants?
Was that south-soothing? Just a little bit.
100%.
Right.
Are you kidding? It's everything I say.
Lisa loves when the roles change, and I'm a little bit more pessimistic.
Projecting just a little bit.
It's great, yeah.
Projecting just a little bit. If you're just joining us, welcome to the program. I just want to give you an update on what we understand so far. This is coming from the team in Washington, D.C., and from the whole of the Bloomberg team worldwide working on this story at the moment. So as we understand, Iran is evaluating a new proposal from the U.S. to end the war. Washington's one-page memorandum of understanding will, if Iran accepts it, lead to the gradual reopening of the Strait of Hormuz and lifting of the American blockade on Iranian ports. This all according to one person familiar with the matter. Nothing has yet been agreed, and I think it's important to keep going over on that point. Nothing has yet been agreed, but the sticking point of all of this is nuclear and nuclear ambitions and the nuclear program. And as we understand it, that would come later in the process. And I think that point is actually quite important, because if you want to open the Strait of Hormuz and you want to do the nuclear program first, it's unlikely that strait is going to get opened anytime soon, because that program will take a long, long time. The negotiations way more than 30 days.
We're talking months, maybe years, in terms of negotiating a real comprehensive nuclear agreement. I think it's important that you continuously say, yes, this does seem like, according to the Axios reporting, the closest these two sides have been to maybe getting some sort of one-pager memorandum of understanding to move forward. This would feel like the very beginning of the end of this conflict. I wouldn't say crisis over.
Not yet, but getting closer. Up by 0.9% on the S&P 500. Some single names this morning. Your morning movers, Yahara has more. Hey, Yahara.
Hi, John. We are seeing AMD absolutely ripping this morning, adding fuel to what's been a blistering run for the chip maker. Shares are up now more than 19% in the pre-market after its forecasts blew past estimates due to data center revenues surging 57%. And while NVIDIA still dominates when it comes to AI chips, customers are increasingly looking for alternatives, and that is clearly benefiting AMD. Turning to earnings, we've gotten a string of good reports, and we start with Uber. Shares are soaring nearly 10% in the pre-market after bookings last quarter expanded at their fastest pace since 2022, and the forecast for bookings also came in better than expected. CVS is another one delivering a beat and a raise. Shares are up 5%. Strength at its Aetna insurance business helped drive the beat, with medical costs coming in lower than expected. John?
Hey, Yahara, thank you. Thank you for the update. On our radar this morning, this is the top story. Iran evaluating a new proposal from the United States to end the 10-week war. According to a one-page memorandum of understanding, if Iran accepts it, it will lead to the gradual reopening of the Strait of Hormuz and the lifting of the American blockade on Iranian ports. This is our latest reporting this morning. Nothing has yet been agreed to, but detailed negotiations on Iran's nuclear program will come later in the process. Axios, of course, the first to report this earlier on this morning. We'll keep building that story for you. Elsewhere, China's foreign minister, a meeting with his Iranian counterpart in Beijing took place today, pushing Tehran to continue negotiating with the US for a lasting truce. President Trump is planning to travel to China for a meeting with Xi Jinping just next week. And finally, the US ambassador to the EU saying Washington will impose 25% tariffs on cars and trucks from the bloc soon if it doesn't swiftly ratify a long-delayed trade deal. The EU arguing the move would violate the originally agreed-upon 15% tariff ceiling. We'll catch up with the trade ambassador, Ambassador Greer, a little bit later this morning.
We heard from the president, and he was the one before the weekend that came out with his Truth Social post. I think this administration just thinks that it's moving too slowly in Europe. Europe is trying to ratify this. They've added amendments, so obviously this is going to take a long time. Was that truth just supposed to be a carrot to really try to force them? Carrot and stick approach, really that would have been the stick to get them over the finish line? Or do they actually want to open up this portfolio once again and have this trade agreement with the European Union? I think this is just them trying to nudge the Europeans along, but we'll see what Jameson Greer says.
It feels very emotional on the European side. When you look at some of the rhetoric, the French trade minister said, "We have a more difficult environment now, unstable, with weaponization of mutual dependencies, and so we have to act accordingly." There is a sort of a difficult tension here between people wanting to get some sort of deal done, 15% in terms of the tariff on certain European goods in order for removing tariffs on certain U.S. goods. They want to get it over the finish line, but there is an emotional desire to want to penalize the United States for some of the actions that it's taken, and all of what's going on in Iran has just added to that. You can feel that really underpinning some of the negotiations and reporting that's been coming out.
This started really a long time ago, but really amplified over in Davos, Switzerland at the start of this year, when the president started going after Greenland. And there were some pretty contentious headlines. And then Prime Minister Carney of Canada talked about a rupture. And Macron laid it on thick as well. And things have never really been settled since then. In fact, they've just got worse since the end of February, the start of March, when this war started.
Europe feels betrayed. Canada feels betrayed because ultimately these were alliances that they had relied upon, and they feel like there has been a breach in behavior. The United States says, well, there was a breach of behavior a while back and we were being taken advantage of for a long time. You've got Europe and you've got Canada saying, how could you just totally do a 180 on us? My key question is, who are the allies and what determines who are allies going forward, given that there has been some sort of breach in the understanding, at least so far?
In the next hour, we'll catch up with Ambassador Greer, so look out for that conversation right here on Bloomberg TV. Let's talk about the earnings. Lisa's talked about it several times. Fantastic numbers coming out of corporate America, including shares of Disney. They're rising in the pre-market, up by 4%. The company reporting improved profitability in its streaming business and saying guests are spending more at its parks and on cruises. Geetha Raghunathan of Bloomberg Intelligence joins us now for more. Geetha, if people are worried about crude and energy prices, we're certainly not seeing it in these numbers, are we?
No, we're not. And this is what I think investors were really worried about, John, kind of coming into this quarter, you know, rising gas prices, all of this geopolitical tension, whether it would have a palpable impact on theme park demand. And what we saw Disney report for fiscal second quarter was actually a 5% increase in operating income. We were expecting only about 2%. And this is despite a very, very tough economic backdrop. And the better news is that they've pointed to strength and a pickup in the third quarter and the second half of the year. So all in all, a really strong report from Disney.
Geetha, do you think this is a Walt Disney experience, unique thing that people just keep spending on, or are you seeing this across the sector?
I think a lot of it, John, is the Walt Disney experience. And we've seen kind of this move towards this premium, towards getting this more premium experience. And we saw that in the numbers, too. So if you just look at visitation and attendance has actually been a little bit soft, especially from international visitors. We've seen them kind of pull back a little bit. But what we're really seeing is strength in per capita spending by guest, you know, and this is really what is driving revenue and driving operating income. And a lot of that is that premium experience that, you know, people are so willing to pay for, the Disney brand.
How much, just more broadly, is Disney seeing consumers accepting price increases at its direct-to-consumer outlets, its Disney Plus offering, as well as at parks? I mean, beyond just the premium offering.
We are seeing strong pricing power. And, you know, we saw that in the streaming product. So really good streaming growth. A lot of that is being driven by their content. So they pointed out Zootopia 2, which has been huge for them as a theatrical movie, and of course now doing really well on their Disney Plus streaming platform. And really, if you kind of look at Disney, they've been very, very aggressive in terms of price increases. So just over the past 4 years, streaming prices have gone up around 70%. And consumers have been willing to absorb that. So so far, it's been working pretty well for Disney. Of course, the one other thing that they get, the Disney Plus, the Hulu, and the ESPN, typically tends to be a much more compelling value proposition. And that has also definitely helped them.
How much, Geetha, is this a reflection of the new CEO, Josh D'Amaro, who came from the experiences from the theme parks and other activities division, versus just a continuation of what Bob Iger started?
Yeah, this was really, I would say, a big litmus test for Josh D'Amaro, and I think he came out really, really strong. So a lot of the numbers that we're seeing today in terms of the parks numbers, those are a result of all the investments and all of the planning and all of the initiatives that were undertaken when Josh D'Amaro was heading the parks division. I think really what investors want to see now is kind of a more balanced narrative. So we've seen kind of the pendulum swing a little bit from film, from streaming to experiences, which is, the parks division makes up about 60% of operating income. But as you have, a tougher and tougher economic backdrop, this whole prospect of rising oil prices, I think investors want to balance out those risks a little bit with more kind of energy in the entertainment division. And that's exactly what we see in this 3,000-word letter that, Josh D'Amaro penned today. So it's a little bit of the continuation of the work that both Bob Iger and Josh D'Amaro did, but obviously a lot more work to be done in terms of reinvigorating the content engine, because at its heart, I mean, Disney is one of the greatest storytellers in the world.
So what else could we see him do when it comes to this content portfolio and reinvigorating it?
Yeah, so really what he's trying to do now, and I think the Bloomberg team broke a story a few days ago, is kind of creating this whole super app. So you do have the Disney Plus app, which is obviously the streaming content. But is it going to be a super app for all of Disney content? So are you going to be able to buy movie tickets? Are you going to be able to buy theme park tickets, merchandise, video games? That is really what this new management team is looking at for the future of Disney, kind of this one big super app.
Geetha, appreciate your time. Geetha Raghunathan there of Bloomberg Intelligence, breaking down the results from Disney, the Walt Disney Company trading in the pre-market higher by some 4%. Let's get you an update on news worldwide this morning with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. Anthropic unveiling new AI agents designed to handle financial services tasks, including drafting pitch decks and reviewing financial statements. The new tools are aimed at professionals across banking, insurance, asset management, and fintech. Voters in Ohio backing Vivek Ramaswamy's bid to be the Republican nominee for governor. He'll face Democrat Amy Action in November to replace term-limited Republican Governor Mike DeWine. And Citadel CEO Ken Griffin saying he plans to make the company's Miami tower bigger after New York Mayor Zohran Mamdani name-checked him in his pledge to charge more taxes on second homes. Griffin saying Mamdani is making it clear they need to double down on their Miami bet. That's your Bloomberg brief. John.
Hey, Yahara, thank you. Thank you very much. Getting a response from the President of the United States out on social media just moments ago. He writes the following. I'll share it with you verbatim. Assuming Iran agrees to give what has been agreed to, which is perhaps a big assumption, the already legendary Epic Fury will be at the end, and the highly effective blockade will allow the Hormuz Strait to be open to all, including Iran. If they don't agree, the bombing starts, and it will be, sadly, at a much higher level and intensity than it was before. The President of the United States just moments ago.
So he's giving that off-ramp, talking about Iran needs to agree to this, that basically says the blockade would end, allowing the Strait of Hormuz to be open as well. But if they don't, it comes with a warning. And the president is basically saying, I'm prepared to go back to the military option.
Crude down 10%, WTI 91, Brent crude 98. Up next on the program, funding the AI race.
These companies are using their balance sheet capacity thoughtfully, strategically, not all at once. Their balance sheets are so low leveraged that they have capacity to add a significant amount of debt.
They're spending a lot of money, and some companies like AMD are making a lot of money. That stock is flying in the pre-market. We'll catch up with Matt Brill of Invesco. He joins us next.
about 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
Front and center, this is the headline this morning. This move in crude, WTI and Brent. WTI down by 10%, Brent down by close to the same. It's a break of triple digits. It's 99.30 on Brent crude. The president just moments ago saying this: assuming Iran agrees to give what has been agreed to, which is perhaps a big assumption, the already legendary Epic Fury will be at an end, and the highly effective blockade will allow the Hormuz Strait to be open to all, including Iran. If they don't agree, the bombing starts, and it will be sadly a much higher level and intensity than it was before. The President of the United States.
If we were on a different day, this would dampen some of the enthusiasm out there. It isn't a done deal yet. It still is in their hands. Nonetheless, people are moving on. People are saying, look, the fact that people are even discussing some sort of resolution here, that there's been a memorandum of understanding, is enough for us. A little bit of a fade after that, but this is viewed as just an effort to keep some leverage in the discussions around negotiations.
Two things the president says here, perhaps a big assumption. I would agree. That is a big assumption that the Iranians are ready to come to the table and agree on all of the points the Americans are putting on this one page. And also, the president says the highly effective blockade will allow the Hormuz Strait to be open to all, basically saying that the blockade and U.S. forces will remain in the region. Is that going to be acceptable to this regime to then not go after and contest ships going through the Strait of Hormuz?
Is this story not the only story driving markets today? You'll see equity futures up across the board. You'll notice small caps are outperforming, the Russell up by around 2%. You'll also notice the really strong performance still in big tech in America, with the Nasdaq higher by around 1.5%. AMD in the pre-market higher this morning by close to 20%. Let's talk about tech. Under surveillance this morning, funding the AI race.
These companies are using their balance sheet capacity thoughtfully, strategically, not all at once. We already have an above consensus forecast for U.S. IG issuance of $2.1 trillion. That would be a new record. Their balance sheets are so low leveraged that they have capacity to add a significant amount of debt. Not all of that will happen in the traditional U.S. IG market because investors will need to manage those issuer concentration constraints.
Here's the latest this morning. Alphabet raising $17 billion in its latest AI funding push, selling its biggest ever euro-denominated bonds and its first Canadian dollar notes. Matt Brill of Invesco saying Alphabet has diversified the most away from the dollar among the US hyperscalers in its push to fund AI infrastructure. Matt joins us now for more. Matt, good morning.
Morning.
How does it feel that debt investors are funding these massive gains in the equity market, with AMD higher by 20% of the pre-market? That's not the first question. We'll get to that in a moment. This is the first question. You can think about that one. Why are we issuing in Canadian dollars in Europe? Why the big push to diversify the currencies that this debt is issued in?
So I think the simplest answer is they need every dollar they can possibly get. So they've already tapped the U.S. market several times.
Alphabet went to Europe earlier in the year. They did 100-year in Europe earlier in the year, in the UK. But they need more. And so they didn't want to come to the U.S. market this time. And I think they're going to save that for later if they need it. But for now, it's almost like going to the couch cushions. You know, the Canadian market isn't that big. And to do $8.5 billion of Canadian dollars, that is an enormous deal. It's the largest deal in history over there.
So now the AMD question. So I'm sitting in AMD stock just receiving all the money. Thank you for the debt investors who have been funding all of this. What does the debt investor get out of this?
So we get a higher premium than we've ever gotten in tech before. So these used to be really tight trading names that really didn't have a lot of spread to them. They now have some yield to them. But at the end of the day, the focal point is whether or not the U.S. IG market or the global IG market can continue to fund this. Because if this stops, then I do think that the overall trade ends. But for now, we continue to like this. We are getting a little bit debt saturated, debt fatigued, tech debt fatigued. But overall, it's still, these are great companies that have really low lever balance sheets.
How would Canadians' debt market feel about being compared to the couch cushions? You have to go there to find some nickels under their couch cushions. I'm just saying.
Let's hope Carney's not listening this morning.
He might take some issue with that. To the point, though, that you're saying we are getting a bit saturated. At what point do you actually expect to start seeing meaningful pushback from investors? Because so far, maybe some people say that they're not that happy with it, but they're buying in droves.
Yeah. And what's interesting, if you look at like a name like Meta and Oracle, they're actually telling you how often they're going to issue. But they're being truthful, but they're not being truthful, and I'll tell you why. So Oracle says we're not going to issue any more. They did $25 billion earlier this year. But then they do this special purpose vehicle that they called Project Mittens, which was the state of Michigan looks like a mitten. So they had this special purpose vehicle to look to, that's $14 billion that's leased to them, but it's not Oracle debt. Meta said we're not going to come back for another quarter at least when they did $25 billion last week. And then a few days later, you guys report a headline that Project Sopa Ipija, which is El Paso data center, will be coming leased to Meta, and that might be $14 billion. So they keep telling you they're not going to be borrowing because it's not actually unsecured debt, but then they're doing another deal. And we say, okay, we're not going to buy any more, but then it comes pretty cheap. And we say, well, these are great companies. We do believe they're going to be around. The structure's sound. But you got to pay us more. And so that right now, it's just every time they're coming cheaper and cheaper in order to incentivize us to buy it.
At what point do you start to say, you have to pay us a lot more to not just go into treasuries and go into your stock? Because ultimately, there is potential downside given the concentration risk at a certain time. But the upside is just getting paid back.
Correct. And that's the life of a credit investor. We don't have the upside that the equity market has. So we do protect ourselves. A lot of things that we're looking for in these deals that the market is pushing back on is asking for more amortization. Particularly if it's something that's backed by chips, you needed to amortize as fast as possible to get your money off the table. You're also seeing certain things like lease clauses. We want to have these data centers actually built. Originally, they were doing them and they were projects and they weren't even being done. Now we say the project needs to be done. It needs to be in place with a high-quality hyperscaler for a long time. But when that lease rolls, we want them to not have any debt outstanding. So we don't have take any rent roll risk on the tenant as well.
That's why I'm joking. You know, I'm sitting in these stocks just saying thank you. Thank you for funding all of this. I'm higher this morning by 18%.
Yeah, and you hear some investors who aren't just focused on credit say, why not just barbell it? Put some money in treasuries if you want the sort of credit component, and just buy the stock because that's where the upside is. Of course, potentially, there's also the downside, and maybe you could also get your money paid back. So I'm going to give you a pitch also for credit.
Matt, I'm interested in the feedback loop as well between markets, the spending. Are we just seeing that feedback loop continue? Any breaks in that whatsoever? Are the incentives just lining up for more of the same in the year to come?
So 2 quarters ago, the incentive was to tell everybody that you were adding to CapEx, that you were going to do more. And that's gone away because the debt markets did push back, particularly started with Oracle, where they said, look, looks like you're going to keep borrowing a lot. And the stock started going down. And I think it was because the debt markets, credit default swaps went wider, bonds, cash spreads went wider.
Is that Oracle specifically, or are we seeing some guardrails around the whole sector now?
It was mainly Oracle, but I think everybody gets a little bit nervous when Amazon tells you it's $200 billion. Meta came out this time. They increased it by $10 billion. And that wasn't a lot, but their stock was immediately down. I think a lot of it is because people are saying, we want to see where this is paying, where the results are going to, where the cash flow is going to come from. But the companies are saying this is too big of an opportunity. We're not going to miss it.
Matt, it's good to see you. Thank you, buddy. Matt Brill there of Invesco. A lot of companies feel that way, and a lot of investors are supplying the funding for them to continue.
I think I need to be broadening my definition of couch cushions. I think I need to start looking in different places.
I mean, in terms of, to be fair to Matt, in terms and relative to
100%.
the US market,
Right.
It's a little sofa.
At the same time, it highlights how even a little sofa or a smaller market would be incredibly important to a company that's looking for any financing that it possibly can. I mean, there's this incredible irony here. Typically, you think of companies that really need to finance themselves as weak. And these are the companies that are the biggest and the boldest, and they need as much money. They're hoovering up cash from everywhere. It just really, again, people say that would be risky, but they're not risky because they're minting money.
I'm just thinking of the hierarchy of spending right now. At the bottom, the chip players are just receiving all the money, right? And in between, you've got the hyperscalers spending all the money to build out this capacity. And the pyramid gets narrower and narrower because at the top, you've got these big frontier models, the likes of Anthropic and OpenAI. They're the ones committing to all the spend. How much can all of that continue? Do we need to broaden the base out a little bit more on the top?
And do we need to monetize beyond videos made on, different social media platforms, mocking different news items?
That's what makes me a little bit nervous anyway.
Yeah, well, the monetization, that's the key question.
Just how dependent we are on the plans of just a couple of companies and how much capacity we're building for them.
The more you know.
Right. The next hour of Bloomberg Surveillance, up next.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Good morning, this is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the 3rd floor or the lobby. You actually have to start in the basement.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
It's not hard to really look at the results we've seen and be that surprised that the markets continue to rally.
I would not be outright short risk. Like I said, the weight of earnings is still too strong.
For now, earnings and capex are really driving this market.
AI and that trade maybe continues to drive the market.
Right now, we're anticipating about a mid-single-digit climb for the S&P 500 from here.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
On behalf of everyone at Bloomberg Surveillance, I'd just like to apologise for Matt Brill's words and language towards the Canadians and the Canadian debt market.
I don't know that people are going to be that offended. One Canadian wrote in and said, as long as it's known that they're comfy and friendly couch cushions,
Very friendly.
We're okay with that analogy.
Yes.
Let me tell you, those, and look, it's not true. It's a decent, robust market that a lot of people are looking to tap.
That's why we see so much issuance there, relative to what we see in the United States. Live from New York City this morning. Good morning to you all. The third hour of Bloomberg Surveillance starts right now, and your price action looks like this. This move in crude dominating the headlines this morning, down by close to 10% off the lows. We did see a break of triple digits on Brent, a break of 90 on WTI earlier on the session. That unleashed this move, contributed to much higher equity markets this morning. Equity futures up by 0.8%, the Russell up by 1.7%. We heard from the president about 15 minutes ago, assuming Iran agrees to give what has been agreed to, which is perhaps a big assumption. The already legendary Epic Fury will be at an end, and the highly effective blockade will allow the Hormuz Strait to be open to all, including Iran. If they don't agree, the bombing starts, and it will be, sadly, at a much higher level and intensity than it was before.
This market is taking the easing in rhetoric, not necessarily the stick at the end. And that, I think, is notable. You did see some of the risk appetite fade just a touch on the margins after this social media post. At the same time, you still are seeing the declines in oil prices, the gains in equities, which gives a sense that even the talks about talks is enough to unleash optimism in a market that wants to rip.
Yeah, the headline helped to unleash that optimism earlier on this morning. The detail is still nuanced. A 30-day period of very contentious negotiations. I have to say that word contentious because they would be. There'll be nothing easy about this period of talks if they're agreed to.
Of course it will be contentious. And what did we see all of last year? Negotiations happen and then not get to a point that they were able to agree to something, and that's what started Operation Epic Fury in February. So clearly this is going to be incredibly hard, especially since the regime has now been hardened, given the fact that it's been changed within because of all the assassinations from the Israeli strikes. This is going to be incredibly challenging. What all the news, though, says to me today is the president is ready to walk away, though, in a sense. He's ready to wash his hands for this. He's looking down at the midterm elections. The issue is, are the Iranians going to meet him halfway?
Futures right now in the equity market just fading a touch, still positive by 0.8%. Coming up this hour, Barbara Reinhardt of Voya Investment Management, with stocks adding to all-time highs. The Ferguson CEO, Kevin Murphy, on leveraging the American capex boom, and the US Trade Representative Jameson Greer on the tariff standoff with the European Union. We begin this hour with stocks rising and crude falling as the US and Iran are closing in on a peace deal. Barbara Reinhardt of Voya Investment Management writing, we are positioned to be overweight equities, even with the uncertainty of the Iran war. Both corporate guidance and analyst EPS revisions have signalled confidence in the forward outlook. Barbara joins us now for more. Barbara, good morning.
Good morning.
We started the programme with Max Kettner over at HSBC, and I asked him, do you believe that ending this war is a prerequisite for further gains? And he said no. Do you agree?
I'd have to agree with it. You have a lot of supports to the equity market. So number one is that sentiment got very oversold in late March of this year. So it was kind of the rubber band was pulled back for people to start piling into the market. Secondly, you've had very good corporate earnings and good forward-looking guidance. And then lastly, something that not many people talk about are the buybacks. You've had $422 billion in executed buybacks in the first quarter of this year. And then you have another authorization for $600 billion, which would be one of the best years for corporate buybacks yet.
Which is why we've seen a massive bounce off the low at the end of March, a massive rally. How great has the investor participation been in that rally?
I think that there were some people that sold equities going into the Iran war, thinking that it was going to be a long, protracted, military conflict, that oil was going to spike. It could have all types of problems for consumers with high prices at the gasoline pump. However, I would say for people that were smart enough, they said, look, we're going to look through it. We know that the cure for higher oil prices is always higher oil prices, right? Oil follows this boom-bust cycle. And if you knew your kind of history of the markets and how military conflicts resolved themselves, you would have been able to say we're going to be able to withstand it and we're going to invest through it. Some people did have the opportunity set to start adding back to equities in early April, but I think they haven't necessarily been adding in the places where there was the best opportunity set. For emerging markets has been unloved, underowned, underappreciated. EM ex China is up over 18%. If you include China, it's up over 14%. Those are gains that are considerably better than other parts of the market like Europe.
Those gains are also tied to things like the Kospi, which is up some 70% so far this year, I believe. And that's on the heels of Samsung and a couple of other players that are highly dependent on this chip cycle and on this AI boom that we're seeing across capital markets. One of Max Kettner's points was that this equity market is not tied to the economic cycle nearly as much as it has been historically. How much is that a factor in your assertion?
Well, I think you have to divorce two things, right? The economy is not the equity market, right? So the economy has really been driven 70% by consumer spending. The equity market is being driven by corporate earnings, and everything that you're seeing out of corporate earnings this quarter has been relatively strong, and the forward-looking guidance is very good as well. So I think you have to think about these things as two pieces. Of course, you do worry sustainably high oil prices when they go up 100% over a 12-month time period and stay sustainably there. That's when the economy starts to weaken. But you saw great data yesterday out of the JOLTS report. So JOLTS told you yesterday that while we're still in this low hiring, low firing regime, you're starting to see some stabilization for labor demand coming in. And that's companies being able to say, we're looking past the Iran war, and we're going to continue in terms of seeing strength in spending, strength in consumer spending, and then also strength in the build-out of technology and very good high free cash flow from corporations really around the globe. So I think there's a lot of support. And also remember, while the Kospi and Taiwan Semi, they are up huge this year. Remember, they went through a period from November through February of this year where they were really on their backs for a while. Remember, we were in this very big industrial kind of super cycle, and so we're going to buy the junk.
Okay guys, 5:30 हो चुका ऑलरेडी. इसमें क्रूड ऑयल में हाफ प्रॉफिट चाहो तो बुक कर सकते हैं यहाँ पर, या फिर अगर कम लॉट में हो तो पूरा ही निकल जाओ. रिजेक्शन मिलने के चांसेस है, इवन तो यहाँ पर मुझे कोई रेजिस्टेंस नजर नहीं आ रहा है, बट ओवरऑल व्यू बेरिश ही है. प्रॉफिट बुकिंग आनी थी, आ गई है ऑलरेडी. एक अच्छा ट्रेड मूव यहाँ से पास हो गया, ऑलमोस्ट 400 पॉइंट. ठीक है, श्योर. ठीक है, बॉटम से देखोगे तो ऑलमोस्ट 500 पॉइंट है. वैसे 430 पॉइंट मूव किया है. निकलना चाहो तो निकला जा सकता है. सी कितना यहाँ से मार्केट रिवर्सल देता है. कोई रेजिस्टेंस नहीं है, फिर रिपीट कर रहा हूँ. रेजिस्टेंस मेजर रेजिस्टेंस एक आप कह सकते हो तो 9600 डे हाई के आसपास मानेंगे. एक ये लेवल है, शायद मुझे लग रहा है यहाँ तक जाएगा. इस एरिया के आसपास थोड़ा सेलिंग का प्लान कर सकते हैं, क्योंकि ये एक लेवल रहेगा. पॉइंट ऑफ इंटरेस्ट कह सकते हैं इसको हम. पर भी थोड़े बहुत सेलर जरूर एक्टिवेट होंगे, बट ये काफ़ी दूर है, डायरेक्टली तो नहीं जाना चाहिए. लॉजिकली थोड़ा रुक के जरूर जा सकता है. यहाँ से सेलिंग मत कर देना आप कहीं. डबल बॉटम बनाने की कोशिश करता है तो बढ़िया रहेगा मेरे अकॉर्डिंग. ठीक है, एक डेटा भी है अभी 545 पर. आई थिंक एडीपी नॉन फार्म एम्प्लॉयमेंट चाहिए, इंपॉर्टेंट डेटा, इम्पैक्ट कर सकता है थोड़ा बहुत क्रूड को भी. नेचुरल गैस में बाकी कुछ नहीं चल रहा अभी. देयर इज नो ट्रेड इन नेचुरल गैस. एक कैंडल ओपन इक्वल टू लो नहीं, नॉर्मल कैंडल है। नेचुरल गैस एक्सपेक्ट कर रहा हूँ कि थोड़ा सा, एक सेकंड, ये क्या हो रहा है इसमें, थोड़ा पुल बैक देके वापस अगर एक मोमेंटम करता है डाउनवर्ड डायरेक्शन पे, लाइक कुछ इस तरीके से, ये एक सिनेरियो बन सकता है वापस उस केस में। जिस तरह से प्राइस एक्शन बना है यहाँ पे, इतनी बड़ी बड़ी कैंडल, अनटिल अनलेस कोई बड़ा मूव कैंडल के थ्रू नहीं आता है, चांसेस लेस की रिकवरी आएगी, क्योंकि सेलिंग बहुत ही हैविली कर रहे हैं। यहाँ पर देखोगे ना, बिल्कुल एक बड़ी कैंडल सेलिंग, प्रॉफिट बुकिंग, बड़ी कैंडल सेलिंग, प्रॉफिट बुकिंग, बड़ी कैंडल पे सेल ऑफ, प्रॉफिट बुकिंग। एक इस तरह का सिनेरियो देखने के लिए मिल सकता है कि यहाँ के एसएल उड़ाएं पहले और फिर नीचे आए। तो अनटिल अनलेस कोई बड़ा मूव बाइंग साइड पे नहीं देता है, बहुत रिस्की होगा बाइंग करना। देखते हैं थोड़ा नीचे अगर आता है तो। टू फिफ्टी के आसपास आएगा वापस, तब देखेंगे इसमें। अभी और कुछ मत करना नेचुरल गैस में। मैं एक्सपेक्ट कर रहा हूँ कि पहले यहाँ के एसएल उड़ा दे प्राइस ये इस तरह से, और फिर नीचे आए थ्रेशोल्ड में, क्योंकि ऊपर भी कोई और रेजिस्टेंस है नहीं, डे हाई ही एक थोड़ा बहुत रेजिस्टेंस की तरह काम कर सकता है, अदरवाइज कम ही चांसेस हैं। हाई बनाया एक बार, हायर है, एक और बार आ सकता है। ये क्रूड ऑयल में अगेन एज आई सेड, एग्जिट करना चाहो अगर कम लॉट में है तो एग्जिट करके निकल जाओ। ट्रेल करना चाह रहे हो तो थोड़ा ध्यान रखना। सेकंड टारगेट एक पॉइंट ऑफ इंटरेस्ट तक हो सकता है, देखना पड़ेगा डायरेक्टली जाएगा या फिर थोड़ा एक डब्ल्यू पैटर्न टाइप फॉर्मेशन देता है। यहाँ पर कोई रेजिस्टेंस नहीं है, बट काइंड ऑफ अ लिक्विडिटी एरिया, प्राइस विल ट्राइंग टू गिव सम प्रॉफिट बुकिंग, माइट पॉसिबल। ऊपर जाता है तो डे हाई एक रेजिस्टेंस है, उससे पहले एक पॉइंट ऑफ इंटरेस्ट थोड़ा बहुत रोकने की कोशिश जरूर करेगा। ऑलमोस्ट वी सेप रिकवरी है क्रूड में। 3 लोअर सर्किट लगे थे, 2 तो रिकवर कर दिए। ठीक है, ये लेवल मुझे अच्छा लग रहा है। बीच का जोन ना पूरा ही रेजिस्टेंस बन जाएगा। ऊपर रेजिस्टेंस एक पॉइंट ऑफ इंटरेस्ट पास में ही है दोनों। तो एक्सपेक्ट करेंगे इस एरिया के आसपास। देखना पड़ेगा कितना बफर लेता है इस एरिया से। इसका लेवल भी यही है सेम।
and where they need them. And additionally, we're doing good fabrication and valve and automation work to make sure that we can add productivity to what their jobs are doing.
Hey, Kevin, I just want to squeeze this in and finish where we started. The weighting between residential and non-residential. Is there a preference to keep it equal weighted or lean into one versus the other?
The balance really serves us well, Jonathan, and it has served us well over the past, call it 7 to 10 years. That'll change as the market changes. You know, right now we have residential pressure, both in new construction, but also in existing home turnover, which is a real driver for remodel activity. So we'll see that change. But that balance is pretty healthy for us and makes us very resilient over time.
Kevin, appreciate it. It's great to catch up with you. Let's continue the dialogue through the year ahead. Some big changes in this country. The Ferguson CEO, Kevin Murphy, there on leveraging the CapEx boom in America, a massive boom.
You know, if you are a plumber or an HVAC technician, you can make $100,000 to $200,000 if you're in a place like New York City.
Money. Yeah.
And all of a sudden, people who previously thought about going and sitting in an office are thinking, wait a second, I can go fix someone's HVAC and earn the same thing.
And then what happens 5 years down the line?
Yeah, well,
got a lot of plumbers.
And well, but it's
or HVAC robots. It's gonna be
wow. That took a turn.
It's like Bramo. Goodness me. All right. Up next on the programme, the US Trade Representative Jamieson Greer on the tariff standoff with the European Union. That conversation just around the corner.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
So the US and Iran, according to reports throughout this morning, close to signing a memorandum of understanding to begin a period of 30-day talks to end the blockade, reopen the Strait of Hormuz, and eventually negotiate around the nuclear program in Iran. The president saying that if that isn't signed, the bombing will restart. And the president also saying in an interview with the New York Post a little bit earlier this morning that it's too soon to prep for a peace signing with Iran and that it's too soon for face-to-face talks as well.
It seems as though he's actually talking it down. The market is still saying it still is a positive step that there are even discussions about talks. Nonetheless, it is notable that he's the one that's saying, just hold on a second. We're not exactly smoking a peace pipe over here.
So the gains fade just a touch on the S&P 500 by 0.8%. I want to make a joke, but I'm not going to.
Yeah, me too.
The Nasdaq up by 1.3%. On the Russell, we're up by 1.3 as well. In the commodity market, Brent crude and WTI down, but not down as much as they were. We were down by more than 10% earlier. Brent crude at 102, WTI at 94. And just to finish in the bond market, yields lower across the curve. Just as we get these headlines from the Treasury, the quarterly refunding statement dropping, the headlines dropping as well. Mike McKee's got those details for us right now. Morning, Mike.
Good morning again. No surprises in the Treasury auction announcements. They had told us that they were going to be able to meet the debt needs of the country without changing auction sizes, so they haven't. The U.S. is going to refund $125 billion in the quarter. The breakdown is $25 billion for 30-year bonds, $42 billion for 10-year notes, and $58 billion for 3-year notes, and these will all start their auction process next week. It is too early for major changes, but we do know that we're going to have a bigger debt coming with the additional money that the president wants to spend on defense. And also, the question is, how is Treasury and Fed going to work together on any of this stuff, which is what Kevin Warsh says should happen. We won't know that for a while until he takes office and gets a chance to sit down with Scott Bessent and figure out if there's any kind of agreement they should make.
Mike, language is important. And on the language from the Treasury, we've been told repeatedly that increases in note and bond issuance won't be expected for, quote, at least the next several quarters. Has that language changed at all this morning?
Not changing yet. We would expect it maybe in the next quarter or two. But for right now, we're going to be at about the same through the fiscal year, which will end September 30th.
Mike McKee, thank you, sir. T-bill is doing a lot of the heavy lifting for bond issuance, for debt issuance in this country.
Yeah, significantly a higher proportion of 3-year notes, $58 billion, versus the $25 billion of 30-year bonds set to be auctioned. Also notable, the total size, $125 billion, is less than what's expected to be needed, right? So there still is a question of how you are going to keep financing a bigger bill, especially based on some of the discussion around tax refunds, without using the coupon market. How much is going to go to, say, 12-month T-bills and potentially 6-month T-bills and just be rolled over?
10s this morning, 435, yields down by 7 basis points. That move unlocked by the much bigger move in crude. 30s were north of 5% earlier this week, the highest close we've seen since last July. South of 5% this morning, down another 5 basis points at 493. Let's talk about trade. The EU pushing Washington to finalise a tariff deal by July, as President Donald Trump threatens a 25% levy on European autos. The US Trade Representative, Jamieson Greer, meeting with G7 officials this week in Paris, and I'm pleased to say that Ambassador Greer is making some time for us this morning. Ambassador Greer, welcome back to this programme, sir. Can we just start off by getting your assessment of the current characterisation of talks between the EU and the US? What is the current state of things?
So I've spent a lot of time over the weekend and here while I've been in Paris speaking to my counterparts at the European Commission and my counterparts at member states about this issue. Just to go back in time a little bit to last summer when we concluded the Turnberry Agreement, which was an initial framework, the United States immediately set to work modifying its tariff rates to meet the agreement that we made. The EU has had a lot of time, many, many months, to comply with their tariff commitments and their commitments on non-tariff barriers. And that hasn't materialized yet. I think that the minds are focused in the EU and in Europe, I think is probably the best way to describe it right now. They're focused on what next steps are and how they might come into compliance.
Well, what are the next steps? Of course, the Europeans have a process. It's guided by their parliament. What's the exact ask of the United States?
So they ask, if you go back to August, we have a written piece of paper, a joint statement with the Europeans, and our ask is that Europe fulfill those obligations they committed to. The United States complied with its tariff obligations for many, many months. The Europeans have agreed to remove their tariffs on industrial goods. They've agreed to give duty-free quotas to key agricultural products coming from the United States. They've agreed to provide flexibilities for the United States on many of the regulatory matters that the European Union seems to specialize, things related to methane content in LNG, things about deforestation regulations, things about the carbon border adjustment mechanism. So we expect the European Union to keep its part of the deal, which includes flexibilities on those types of things, as well as the tariff things. And with the U.S., our part of the deal is to align our new tariff structure with what we committed to.
And if they don't come into an agreement, by when is the question? Then would the president potentially escalate to the 25% auto level?
Right now, the United States has a 10% tariff on the world. Generally speaking, it has 25% on autos from around the world. Europe has had it at only 15% this whole time. We have tariffs on steel and aluminum. We have other investigations ongoing, which may or may not result in tariffs, depending on the outcome. The idea would be, can Europe come into compliance? I'm not setting a hard date on this. My view is it's already past due, frankly. This is part of the reason why the president has come out and said if the Europeans aren't going to be complying with this deal right now, why should we be complying with all of it? All that being said, the autos is just one element. There are other elements to the deal where the United States remains in full compliance, in contrast to where the Europeans have been for many months.
It's just that your colleague, the ambassador to Europe, told us earlier they would need to see movement relatively soon and basically said that July would be too late. We're now in May. So basically, do you need to see something between the next few weeks for the president not to act?
Well, what I would say is right now this afternoon, I was meeting with my colleague, Commissioner Maros Šefčovič, the trade commissioner in the European Union, and he left the G7 at an appropriate time to go have what they call the trilogue process between the European Parliament, Council, and Commission, where they go over the tariff bill that's being debated. That tariff bill in the European Parliament, it also has a lot of amendments attached to it that we didn't agree to with the European Union. Amendments that could limit the relief, limit the benefit of the agreement, place limits on U.S. exports to Europe under a preferential trade agreement. So some of those amendments need to be resolved as well. It's not just about passing the bill, it's about making sure the bill reflects what we agreed last summer with the Europeans.
Ambassador Greer, I know for you the focus is going to change to what's going on in China because the president will be going there next week. Beijing is basically refusing to comply with U.S. sanctions. I'm sure you've seen the reporting that they're telling some firms, some refiners, that they don't need to comply when it comes to imports of Iranian crude. How big of an agenda item is this going to be when the president sits down with Xi Jinping?
Obviously, it's something we're going to have to discuss. Iran is the world's largest state sponsor of terrorism, and anyone who's buying oil from Iran is contributing to that. And so when the Treasury takes a step similar to steps it's taken many times over decades with respect to oil refiners who are dealing with Iran, and you have a country that refuses to comply or directs non-compliance, that's going to have to be a discussion item. We certainly have had it raised at the staff level between China and the United States. I would say we're looking for stability with China. We don't want this to be something that derails the broader relationship or any agreements that might come out of our meeting in Beijing, but it's certainly something that may come up.
What more could be done besides secondary sanctions imposed potentially on Chinese banks? I mean, yesterday the president also said, even though China is doing this, the president said Xi Jinping has been very respectful of him. This doesn't seem respectful of the United States and our rules.
Remember, China and every country, they're going to undertake domestically the laws and regulations they think they need to do. Sometimes they'll be in conflict with ours, and we're going to expect some kind of resolution. At the same time, we have the European Union for years has had a blocking statute against complying with our sanctions on Cuba. So what China's doing is serious. We take it very seriously. But again, for us, it's not something where we're going to let that become the only thing we talk about in the relationship. We have a lot of things we have to cover. That will be addressed, but then we'll address other issues related to trade and geopolitics and foreign policy and everything that comes with the relationship between two of the most important countries in the world.
Ambassador Greer, there's a real question about alliances here and the way that the United States and Europe have been discussing and the tensions that have been emerging versus the rhetoric that's been surrounding the U.S. and the China meeting that is planned for next week. Do you see the U.S. alliances as shifting as some of these negotiations take place? Or are these negotiations independent of any kind of traditional alliances that the United States has had?
So I think that's a good question because it puts into context everything that we're doing. And I think you have to look a little bit at history. People think about our alliance system as something that is set in stone, never had issues, have always been perfect, and never been problems. That's just not true. I'm sitting here in Paris in a place where, decades ago, Charles de Gaulle essentially pulled France out of the military structure of NATO and sought to have its own independent nuclear program, which in retrospect, maybe de Gaulle was right. So, we have a long history of having a back and forth between the U.S. and its closest partners as we try to find the right balance between international cooperation and alliances and what we need for our sovereign right. When it comes to trade, the United States, we have to reindustrialize. We have to reduce our trade deficit. We have to get real wages up. We have to have manufacturing as a bigger portion of our economy. That necessarily means that we need to fix the terms of trade with other trading partner nations, with the Europeans, who, by the way, have the largest trade surplus in the world with the U.S. right now. It's no longer China as of last year. With the United States, I don't think we're going to let that get in the way of whatever military cooperation we want to have with the Europeans. If other countries want trade to get in the way of that kind of cooperation, that's up to them. But there's a countries want trade to get in the way of that kind of cooperation, that's up to them. But there's a long history of having economic differences and challenges and resolutions and disputes, et cetera, and siloing that off from military and security questions. Sometimes they get mixed, sometimes they stay apart.
Ambassador Greer, it seems like European representatives feel a little bit differently. The French trade minister said that it seems like there's a weaponization of mutual dependencies, and that type of action is causing some real rethinking on their side. How do you hearing?
So, I saw that language today, but it was with respect to, and maybe we have a different understanding. We put out a G7 statement that talks about that, but it's really about China weaponizing critical minerals, an area where France, the rest of Europe, and the United States are quite aligned on the way forward and how we shouldn't allow basic commodities to be weaponized. The United States is not in the business of cutting off commodities. We've been exporting oil during this whole Iran operation. China's the countries that's been cutting off and limiting access to critical minerals, and that's why we're cooperating with Europe on projects for critical minerals, on downstream processing, on manufacturing. That's why we're talking about having a plurilateral trade agreement on trade in critical minerals with Europe, with Japan, and others. So there are areas of a lot of collaboration and cooperation as we enter into a period of geoeconomic uncertainty.
Ambassador, that's an interesting point, because for a long time the Europeans have just sat on the fence. They've wanted the security umbrella of the United States, but also wanted the economic benefits of having a close relationship with the Chinese. Do you think that's changed?
I think that every country is going to pursue their trading relationships in the way they think is best. China is a great example. We're always going to trade with China. The Europeans are always going to trade with China. Europeans, Germany in particular, they've had very close economic relations. I do think that a lot of European countries and companies are rethinking that. I think they're being more clear-eyed about the risks and the challenges of doing business in and with China. At the same time, that's a big market. They do a lot of manufacturing there. They have a lot of consumers there. And so it's a place where people want to be able to do business, but they want to be able to do it in a reliable and predictable way. And that's not the case right now and hasn't been for some years. So while I think that the European view of China is changing and developing, it doesn't mean there's going to be some kind of massive decoupling. In the same way that even in the United States, we haven't had a massive decoupling from China. We've reduced our reliance on them. We've diversified from their economy, but we still want to have a constructive trade relationship if we can.
Ambassador, you've been generous with your time, and we appreciate it. Thank you, sir. The United States Trade Representative Jamieson Greer there, Ambassador Greer, on the relationship with the EU and the relationship with the Chinese ahead of that meeting with the president in about a week.
It's going to be a huge meeting, especially on the heels of what is going on with Iran and the fact that basically China is saying we're going to ignore some of these sanctions threats, but he's saying he doesn't want that to derail all the other issues they need to discuss with China when it comes to critical minerals and chips and just a whole host of issues when Xi and President Trump sit down.
Stocks at record highs coming into Wednesday, adding to them this morning, up by 0.7% on the S&P. With an update on news worldwide with your Bloomberg Brief, Yahara has more. Hey, Yahara.
Hi, John. The U.S. quarterly refunding coming in at $125 billion, in line with estimates. Treasury will issue the refunds via $58 billion of 3-year notes, $42 billion of 10-year notes, and $25 billion of 30-year bonds. The U.S. seeing a steady rates of coupon issuance for the next several quarters. Recapping the latest read on the labor market, ADP payrolls coming in a touch softer than estimates at 109,000 in April compared to estimates of 120,000. Goods producing jobs accounting for the bulk of those figures with 94,000 added in the month. And we are seeing shares of Corning soaring more than 18% alongside NVIDIA after the two companies announced a major AI infrastructure partnership. Corning, which makes the connectivity systems inside data centers, says it's ramping up U.S. manufacturing capacity tenfold as part of the deal. That's your Bloomberg Brief. John.
Hey, Yahara, thank you. Thank you very much. Up next, we'll catch up with David Seith of Nomura, looking ahead to the data this week, including Friday's payrolls report and reflecting on the quarterly refunding announcement from the Treasury just moments ago.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bring
bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
The opening bout just around the corner, 41 minutes away. Stocks are record highs coming into Wednesday, adding to them this morning, up by 1%. On the Nasdaq 100 this morning, on the S&P up by 0.7. This rally and this name helping things this morning, that's for sure. Fantastic numbers from AMD. Really strong guide as well. The stock is up in the pre-market. The stock is absolutely flying. It's up by 15%. At one point, it was up by more than 20. That's one of the single names to watch going into the opening bell. Elsewhere, we're looking at this in crude. Down on Brent and WTI. Some diplomatic breakthrough on the horizon, some encouraging signs. The president, out of everyone, pouring some cold water on the prospects of that being signed anytime soon, though. So bear that in mind. Brent off the lows, 102.55 this morning. And then this in the bond market. So that move there and looking this move here. Yields across the curve are lower by 7 basis points on a 2-year, 3.87. It's further out the curve where things have been interesting recently. The 30-year north of 5% is now a good time to issue more debt at the long end of the curve. The answer's no, apparently. The quarterly refunding comes in from the Treasury in line with estimates. No change. And also no change to the guidance. No change on coupon issuance and the guidance to keep it steady, quote, for at least the next several quarters.
This sort of puts to bed some questions about how much this particular Treasury would remove issuance completely from the long end and move it all to the T-bills. I will just say the fact that they still have an extra $60 billion to finance or something like that means that that's all going to be issued in the T-bill market, right? So this isn't necessarily not changing anything because there is more debt that needs to be sold. It just isn't necessarily in the coupon market.
David Seif of Nomura joins us around the table. David, good morning.
Good morning.
How much pressure is on this Fed, the Kevin Walsh Fed, to keep rates low to accommodate some of this?
Well, that's sort of the direction we've always been at Nomura thinking that it was going to go, that despite market pricing, which even after the recent developments in Iran show just minimal in the way of additional Fed cuts, we still think there are additional Fed cuts coming this year. And a lot of that, in fact, really all of it, is what we think is really a political decision to coordinate a little bit more between the Fed and Treasury, and Walsh, we expect really being much more in line with Trump's way of thinking on interest rates than outgoing Chair Powell.
The rest of the committee is listening. I know that many Fed governors tune into this program in the morning. Good morning to you. They'll be listening to what you just said. Are they going to come along for the ride?
Well, we had 3 hawkish dissents in the statement just last week. Now, 2 of these were all by regional Fed presidents who won't get a vote after this year. 2 of them, Beth Hammack and Lori Logan, we already were pretty clear that they were hawkish. Neil Kashkari from Minneapolis, he had made a bunch of more hawkish statements lately. Our guess is that he, in March, though, did signal that at the time, one more rate cut this year was appropriate. So, you know, we have seen a little bit of a hawkish shift from the committee, especially driven by the voting regional Fed presidents. But we still think that among the voting members on the FOMC, the 12 of them, there is a clear majority that are still in favor of at least one rate cut this year.
What's the economic argument for that?
The economic argument is you really got to sort of think that inflation is going to be better than it has been in the past several years, past 6 years, arguably. And you also need to have the view that the Fed funds rate at 3 5/8 is restrictive where it is, and that it needs to be getting down to neutral.
How do they execute this, even if there is some sort of Fed Treasury accord, without igniting a huge sell-off in the long end of the yield curve and potentially pushing up inflation expectations?
Well, there is that risk, certainly. And I certainly understand why some on the Fed think that more cuts are appropriate. But I also very much understand where these dissents are coming from and where the hawkishness is coming from. They need to do it very carefully. And I would completely agree with you that a sell-off at the back end, at least somewhat of a loss of credibility, is at least a risk for the Fed. So they need to make it clear that this is something that really remains data dependent. And I think if the Fed cuts more than a couple of times, certainly, and the data continue to be as strong as they have been.
What data are we looking at? I'm sorry, but it's data dependent. I mean, the data's coming out. The inflation's going up. Jobs look fine.
Yeah.
What data are we talking about here?
Well, I mean,
sorry.
Listen, I hear what you're saying. I'll sort of adopt the mentality that AI is going to imminently lead to disinflationary productivity growth, that the tariffs have added somewhat to inflation, and those are increasingly going to be in the rearview mirror. And third point, and this I really do think is a very strong point, that the war in Iran has led to a big jump in headline inflation, but not in core inflation. And the Fed really should be focused on core inflation. And so to the extent that wherever the starting point was, they want to move.
These are stories, not data. This is what Lisa is getting frustrated
that
with.
is the argument there, and I again very much understand why so many of the regional Fed presidents are starting to push back against the extent of cuts, or at least against future cuts.
If this market's not convinced this dollar's getting absolutely hammered, if that's a direction of travel, and people start to latch on to what's happening, this dollar is going to get absolutely hammered.
Arguably, people say that it already hasn't benefited as much as it would have in this particular scenario, given the strength of the economy, the fact that it's an oil exporter, and the fact that on the margins, this Fed's getting more restrictive.
David, it's good to see you.
Great to see you.
Thanks for dropping by. I appreciate it. David Seif there of Nomura, and what he expects from this Federal Reserve, which would be rather contentious if those things do indeed materialise.
How do they make the argument? Ultimately, you can make an argument about a theory, but how do you make the argument using data that you actually are getting? And arguably, you could say it is not a time for data dependency, given that this is a rapidly changing economy that you have to really adapt to. That said, how do you convince people of a theory that a lot of people have argued back and said, we're not going to see those productivity gains for years? As you've said, it's a sequencing problem. We're going to see the inflation first, the productivity later. How do you bridge the gap?
Didn't talk about payrolls at all, did we?
We sort of mentioned it once.
Makes you wonder how relevant that is.
Oh, we mentioned it, I think, once. I'll go back and
squeezed it in. We'll have more tomorrow for you as we count you down to Payrolls Friday. Coming up tomorrow, Ishwar Prasad of Cornell, Dan Skelly of Morgan Stanley, Sonal Desai of Franklin Templeton, and Liz Ann Saunders of Charles Schwab from New York City this morning. Good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of your net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Some fresh optimism this morning over AI and a potential deal between the U.S. and Iran. With 30 minutes until the start of trading, I'm David Gura.
And I'm Bonnie Quinn. Matt Miller and Danny Berger are off. Bloomberg Open Interest starts right now.
Well, coming up, Brent oil falls below $100 a barrel on that news. The U.S. and Iran are closing in on a deal that could end the war.
Meanwhile, tech stocks jump as AMD's blockbuster earnings and fresh funding deals underscore AI's relentless momentum.
And with gas at $4.50 a gallon, we're going to take a look at how rising energy costs are rippling through the economy with the CEOs of Shark Ninja, Cummins, and Pitney Bowes.
David, we hit all those records yesterday. We thought it couldn't get any better, and guess what? It looks like it's going to get a lot better today, because what can't you do with Brent at $103 a barrel as opposed to $120?
Seems like it. We've been seeing people see through this war. Now it seems like with the prospect there being some resolution to it, investors are even happier still.
They're hoping, at least, right? It's all in Iran's hands, apparently, right now. Let's take a look at these stocks on the move, though, because the AI trade is also powering things today. AMD higher by more than 15% in the pre-market, at an all-time high if this continues into regular trading as demand for its AI products surges. Google is approaching Nvidia as the world's most valuable company. This after a report Anthropic is going to spend $200 billion with Google over 5 years. And of course, Nvidia has come back to the party. It's participating today as well.
Bonnie, taking through all of those tech stocks, really buoying the market, of course, as they have for so many months now. That is the case today, certainly, as well as we look at futures pointing to a positive open in both the S&P and the NASDAQ. It is really a story of Brent this morning, however. We saw initial reporting from Axios about the prospect of there being a one-page memo introduced by the U.S. and Iran. They're weighing it right now. That really boosted investor sentiment, and we've seen members of the administration over the course of the morning confirming the fact that we may be very close to resolution of this war. Brent dipping initially below $100 a barrel. The president, however, posting on Truth Social this morning that the Strait of Hormuz could reopen if Iran agrees to a deal, and if it doesn't, to quote the president here, the bombing starts. That raised Brent just a little bit. For more, Bloomberg Washington correspondent Tyler Kendall joins us now. Tyler, get us up to speed. As I say, it's been a dynamic morning in Washington. It's been a dynamic morning around the world as we've kind of processed all of this news. What's the latest on these negotiations over, again, that one-page memo?
Well, David, it has been a fast-moving morning when it comes to the headlines, and President Trump here is essentially ramping up the pressure to get an agreement over the finish line, threatening that the U.S. could resume military operations if Iran does not agree to a deal. Still, within the last hour, the New York Post reported that President Trump still says that it is, quote, too soon to talk about any preparations about another round of in-person talks that would essentially be needed to finalize any deal. People familiar with the matter do tell us here at Bloomberg News that Iran is reviewing this one-page memorandum of understanding that you had mentioned, and that they are expected to respond within the next 48 hours via Pakistani mediators. It is our understanding that this agreement would see a gradual reopening of the Strait of Hormuz in exchange for the U.S. lifting its naval blockade. Axios put a little bit more of a finer point on the details, including that this could kickstart a 30-day negotiating period where we could see curbs emerge on Iran's nuclear program. This has, of course, been the big sticking point for this White House, that they want assurances that Iran could put into effect a moratorium on uranium enrichment, for example, though at this point it's still unclear exactly what those details will entail. And we should say also at this point, nothing has been agreed to. In fact, we heard from administration officials so far throughout this week urging caution that a fractured leadership in Iran does pose the risk to derail any potential progress. But still, David, David and Vani, yesterday the message from the administration was very clear that this U.S. Government wants to take a defensive position and that they don't have any intent to strike Iran unless Iran strikes first.
Yeah, Tyler, we went from this U-turn on Project Freedom to this one-page memo, and it's not actually clear if Iran had anything to do with this one-page memo, so I guess Iran is reviewing it. But what would be in it for Iran at this point? Just the prospect of no bombing, or is there more?
Well, we know that Iran was unhappy with President Trump's mission to help guide ships through the Strait of Hormuz. In fact, we saw the worst flare-up in fighting earlier this week. Vani, on the heels of the U.S. confirming that it had successfully escorted at least 2 U.S.-flagged merchant vessels through the strait. So it is very clear that the pressure was ramping up and that Iran had wanted to retaliate in effect of the U.S. trying to make sure that they can't retain that control over the Strait of Hormuz. We'll have to see where this goes from here. The reporting does indicate that in exchange for this deal, the U.S. would be looking to lift its sanctions on Iran, something that Iran has long wanted to see, considering that the administration's position has been firm that if they're not going to pursue renewed military action, then they are going to keep up the pressure when it comes to the economic squeeze. We heard from the Treasury Secretary Scott Bessent the other day saying that the U.S. is eyeing that Iran will be nearing its oil storage capacity soon, that they're going to keep up their sanctions regime in order to make that happen.
Our colleague in Washington, Tyler Kendall, thank you very much. Appreciate that update. And Brent, as I mentioned, falling below $100 a barrel at one point this morning on the hopes of a U.S.-Iran deal. For more Bloomberg oil reporter Mia Gindis joins us now here on set in New York. Mia, we've been through this over the last 10 weeks, the ups and downs, all the undulations in oil prices. Have we seen some prospect of resolution along the way? Does this feel different to you as you look at the movements that we've seen this morning?
Sure. So I think it's a multifaceted answer. First of all, thank you so much for having me. What we're seeing today is a reaction to the idea that diplomacy is still on the table. And obviously that was an open question after the talks scheduled to take place in Islamabad fell apart a few weeks ago. I think a lot of investors were looking at the U.S. reaction to Iranian hostilities over the past few days and interpreting the restraint that the U.S. showed as an indication that they don't actually want to return to active conflict. There is still an incentive to seek a de-escalation. That being said, I don't want to overstate the optimism that we're seeing today. Open interest in the oil market is at a critical low. As of the last time I checked, Brent participation was the lowest since last August, meaning that any sort of price move that we're going to see, whether it's to the upside or to the downside, will be exaggerated. And at the same time, while traders are pricing in possibly a near-term restart to flows as of today, there's no idea that it'll be instantaneous. There's still a huge backlog of ships in the Hormuz. It'll take a moment to convince ship owners that it's actually safe to move out, to ensure that there's no mines remaining in the Hormuz, and to actually restart the shut-in production in various countries in the Gulf.
Yeah, it seems just a little bit precipitous, this move. Maybe we'll see some of it retraced. But Mia, thank you so much. Mia Gindis there covering oil for us. Turning to the other market driver today, earnings. AMD shares soaring to new highs after a jump in data center spending bolstered its sales forecast. Bloomberg Tech co-host Carolyn Hyde joins us now. So, Carolyn, is this going to be taking more share away from NVIDIA or just growing the entire pie?
I think the pie is growing. I mean, when you compare the $11 billion forecast for the revenue in the coming second quarter for AMD with, well, 70, 80, up to $100 billion revenues per quarter coming from NVIDIA, this is a clear second run. But the expanse is growing because not only is it GPUs and AI data center focus that Lisa Su has really got into, but not only is that the workload, but CPUs, what her bread and butter of AMD always has been, and becoming far more popular because suddenly we were shifting from AI training to AI inference, and the CPU build out is going to be enormous. And also still, people are still buying PCs on the higher end. She has this memory issue, of course, which means others are pulling back from PC and smartphone purchases. But more broadly, her company is on fire. She's leaning into the AI opportunity, and we're starting to see it bearing.
Okay guys, crude oil देखो रेजिस्टेंस पे पहुंचने वाला है. एक फाइनल टारगेट यहाँ से एक सेलिंग का प्लान करेंगे. पूरा प्रॉफिट बुक कर सकते हैं वैसे इस एरिया के आसपास पहुंचेगा तो. यहाँ पर एक छोटा सा सेलिंग देखते हैं, ठीक है. करते रहो गाइस, डोंट फॉरगेट टू लाइक दिस स्ट्रीम. यूएस मार्केट ओपन होने वाला है अब सीधा 7 बजे. भी नहीं है क्रूड ऑयल की इन्वेंट्री है मोस्टली यूएस मार्केट के बाद 9,500 के आसपास एक चीज़ है कि प्राइस सीधा ही चला गया है तो रेजिस्टेंस मेरे अकॉर्डिंग होल्ड होना चाहिए इतना कोई ज़्यादा इशू नहीं आएगा रेजिस्टेंस पे मोस्ट प्रॉब्ली 9,500 से रेजिस्टेंस जोन स्टार्ट ठीक है ये पूरा ही जोन रेजिस्टेंस का है इसके मिडिल है पॉइंट से आप मान के चलना इसको रिमूव कर दो ज़रूरत नहीं है इसको एक काम करते हैं इसको कंबाइन ही लगा देते हैं दो अलग अलग अच्छा नहीं लग रहा Let's combine both टारगेट रखेंगे इसके नीचे अगर आ जाएगा तो ये सेकंड टारगेट रहेगा अप्रॉक्सीमेटली देखना पड़ेगा अब आएगा नहीं आएगा प्राइस एग्जैक्टली रेजिस्टेंस पे इतने जल्दी थोड़ा दूर है अभी भी डिस्टेंस पर है ट्रेल कर रहे हो तो ट्रेल तभी करना बीच में एंट्री मत करना लेट्स सी आएगा तो देखते हैं लग तो नहीं रहा मुझे अभी 7 बजे यूएस मार्केट भी ओपन होने वाला है नेचुरल गैस स्टिल सेलिंग का प्रेशर फेस कर रहा है अभी भी यहाँ पर क्या एसएल निकले नहीं है कोशिश करी इसने थोड़ी देर पहले ऐसा मैंने बताया था प्राइस इस लेवल को जाके हिट करके एसएल हिट करके आ सकता है एज एक्सपेक्टेड वहाँ तक गया बहुत ऊपर नहीं गया बट जाते ही सेलिंग आ गई यहाँ पर सेलर बैठे हुए हैं डेफिनेटली इट इज़ क्लियर नाउ लाइक करते रहो गाइस 7 मिनट लेफ्ट यूएस मार्केट ओपन होने वाला है ध्यान रखना थोड़ी वॉलेटिलिटी और एक्सपेक्टेड है अब Okay, 4 minute left. US market just going to open in few minutes. ओके यूएस मार्केट ओपन देख लेते हैं मार्केट को फटाफट से एक बार.
On this Wednesday, Disney had a great first quarter under Josh D'Amaro with the parks and streaming division showing gains. CVS raising its 2026 forecast on higher profits from its insurance unit. And Uber also boosting its outlook as it saw U.S. demand looking strong, people leaning into corporate travel. Lori Calvasino with RBC Capital Markets, still with us here on set. She, of course, the head of U.S. equity strategy. Lori, you travel a ton. Your assessment of what you were hearing from clients is a degree of crankiness.
Yeah, there's
Why, given all of this, all of the records that we've been talking about here, are investors cranky?
Well, I think I was detecting a little bit of crankiness last week when I was on the road. I don't normally travel during the busiest week of reporting season, but we had a lot of weather issues and illness issues early in the year, so a few things got pushed back. But I think there was sort of sheer exhaustion, frankly, from kind of going through, I think it was 168 companies, and it has been a pretty volatile start to the year. If I rewind a couple weeks ago before reporting season, one thing I was seeing from the long-only community, and I think you do have to specify kind of who you're talking to because there have been different reactions in different parts of the market. But I do think the long-only community sort of had a state of disbelief when we were hitting these new all-time highs. I have not heard very many people endorse the idea that we are having a recession, that we're heading into one. So I don't think it's that. But I do think that there was some confusion, you know, back in April about the kind of resiliency story in the U.S. and just really understanding how strong the U.S. looks from an earnings perspective relative to other regions. And frankly, coming into the war, the U.S. valuation story had really improved versus rest of the world. That's not really the case anymore. It's, you know, we're reflating now, U.S. versus non-U.S. But you know, I found in April I was really spending a lot of time walking people through U.S. versus non-U.S. dynamics.
If this really is the war coming to an end, whether it's through fatigue or something else, it wouldn't be the first time a war was ended through fatigue. What does that mean for the Federal Reserve? Can it now look through any inflation concerns due to higher energy costs?
So look, you know, our call at RBC, our rates team has been not looking for any cuts this year. They're not looking for any hikes either. And they do, I think, have a cut still penciled in for the first quarter of next year. But generally, you know, what I've been hearing from that team is that they're not going to look through they're going to look through these kind of temporary measures. And I always think that Fed is data dependent, so we're going to have to watch the data. But I'll tell you, Vani, I can't remember a time, you know, going back over the past like 4 to 6 weeks, the Fed comes up so little in equity conversations, and that is so different from the last couple of years. My economist and I have kind of compared notes on this, and it feels like a little bit of a relief that we're not sort of just, you know, constantly, you know, kind of debating what the Fed is going to do in equity land. They've maybe moved to the back burner just a little bit.
And what accounts for that? Why do you think that's happening?
Well, I think, you know, after 2022, and we have this one chart where we look at how many Fed cuts are priced in or hikes over the next year, and you can compare that to small versus large performance. And I do think that the hedge fund community, especially kind of that macro crowd, got caught up in this when Fed dovishness, when we dial it up, we're going to buy small caps, and when we take out the dovishness, we take out the cuts or put in some hikes, we're going to, you know, kind of beat up on small caps. So the fast money crowd, I think, was just really playing it as a short-term catalyst. Maybe, frankly, the war has also, you know, kind of given them other things to focus on.
So what is the next concern that we should be worried about then? I mean, if the war isn't even causing any dent in AI optimism, what should be the next thing? Because not that long ago we were worried about bubbles and such.
So look, you know, we're at 77.50 on our 12-month price target. So, you know, we have a 12-month view. We don't do a year-end target anymore. But we've said, you know, while we're constructive, we don't necessarily expect to get there in linear fashion, right? And there could be some dialing down, you know, a little bit of a pullback in the market at some point. We expect that to be contained to the 5 to 10% range at worst. But, you know, we've talked about profit taking on semis, right, as something, because there does feel like there was a little angst that was coming up about some of the valuations last week. If you were to see sort of a rotation back into Europe for any reason, right, that feels like it could ding our market a little bit in the short term. I think that would be short-lived, but those are some of the issues we're thinking about right now. And I would also say war impacts, you know, if you listen to the geopolitical community, they will tell you we've broken a lot of stuff. Even if it ends, it's going to take a while to fix some of these things. You know, my sense from everything I've read, 2026 earnings, I feel like by and large are probably okay. Maybe some risk in the fourth quarter when some of these hedges and inventories and those sorts of things roll off. But at some point, we might need to pull down 2027 expectations outside of the AI space. That's normal, by the way. We often see forecasts start out way too high the year before. But that is something that could cause some indigestion in markets also.
Are we beyond worrying about concentration risk? Does it feel like, given the ebullience that we're seeing here, we're content to not be as concerned about that as maybe we were a few months ago?
I have this one chart that I look at, and by the way, I'm kind of more of a value investor at heart, so this is all kind of a little bit painful for me, to be honest. But when I look at like the top 10 market cap names in the S&P 500 as kind of proxy for like the Mag 7 plus a few others, and I look at the relative PE and the relative long-term earnings growth rate, and I look at them against the rest of the market, they're basically the same chart, right? They're the same line. So the relative PE moves in line with the relative long-term earnings growth expectation. We had gotten to a point where those looked a little bit out of whack with each other, and so you could have argued that the mega cap growth trade wasn't really was at a multiple it didn't deserve, right? That's not really the case anymore. So when we kind of look through our quant data, we feel like unless that longer-term earnings growth expectation really erodes, they deserve that valuation premium.
But Laurie, we haven't been seeing the equal weight S&P at records, right? It's really only been sort of the S&P that we look at on a daily basis. Do we need to see better breadth before you're confident saying this is a really healthy market?
I think we've always had concentration, and the concentration has tended to track the earnings. And that gap between there's always a little bit of a premium on the market cap versus the earnings or the net income concentration. If you look back over the last 10 years, that doesn't look terribly out of whack to me right now. I do think this market, I think investors will ultimately follow the earnings growth story, and I do think it's sitting in the AI theme right now. I do think the rest of the market, kind of has puts and takes, right? Like the broadening trade, so to speak, you've probably got more pressures from elevated commodity prices, consumer sentiment being lousy, and those sorts of things. At the same time, though, we are seeing the rest of the market kind of outside of that tech space. You're starting to see some benefits from AI. They're starting to really give some good examples in terms of its productivity, its efficiency additions, and I would argue innovation is maybe an underappreciated story there also.
All right. Laurie, always an absolute pleasure to speak with you. Laurie Calvasina there of RBC. Thank you. All right, let's get a check on the stock market right now through the MOV screen. We got to look at these movers. There's more than 300 higher. This after all the records were set yesterday, right? So we had the S&P 500 at a record, the semiconductor index at a record, the Russell 2000 at a record. I mean, you looked and there was a record. Plus, we have the added advantage today of oil coming right down. Now, whether that's going to stick or not, we'll have to see. So 327 companies to the upside, as you might imagine. Advanced Micro Devices, the best performer today, followed by Nvidia, Alphabet, Broadcom, all of the AI exposed stocks, right? Corning as well, doing a massive deal with Nvidia and seeing its stock rise 15%. But we also have other stories, earnings stories. Walt Disney up 2%, Uber up 7% on better earnings. So it really is across the board. And if we look to the downside, well, you have your Microsofts, Apple, stocks that have been running up just a little bit potentially. And some of those oil-related stocks, obviously Palantir continuing to suffer after its earnings really just didn't land well with investors. Let's take a look at your groups as well, because obviously yesterday every single group in the S&P 500 was higher. Pretty much the same story today, except for, as you might imagine, the energy index and the utilities index. So power in a little bit of trouble today, but I wouldn't feel too much sympathy. It's had a good run so far.
Too much sympathy. Very good. Vonnie, thank you very much. Coming up here, Shark Ninja raising its outlook on strong sales. We're going to speak with CEO Mark Barocas next. This is Bloomberg Open Interest.
Wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Time now for our top calls. Some of the analyst action in focus this morning. First up, Goldman Sachs upgrading AMD after a strong quarter, saying new AI tools will boost demand for its server chips as data centers grow. Wall Street echoing the bullish sentiment. Wedbush calls the results stellar and says big customer rollouts make AMD's growth easier to see. Next up, Barclays is downgrading Abercrombie & Fitch to a sell and slashing its price target, saying the setup no longer looks worth it versus American Eagle. The firm adds that tougher economic vibes and more competition is adding pressure. And finally, Monster Beverage getting an upgrade at Rothschild and Redburn. The firm says it's set to ride the global caffeine boom thanks to Coca-Cola's massive distribution reach. The analyst sees energy drinks growing about 8% a year through 2030 as more women and younger consumers drink up.
Bonnie, thank you very much. Vibes, maybe not all about the vibes, but still crucially important here in markets and the economy. Appliance maker SharkNinja raising its full-year outlook as strong growth drives sales across several categories. SharkNinja CEO Mark Barocas joins us now. Mark, great to have you with us. Before we get into the company, and I do want to talk about that in detail, let me just ask you about the environment that we're in right now and what you've learned about the health of the consumer. We were talking with Lori Cavacina just a moment ago about the resilience of the U.S. consumer. From your vantage, how's the consumer doing? What capacity, what patience do they have to endure the level of uncertainty and difficulty that we're seeing right now?
Look, David, thanks for having me. I mean, the consumer right now is clearly under pressure. I mean, as you talked about, I mean, gas prices are up and it's a challenging time for everyone. But I think the growth that we're seeing is testament to our innovation, our performance, our quality, our value. That is really exciting consumers. I mean, our products are a lot of, very basic household products. I mean, consumers still have to vacuum and they still have to cook for their families and they still want to look beautiful and they still want to get excited about them. And so for us, we really look at it as the consumer has a certain amount of discretionary spend. How do we do everything we possibly can to give them the best value for investing it with SharkNinja?
So, to get to the important stuff, you've collaborated with Tom Brady and David Beckham now as well. Who's going to be next, and how do you make these collaborations pay off for you guys?
Well, Vani, I guess let's start with, the first quarter, we delivered our 12th consecutive quarter of double-digit growth as a U.S. public company. Our business grew nearly 16% on the top line, nearly 18% on the EBITDA line. And so, there's strong demand for SharkNinja products. It's driven by our disruptive product innovation. We're in 39 different product categories. We're selling in 30 different countries around the market, around the world. And for us, Vonnie, to the point that you're bringing up, I mean, we create demand through what we call a demand pyramid. I mean, we kind of look at celebrity partners that we work with. We look at macro influencers. We look at micro influencers. But we also drive the organic flywheel. I mean, what's so exciting is you take a product like our Shark Chill Pill that just launched. It's already gone into the cultural zeitgeist. I mean, consumers are producing their own social media content and explaining how this product is so exciting and so amazing for them.
I wanted to ask you, you mentioned 30 countries, how you're considering the global marketplace at this moment in time, when you weigh going into a new market, what you're considering, and if there are any kind of macro difficulties that are coloring those decisions here at this moment in time.
So, David, what's interesting is, you know, the products that we make appeal to a global consumer. I mean, an American consumer loves our products, a Brazilian consumer, a consumer in Italy. And so it starts with, like, is it the right product for the consumer? And we think we are delivering that. The second is the demand model. As we run social media in the US or the UK, that content travels. As we run it in Latin America, it travels to Spain. You know, the world is not, you know, this is not like we're running a commercial on NBC at 9 o'clock, you know, 5 years ago. You know, this content is traveling throughout the world. And we've got this great omni-channel strategy. I mean, we sell to every major brick and mortar retailer. We've got a robust direct-to-consumer business. And we're driving a lot more business now on TikTok Shop, you know, as we expand that into 6 countries that we're in.
You talk about the international expansion. It's obviously very important to you guys. Where are you concentrating now, particularly given that the international picture has changed since the war?
So our business grew 32% internationally in the quarter. You know, the growth was really broad-based. I mean, the UK is our largest market outside the US. I mean, that grew over 18%. Continental Europe is growing really nicely for us. I mean, in particular, Germany and France. Our Latin America business, I mean, we bought back our distributor rights in Latin America, and we saw very strong demand in Latin America. We've developed a great partnership with Mercado Libre in Latin America. You know, as we're developing demand, we have to figure out how to get the product to the consumer, and they've been a great platform for us to expand and get to those consumers in those markets. So it's broad-based. I mean, it's Europe, it's Latin America. You know, we've seen obviously a little bit of fall off in the Middle East over the course of the last couple of months. But, you know, we think over time that'll rebound.
Mark, will you indulge me with a question about AI? I'm curious how you're using it, maybe for product development, but just more broadly in the business, and how bullish you are on its prospects for changing the way that your company's operating.
David, this is the most exciting time in the 18 years that I've been running and leading SharkNinja. I mean, the innovation that is happening. In fact, I would invite you to go to our website and to my LinkedIn page. We ran an AI hack week. We shut our entire company down last week, and 4,200 people hacked for the entire week around AI solutions and how we bring them to the business. We don't want to outsource AI. We want to make our business AI native. We want to train everyone in AI. It's helping us drive faster consumer insights. It's changing the whole way we're developing products. We're developing products faster and better. It's helping us on the operations side. 25% of our calls today are being taken by AI agents that go into our call center. The shopping experience and the partnership that we have with Salesforce is going to be enhanced through AI. So again, we call it Jailbreak SharkNinja. You know, we have decided that we're awarding nearly $1 million to employees in the company for great AI ideas. I'd encourage you to kind of look at it and see what we're doing. I think it's really exciting, really innovative. It was an incredible week last week that we had.
Mark, I've been on the website all morning. I'm afraid I have a wish list. That's Mark Baracus, CEO of SharkNinja. Thank you so much for joining. Coming up, CVS joining other healthcare firms, raising its 2026 earnings outlook. We'll tell you why next. This is Bloomberg Open Interest.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything. Bringing you up to the minute news whenever and wherever it happens. I'm Sherrian in Seoul, and this is Bloomberg.
This is Bloomberg Open Interest. Let's take a quick check of stocks, where markets are on this Wednesday morning. We see the S&P 500 up about 75 basis points there. Russell 2000 small caps, they're up as well. A lot of green on the screen across the board here. We had records yesterday. Looks like we're continuing to build on those over the course of this trading day thus far. A reason for it right behind me to my left, Brent crude, as I move over here, elegantly dancing around that. Brent crude down about 6% right now. Of course, on the news that the president is weighing a deal with Iran. We've seen Iran push back on that here in recent minutes, really. But perhaps there'll be some resolution to this 10-week-long war. And then I just want to point to a few stocks that we've been following this morning. Obviously, a number of earnings coming out before the bell. Disney among them. Strong set of earnings here for the new CEO of that company. When you look at parks, when you look at streaming, when you look at entertainment, really great across the board. AMD continuing to build on those strong earnings from yesterday. Of course, the AI story has been one of scarcity. Do these companies have enough to meet the demand that has been exerted upon them, particularly on the chip side? AMD telling Wall Street, in fact, they do have a plan for doing that. Investors really embracing that. And I end here on CVS, which had a very strong quarter, in part because of its insurance brand, Aetna. We're going to dig into that just a little bit more here. CVS also noting in that earnings report there has been less demand in the stores because people were healthier over the course of the winter flu and cold season. So bad news out of good news, I suppose. But CVS still a fascinating story on this Wednesday morning volume.
Yeah, absolutely, David. And let's get more on CVS now with Bloomberg Health reporter Ike Svetlitz in Boston. So, Ike, walk us through the guidance. A beat and a raise, obviously, from CVS. How do they do it and what's to come?
So CVS has been improving the operations in their Aetna insurance unit. They raised the guidance largely for two reasons. One was that they sort of had money that they had set aside for last year that was left over. They'd sort of set aside more than they needed. They put that into the increased guidance. That was most of it. They also are projecting more profitability than previously expected in their pharmacy. They've been making some changes in their pharmacy, getting changes to sort of how some of the drugs have been are getting paid for. And they also, said on the earnings call today, they used to be losing money on GLP-1s. Now they're not losing any money anymore. We've seen that in rival Walgreens as well, is profiting on GLP-1s. So there are, some big changes we've seen there.
We've got about a minute left here, but I know that Medicare Advantage is hugely important here to CVS. We've got a new set of payment rates for those plans coming into place in 2027. How's that likely to affect this company? How's it likely to affect CVS?
Yeah, so CVS is saying that they do not think that these rates will keep up with the increased costs that they're anticipating coming into 2027. That might mean that they might cut benefits for some of these plans. They are still targeting the 3 to 4% margins in that business over the next few years. So we're going to be sort of watching to see what changes they might make.
I appreciate that update. That's Ike Svetlitz joining us from our bureau in Boston. Thank you very much. Again, on the heels of those earnings from CVS. Well, coming up in the next hour, Katie Kaminsky is going to join us from Alpha Simplex. We're going to talk about dollar weakness, very much a story this morning, with equities at an all-time high. Then Cummins CEO Jen Rumsey is going to explain how she is navigating tariffs and volatile demand. And we're going to discuss the state of the shipping industry with Pitney Bowes CEO Kurt Wolff. All that to come here on a very jam-packed hour of Open Interest on Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
From ABC News, I'm Michelle Franzen. After Secretary of State Marco Rubio announced the end of the U.S. combat mission against Iran.
The operation is over. Epic Fury, as the president notified Congress, we're done with that stage of it.
President Trump now says Operation Epic Fury only ends if Iran agrees to deal or bombing could resume. The president also says he's pausing Project Freedom, where the U.S. military began escorting tankers through the Strait of Hormuz days ago to help progress on peace talks. Tankers once again in limbo along with oil and gas prices. Here's ABC's Rebecca Jarvis.
The actual price of gasoline is not expected to decline anytime soon, and that is because of what's happened to our oil and gasoline inventories here in the U.S. Record amounts of these products have left the country in the last week as foreign buyers have been forced to find alternative sources. Our gasoline inventories now are at multi-year lows, which means prices will face even more upward pressure heading into the summer.
Indiana primary races yielding projected wins for at least 5 Republicans in state Senate races that were endorsed by President Trump. State Senate candidate Brian Schmulzer, one of them, taking a victory lap.
I've only cried 4 times in my life, and this is number 4.
In Ohio's gubernatorial primary,
I am so honored to be the Democratic candidate for governor of the great state of Ohio.
Dr. Amy Acton faces Republican Vivek Ramaswamy in the midterms. There are now 8 confirmed and suspected cases of hantavirus on board that Dutch cruise ship off the coast of West Africa. 3 passengers have died. Today, 3 sick passengers were airlifted from the ship. Commerce Secretary Howard Lutnick returns to Capitol Hill, facing more questions in a closed-door session on his ties to the late convicted sex offender Jeffrey Epstein. Tickets to the new museum at the Obama Presidential Center are going on sale this hour. The center opens to the public on Chicago's South Side, June 19th. You're listening to ABC News. The FBI and banking industry renewing warnings about the newest techniques that scammers are using, including high-level role-playing with criminal intent.
Using information gleaned from the dark web or from legitimate data brokers, scammers posing as federal agents are calling victims firsthand.
When somebody is calling and pretending to be the FBI, the victim thinks that they're in trouble, so they're already frazzled.
Robert Richardson is with the FBI's Chicago field office.
The criminal then starts rushing them more.
Rushing them to transfer money out of an account the victim thinks has been hacked and into an account that turns out to belong to the scammer. The FBI took nearly 200,000 complaints about spoof phishing last year. Jim Ryan, ABC News.
The 4-day school week is growing in popularity around the country, and kids and teachers are stretching those in-class days to take one day off. Here's ABC's Sophie Flay.
More schools nationwide are embracing the idea, especially in rural areas. More than 2,000 schools in 26 states are now on a 4-day schedule. Studies show mixed academic results. Critics argue struggling students can fall behind, and families face childcare challenges. But south of Tucson, Patagonia Public Schools are reporting positive results after switching to a 4-day week 2 years ago. Math scores are up 7%.
Palo Verde High School in Arizona plans to switch to a 4-day school week in the fall. The principal says Fridays, though, the school will remain open for students to use, including the gym and library. Michelle Franzen, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube. We're streaming live on Bloomberg.com as well. We got some green on the screen out there. We got maybe some progress on the Iran front. So that's what this market needs. Oil's lower, stocks are higher. Coming up, we're going to check in with Tyler Kendall, Bloomberg Washington correspondent. Get the latest on what may or may not be happening as it relates to Iran. George Ferguson, Bloomberg Intelligence, senior aerospace, defense, and airlines analyst, could talk to us about SpaceX proposes a $55 billion to begin terafab projects in Texas. I mean, the money being thrown around on these companies.
I know, it's bananas.
Companies.
Tens of billions of dollars one day or another. It's, kind of like child's play.
Mandeep Singh, he runs the tech research for Bloomberg Intelligence. He's going to talk to us about anything technology related. Again, we could talk to him for an hour. I think Uber reported some numbers, so we'll break it down there. Last night, taking a car home from the city, I arbitraged between Lyft and Uber for a 30% discount.
Whoa.
Yes, and it was going down to the Jersey Shore, so it was a big number to begin with.
So which did you end up with?
Lyft.
That's usually the case in New York, I find.
Yeah, I mean, it was serious. And Matt Miller does not do that. He leaves money on the table. I'm trying to school that young man, but that's how you
he just goes with his one app?
He goes, yeah, whatever. He just goes Uber, I guess. So
well, not everyone is Matt Miller.
So that's how we go. All right, let's kick this whole thing off with John Tucker in the Bloomberg Business Flash. John, what do you have for us?
All right, guys. This flash brought to you by IBKR. Trade, election, climate, and economic outcomes with IBKR. Trade, election, climate, and economic outcomes with IBKR prediction markets right alongside your stocks and options. Earn interest on your position and receive $1 per contract if you're right. Learn more at ibkr.com/predictions. So you have 9 of the 11 major industry groups in the S&P 500 higher right now. Materials, the best performing industry group. The worst performer, energy, as crude oil prices, they continue to fall. But right now they've paired some of the earlier losses. Brent, the international benchmark, about 6% lower, 103.52. There was some optimism earlier, faded somewhat, about possible conclusion at some point in the war with Iraq. Dow Jones Industrial Average up 480 points. That's up 1%. The S&P 500, 54 points higher. That is up 0.8%. Remember, we closed at a record yesterday for the S&P 500, so anything in the green is another record. The NASDAQ, the tech-heavy NASDAQ Composite Index, up 0.9%, 235 points higher right now. The best performing individual stock, we'll break down the earnings in a minute here, but that belongs to Advanced Micro Devices. and those shares were close to 20% higher. Some of the other performers include Corning, as NVIDIA buys $500 million worth of rights for shares in the fiber optic cable maker. Eli Lilly spending another $4.5 billion on its manufacturing plants in Indiana as the company shores up its domestic supply chain. This investment is going to go toward technology enhancements at Lilly's first dedicated genetic medicine facility, which actually opened just today. And then shares of local favorite IFF, International Fragrances and Flavors, Flavors and Fragrances. You can smell them as you go down Route 36 in New Jersey. No, it's a good smell. It's like they make the perfume.
As opposed to other smells in New Jersey.
Yes, exactly.
And it's kind of cool, the facility. Like a lot of land. It's on both sides of Route 36. And they put in this huge solar array.
Did they?
To generate power. So anyway, if you're going by wave, those shares right now among the most active, also one of the best performers in the S&P 500, 14% higher at today's trading. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Zucker, and that's your Bloomberg Business Flash, Scarlett and Paul.
Dogs must love sticking their heads out of the car right around there.
Not so much on the turnpike by Elizabeth, New Jersey, the petrochemical plants.
Route 36, okay. Don't stick your head out by that refinery.
Exactly right. All right, JT, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney, we're live with you here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. Boy, big rally in the markets today. Let's take a look at some of the stocks on the move today. We can do that with Avalon Purnell, equities reporter for Bloomberg News. Avalon, what are you looking at?
Well, we can start off with Advanced Micro Devices. That's ticker AMD. Wow. I mean, obviously, it's one of the top performers in the S&P 500 this morning, up now about 17% to hit a record high. And that's after the company gave an upbeat second quarter forecast as it continues to cash in on that AI spending craze. And it also reported a first quarter beat practically across the board. After getting that print and that update, AMD got several price target boosts across the street and an upgrade to buy at Goldman Sachs, who said that AMD should be an outsized beneficiary of enterprise agentic AI adoption.
Oh, the CEO, have you heard Lisa Su? Wow, she impressed. I've heard her speak a few times, and I'm just like,
I believe she's also a distant relative of Jensen Huang, too.
Oh, is that right?
Yeah, well, they're both from Taiwan, and Taiwan's a small island.
So that happens. Okay. What else you got for us?
Walt Disney, that's ticker DIS. Yes, 8.2% right now, most since last May. That's after Disney reported second quarter results that beat expectations as guests continue to spend on those resorts and cruises, and also amid improving profitability at Disney Plus. It also had strong demand in the box office this past quarter for movies like Zootopia 2, Hoppers, and the new Avatar movie. The CFO saying in the call that it's shaking off concerns that higher gas prices would impact the park's demand, saying that Disney continues to see no real change in consumer behavior due to those gas prices. Though still important to mention that international visitor traffic has been slightly softer.
And what I know about the Disney things, most people fly to Disney properties, as opposed to, say, Six Flags, where most people drive to it. So it gets a little bit of it's a different dynamic there for the theme parks. But they had some of their international travelers are down as well. So keep that in mind. CV is in Victor, not B as in boy. CVS Health.
Yes, CVS is now up about 7.8% to hit its highest level since 2023. That's after the healthcare insurer boosted its full-year adjusted EPS guidance as Aetna profits continue to increase. It also reported adjusted profit and comparable sales for the first quarter that topped estimates. RBC writing that the report came well ahead of expectations amid notable improvement in its healthcare benefits segment. Also worth noting that this is just another example of better than expected results in the healthcare insurance sector, which is definitely going to help some of that broad investor sentiment since people have been fairly down on the sector lately.
They certainly have, with the whole repricing of the Medicaid reimbursements and all of that. Aviel, thank you so much. We are speaking, of course, with our equities reporter here for the Market Movers, Avalon Purnell. For more conversations like this, be sure to subscribe to our Stock Movers reports. Listen for these 5-minute audio reports on the biggest winners and losers in the stock market. Stock Movers is available on Apple Podcasts, Spotify, or anywhere you listen. It is risk on today across the markets on some kind of hope of some kind of U.S.-Iran deal. Yes, please.
This is breaking news. Ted Turner, the CNN founder, has passed away. So just wanted to bring that
Thank you for telling us that.
Good. I got to know him back in the day when I first started in the media industry, and he was the absolute definition of a media mogul. You know, kind of bigger than life, brash, the mouth from the South. And he sold his Turner company, Turner Networks, to Warner Brothers. and became part of that. And it was kind of funny to see him try to coexist within this Warner Brothers corporate culture based in New York City. Of course, his Turner networks were based down in Atlanta, and it was all about him. But fantastic.
And that legacy lives on, right? Because CNN based in Atlanta as a result
and
of
a huge
landowner
out west, because he donated so much of that as well.
Yeah, he and John Malone on the cable side, they were like, they were kind of came up through the business together. Ted Turner with the networks, and then John Malone with the cable systems that carried the Ted Turner networks. And they both, and John Malone still is one of the largest landowners in the country.
And also made a huge contribution, if I remember correctly. I don't remember the figure, but the United Nations, Ted Turner did.
Yeah, so good story there, John. Thank you for
Ted Turner passing away at the age of 87, one-time Mr. Jane Fonda as well.
Yes, exactly. Let's get the latest on what's happening in Iran. We certainly have some news flow today. Tyler Kendall, Bloomberg Washington correspondent. She's down in Washington, D.C. Tyler, can you give us the latest on kind of what we're hearing from both the U.S. and Iran here?
Well, Paul, it has been a morning of fast-moving headlines. As of now, a person familiar with the matter tells Bloomberg News that Iran is currently reviewing an updated U.S. proposal and is expected to respond via Pakistani mediators within the next 48 hours. And we're seeing President Trump try to ramp up the pressure on the country. He posted earlier today on Truth Social, basically threatening to resume military operations if Iran doesn't come to the table. Our reporting indicates that right now the two sides are discussing a one-page memorandum of understanding that would first seek to have a gradual reopening of the Strait of Hormuz, with the U.S. lifting its naval blockade. Under this plan, how it stands, it would appear that that would then kick off another round of more detailed negotiations surrounding curbs to Iran's nuclear program. Axios was the first to report on this memorandum of understanding and had a little bit more detail about what it could entail, including that we may see progress around Iran removing its stockpile of highly enriched uranium, and that Iran may agree to a moratorium on uranium enrichment. But we should say that we heard from Iranian state media actually within the last hour disputing this, saying that, quote, the nuclear issue is not under discussion at this point. Paul and Scarlett, it's very clear that a lot still needs to be worked out here. In fact, President Trump told the New York Post this morning that it is, quote, too soon to even talk about discussions for another round of in-person talks, since so far these negotiations for now have just been happening over the phone.
So, Tyler, just help me distill how this proposal is different from the proposal that has been made in the past. It sounds like it's just a more moderate version of what the U.S. has demanded before, which is a reopening of the Strait of Hormuz immediately and Iran putting to rest its nuclear ambitions immediately. Now it's kind of being ratcheted down.
No, that's a really good point, Scarlett. And actually, most importantly, perhaps, is that under this plan, it is our understanding that it would kick off this new phase of negotiations around Iran's nuclear capabilities. That's going to end up being the big sticking point in this. The White House has previously said, after we had reported that Iran put this idea of delaying talks about its nuclear program on the table, that that was a non-starter for the White House, that any deal must include commitments to put curbs on those nuclear capabilities. So we'll see if in this one-page memorandum that happens first, that there isn't any sort of postponing. Yet we heard from the Secretary of State, Marco Rubio, yesterday saying that these talks are very technical, that it's going to take time to have this happen. So maybe this is some sort of compromise that has emerged, that there will be some sort of firmer commitments on what Iran is going to work towards when it comes to its nuclear program, but that we're going to have to see that ultimately phased in, because these talks have been going back and forth. The negotiators aren't even in person quite yet. But it is very clear that this White House wants to get momentum going towards a deal. We saw President Trump pull back on the initiative to help guide ships through the Strait of Hormuz after that contributed to the worst flare-up in fighting since the ceasefire began just earlier this week.
Tyler Kendall, thank you so much for your reporting. We really appreciate your time. Tyler Kendall, she is the Bloomberg Washington correspondent for Bloomberg News, locating down in our Washington, D.C. studio. Again, maybe some headway there, some movement forward. Certainly seeing that in the energy markets. WTI crude oil off about 7% here today, about $95 per barrel. Had reached $88 earlier today, so off the lows, but still reflecting maybe some easing tensions, at least on the margin here. Brent crude, that's off 7%, down to $102 per barrel. S&P up 0.8%. The NASDAQ up over 1%. The VIX below 17. How about that? This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. S&P 500 and the NASDAQ, for that matter, on track to hit more records today. Investors hopeful that the U.S. and Iran nearing a peace deal, although some of that earlier optimism seems to have faded just a bit. In the early going, the Dow Jones Industrial Average of 575 points. That's a 1.2% pop. S&P 500 65 points higher, up 0.9%. We're at 73.24 on the index. And the NASDAQ Composite Index 1% higher. That is up 270 points. You have Brent crude down 7% right now, 101.93 a barrel. West Texas crude, that's down 7%. It's under $195.14 a barrel right now. Big winner today, Advanced Micro Devices, flood of data center spending boosting the sales forecast there. They delivered after the close yesterday. Chipmaker giving a pretty strong prediction for growth And the shares this morning among the most active, and they were up close to 20%. Then you have Disney seeing little magic this morning. Guests spending more at Disney's theme parks, booking their cruises. They've flocked to the theaters recently to see Zootopia 2, Hoppers, and Avatar, Fire and Ash. This, along with improving revenue in the streaming business, helping Disney post stronger earnings results than expectations. And then CBS raising its financial outlook for the year. Health giant's Aetna insurance business is making changes over the last few years to boost profitability. And again, just to recap, I'm watching CNN. It's like wall-to-wall coverage of this, obviously.
Yeah.
But
huge for
CNN
them.
founder, media and philanthropic pioneer Ted Turner has passed away. So just to recap that for you, we check the markets and other news for you right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Scarlett and Paul.
It feels very meta that CNN is covering
Yes, good point.
the passing of Ted Turner like this.
Yeah, but I mean, just to put it in context, he was one of the absolute pioneers of the cable television industry as we know it today.
Mhm.
You know, John Malone would lay the cable, and Ralph Roberts from Comcast would literally string the cable along. But it was the programming side of it. Ted Turner was one of the originals.
And he weighed in on everything.
Yes.
Right? He had lots of opinions.
Larger than life, true media mogul, huge personality.
Atlanta Braves owner. And
Yep.
I do recall back in the day making a bid for CBS. It would be funded with junk bonds.
Yeah, those were the
Do you remember
days,
that
baby.
one?
There we
Feels
go.
like we've come full circle.
Yeah,
Exactly.
the uproar that caused.
Exactly. All right, let's get back to it here. Elon Musk's SpaceX is proposing to spend $55 billion to begin construction on a new semiconductor production facility. And guess where? Texas, dubbed Terafabs. Let's check in with George Ferguson, senior aerospace, defense, and airlines analyst for Bloomberg Intelligence. I think we need to also, I think he's going to be the space analyst as well, because aero defense.
Your portfolio is expanding,
aerospace-
George.
Exactly, George. George, talk to us about SpaceX. What do you think they're doing here as they get ready to maybe go public?
Yeah, so we do cover space first. Yes, that's
There you go.
Our aerospace.
Thank you.
Sorry, and well, I mean, I think he's concerned about his supply chains, right? He sees a heavy need for semiconductors. I mean, you know, part of sort of putting SpaceX and XAI and Starlink together was all about putting data centers in space, which requires a lot of computing power, which requires chips. You know, covering him from afar before getting SpaceX, you know, as he's preparing to go through his IPO. One of the things I've sort of heard and seen is just that Elon Musk likes to control his supply chain. And I think he also likes clearly to drive down costs inside his supply chain. And he's done it with Tesla from some of the analysis I've seen. And I think this is that same playbook, right? He wants to own a supply chain. He knows semiconductors is a big issue. He knows he's going to need a lot of them. And so he wants to get in it and build it himself. And I think would be a great thing. I think I could see a lot of other industries in the U.S. that would like a more robust U.S. semiconductor supply chain, including defense. So he may also find other opportunities for these chips he's making. But supply chain control, I think, a concern about getting enough.
Okay, Elon Musk, he is known for thinking big, really big. Is it realistic of him, for him to be able to create a semiconductor plant that can really move the needle, take on stalwarts like TSMC?
You know, look, there's a lot of people that have bet against him, and I think sort of the roadside is littered with them, right? And so I'd be very careful. I'm typically a doubter. It comes from, I think, my early days in credit. I'm still working through it in therapy.
Yeah.
But the issue is here, right? Look, we've watched them even in SpaceX, right? We have a company now that's launching 150, 60 rockets a year, reusing bottom portions of those rockets and driving down the cost to access space. And I think if we talked about this 2 decades ago, we'd say never going to happen, right? And he is by far the leader in space launch now. Again, every other day he's launching something.
Yep.
Even New Glenn couldn't get it all right in the last launch, and they're trying to catch up with their billions of dollars. So I would say it's big. He always goes big. I have a hard time betting against him anymore. He's done so many things big. I think he's got a real good opportunity.
George, what do we know about the timing of this potential IPO? It's been reported for a while, but haven't seen much.
Yeah, neither have we. We keep hearing June-ish, summer-ish, and so the noise I think has gotten a little fainter recently. As you know, Paul, to sort of watch markets and see how they're performing. But I think I think that, to me, if the markets are performing, the timing looks right to put a lot more cash again inside this SpaceX venture, and go for this, data centers in space and more investment in XAI. Again, with this New Glenn failure the other day, the FAA is looking at what happened in the New Glenn shot. His distance on his competitors looks even better. I would think that would help going into an IPO.
All right, good stuff, George. Thank you so much. George Ferguson, our senior aerospace defense and airlines analyst, joining us from Princeton. Let's come back to earth and talk a little bit about companies that have things that drive on the roads, on the ground here, and that is Uber. Uber coming out with results. Investors really like them because the stock is up almost 9% on the day. Mandeep Singh is our global tech research head here at Bloomberg Intelligence. He covers tech companies, including Uber. Mandeep, what does Uber results show you about how its core business, which is rideshare, versus its ambitions for driverless rides looking? What does that tell you about its prospects?
Yeah, I mean, look, this is a company that still has the scale when it comes to ride sharing, food delivery, 3.5 billion rides. And when you compare to the scale of rides for Waymo, for example, even though it's growing really fast. And in the case of Uber as well, they talked about AV rides growing tenfold. But these are just 15 million run rate compared to 3.5 billion rides that they did in the quarter. So at the same time, I just feel with Uber, there are some headwinds in the sense like they have to scale AV rides where their take rates go down. They have to start buying fleet for AVs now through their investments in Neuro, Lucid. So this was an asset-light marketplace business. It feels like where it's going with Uber is also they will have to ramp up their investments. And so from that perspective, I definitely feel that they will run into some issues when it comes to their margins and take rates going forward with the pivot to AVs, which clearly is the fast-growing part, albeit it's very small.
How is this ride-sharing market? How do investors think it's going to evolve here? I took my first Waymo ride, a couple months ago in Santa Clara, California. Is that a substitute for Uber/Lyft ride? How do you think about the future of this industry?
If you have to go from point A to point B, and look, with Uber, almost 35% of their rides come from top 10 cities. And these are metropolitan cities. Okay. So if Waymo is operating in the same cities, and look, in some cases, they are partnering with Uber. But in a lot of the other cities, they're not partnering with Uber. So suddenly, your market share will be going down because people are using, and these AVs have a higher utilization. So I think Uber definitely has the advantage of scale and the fact that, they operate at a much bigger, level than any of the other smaller providers, especially Lyft. But I do think over the medium term, the AVs will start hurting their margins. And
interesting. Yeah. I don't know. I get in the back of an Uber with somebody I don't know, never met before. What's this difference between a human and some technology?
The human will still let you out of the car if you want to get out. What if the Waymo is locked and you can't get out? Or what if there's a blackout like there was in San Francisco and the car just stops in the middle of the intersection, which is what happened in San Francisco?
But, there are remote teleoperators.
No, I'm just reporting what happened.
But there are remote teleoperators, to your point. It's even though there is no driver in the car, there is somebody watching if remotely. So if there is a problem in the car, it can be managed.
Just like when I have a DoorDash problem and I try to text someone, there's a person there who ostensibly should answer but never does.
Yeah.
Mandeep, let me ask you about Lyft, because you mentioned this, the fact that this is the smaller rival. They're reporting earnings tomorrow. Uber has this scale. You said 3.5 million rides?
Yeah.
We know Lyft is starting to expand internationally. I mean, can it ever be anything but a distant two?
No, I think that's where it will remain a distant two, no matter what they do in terms of geographic expansion or in other new categories like food delivery and grocery delivery, because it all adds up. And that seems to be the playbook. So Uber had the right idea in terms of amassing scale through, international expansion and different categories. So Lyft is probably 3-4 years late in terms of emulating that. But look, I think the big technology change is with AI and with autonomous rides. And if Waymo is successful, the pace at which they're adding supply, and it sounds like people prefer to have that sort of ride and they feel safe, then it will have a bearing on the business model of these companies. And you can already see that with Uber. They are investing, $1.5 billion in Lucid to get AV fleet. So suddenly, you're not an asset-light model anymore.
Right.
Interesting. I arbitraged last night. I saved a bundle, Lyft versus Uber, and so I feel pretty good about that.
Did the ride experience feel different?
It's
in
the
any way?
same driver in the same car. He's got a Lyft sticker. He's got an Uber sticker. Why do you not arbitrage? I don't get that. But Matt Miller's like, I just
Some
go.
people are Uber One members, the loyalty program, so they want to make sure they accumulate points, just like some people only fly United.
I'm Paul Sweeney One member, the cheapest price for me. So anyway, to get me a point, that was a big trip down to the shore. Mandeep, thanks so much for joining us. Mandeep Singh, Global Tech Research Head for Bloomberg Intelligence. You think about the divergence when Uber and Lyft came public, and the divergence, how big Uber's become.
Yeah, I mean,
and Lyft is just a
invented
fraction.
the food delivery business in a way that Lyft can't catch up to.
Yeah, it's
at
just
least right
amazing
now.
how one was so successful and the other not so much. And again, they started from roughly the same spot, coming public at roughly the same time. Well, more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News with this Bloomberg Business Flash. Looks like we're on track for more records. Did have a record-setting day yesterday for the S&P 500 and the NASDAQ, and they're headed that direction again. S&P 500 up 77 points, 1% pop there, 73.36 on the index. The NASDAQ Composite Index 331 points higher. That is up 1.3%. The Dow also higher, but still shy of any record, up 562 points. Now that's a rise of 1.1%. 8 of the 11 major industry groups in the S&P 500, they're pushing higher right now. Energy is actually the worst performer as you have crude oil prices falling. Brent crude down 7%, 101.77 a barrel. And American crude, West Texas, 7% lower at 95.03 a barrel. One of the most active advanced micro devices, the leading challenger to NVIDIA in AI computing. Those shares are surging. They had results after the close of regular trading today. Right now, 15% higher. A flood of data center spending boosting its sales forecast. NVIDIA has purchased $500 million worth of rights for shares in Corning, the fiber optic maker. It's part of a broader partnership between the two companies, and it's aimed at expanding, yes, artificial intelligence infrastructure. At Corning of upstate New York, those shares right now are 12% higher. No thanks to Paul Sweeney. Uber delivering a financial forecast that topped Wall Street expectations, and shares of Uber, they are higher in the early going. A snack maker getting a brain boost, the company that makes Baby Bell cheese and other grab-and-go bites, buying Ingenuity Foods, which is behind the Brainiac and Little Brainiac brands of applesauce squeezers, berry fruit snacks, and pouches of fruit and veggie blend.
Baby Bell, my kids loved that when they were little.
Yeah, this is apparently brain food. So, oh no, Brainiac includes omega-3 and other ingredients intended to foster brain health. Maybe that's my problem. I didn't have this stuff as a kid.
They didn't call it protein in the same way they call it now, right?
No.
That's another form of protein.
I don't know. Yeah.
And I just recently learned, like, while my mother was pregnant with me, she was drinking cream de menthe. Anyway,
that explains a lot.
We checked.
I have memories sitting on my mother's lap watching like Jeopardy. She's got a cigarette hanging out of her mouth. How good is that?
Good
we
for
survived.
You. We did all right. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Scarlett and Paul.
Right.
Scarlett doesn't want to confess anything. Okay.
I mean, come on. I was
like
exposed to lots of
here.
secondhand smoke, so I've watched a lot of TV with bunny ears as well. All right, let's talk a little bit about one of the companies that has been around for at least that long. Walt Disney Company coming out with results, and investors seem to like what they're seeing. The stock is up more than 8% after Walt Disney posted stronger results than Wall Street had expected. All three of its main businesses beating analyst estimates. We're going to talk about that as well as the digital advertising space with the CEO of Mountain. He is Mark Douglas. He's the president and CEO there at the company, and he joins us now. And Mark, I just want to start on what's happening at Disney because it is a Dow company. It is an S&P 500 company. From where you sit as a digital advertising company, what do you see about Disney that other media companies can't quite replicate?
Well, I think in Disney, one thing is the set of properties they have. I mean, they literally have Disney. They have ESPN. They just have brands that people understand what they represent and why they would go there to be entertained. And then it goes beyond media. That goes to the Disney parks, Disney cruises, and things like that. I also think that they're doing a very good job in terms of execution right now. Things might have gotten a little soft there, but that team is determined to win. When I talk to executives there on the media side, they are very competitive with Netflix. And, like they are very focused on winning. And I think you're seeing the results of that in terms of some of the results you're seeing for the quarter and hopefully for the rest of the year.
Mark, from your perspective at Mountain, you see where kind of the ad dollars are being allocated here. Are we getting to a point where, maybe outside of live sports, it's going to be, almost impossible for broadcast networks, cable networks to attract advertising as more and more and more goes to the digital platforms?
Well, I think we're already past that point in terms of cable networks. I mean, the only conversation people want to have, and that includes the advertisers as well as the sales teams at companies like Disney, are about streaming. So it's not, obviously there's still a big portion of the US that has cable subscriptions and watches cable, but all the real conversation is on streaming. And by the way, the reason for that is people want to talk about audiences. The idea of just broadcasting out a message and hoping it's received and the old adage about wasting half the money, I think marketers have figured out, and we kind of led the way at Mountain, this concept that television can be a performance channel. We're seeing that not only in small, mid-sized businesses, but also on the enterprise side. I think literally the sales teams of these big media companies are understanding that too, and they're adjusting and responding to it.
Mark, aside from live sports, where do advertisers, what kinds of programs, what kind of content do they want to be linked to? What kind of shows do they want to be advertising on?
Yeah, I mean, this year in terms of live sports is insane. Between the Olympics, the World Cup that's coming later this quarter and going into next quarter and stuff like that. There's just been the Super Bowl. There's just been an incredible lineup. But reality television is incredibly attractive. The home improvement. But I want to make one other point with that. I always say television has the best content in the world. It's the thing you talk about over. I can't remember the last time I've been at a dinner and someone didn't say, "What are you watching these days?" And they don't. And it's just a natural conversation. They're generally not talking about movies. They're talking about television. And so it's this incredible medium. And I think advertisers love to associate their brand with that kind of content. But increasingly, they're focused on audiences. I want to reach a certain group of people, regardless of what they're watching, as long as they're watching it on the biggest screen on the home. So I think live sports and that kind of entertainment, these tentpole events are really important. But what's ultimately important is basically turning TV into a digital channel. It's no longer broadcast. It's now you can pinpoint consumers and get your message across to them 30 seconds uninterrupted time.
How about YouTube TV? That's become obviously the dominant player in digital video. Talk to us about where that business is and how advertisers view it.
Yeah, so I think there's YouTube and there's YouTube TV. YouTube TV is actually pretty small. YouTube is obviously very large. I like to say about YouTube versus streaming television is that YouTube owns the day and television owns the night. And it's just two very it can be the same person doing both. I know I do both. I consume a lot of YouTube and I watch, I enjoy being entertained. I enjoy being told a story. So I watch a lot of TV, but I do them at very different moments. And they're both a portion of my life as well as social media. I think the individuals, they understand what they want when they want it. And they're not this idea that YouTube is competing with, season finale of Landman. It's just not happening. People are not, they're not making those choices.
You guys at Mountain just reported earnings. Tell us kind of what you told your shareholders today.
Yeah, so we had a great quarter. We beat and we guided up for the year. And so we're seeing continued growth in our business. We're excited about it, and we have more quarters to come. So
why do you think that the stock is trading down today?
If I could predict how the stock market's going to go, we wouldn't be on this call.
Exactly.
So,
right.
I can't tell you. I can't answer that question.
All right, Mark, thanks so much for joining us. Mark Douglas, he's president and CEO of Mountain. It's a publicly traded company, MNTN. They reported some earnings today. Just getting a good conversation on kind of where the advertising dollars are going out there. It's such a big marketplace, the total ad spend, but it's been a seismic shift over the last 20 years from broadcast and cable television to really digital advertising.
Yeah, and just to stay on that theme, for anyone who is just tuning in, Ted Turner, who of course founded CNN, and that really led us into cable television, 24-hour TV news. He has passed away at the age of 87. Of course, he created CNN, but he also inherited the billboard business from his father and turned that into this media enterprise.
Yep, absolutely. And just one of the great media moguls, true to that term for sure. Ted Turner, one of the giants, the from the south. S&P
what a
500
great
up exactly
nickname.
up 80 points. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Live Nation. You want to go to a concert? You want to buy a ticket to go to a concert? You got to go through the folks at Live Nation. They own that business. Although
They'll take a piece of your dollar.
yes, the government is looking at it as well. So I mean, I bought 2 movie tickets to go see Devil Wears Prada. 2 tickets, $51.
Did
In New Jersey.
You clearly bought snacks along with it.
No.
No?
Karen from the Jersey Shore snuck in some popcorn.
Huh.
How about that? So anyway,
brutal.
Live Nation reporting some numbers here. We'll get to it right here. Kevin Neer joins us here. He covers a lot of the live action sports and all of that entertainment and media stuff for Bloomberg Intelligence. Kevin, talk to us about Live Nation here. Talk to us about kind of their results. How's business?
Yeah.
And then ultimately, how are they dealing with the regulators here? Because I know the regulators are looking at their Ticketmaster business as well.
Absolutely. Thanks, Paul. I mean, we'll talk about the regulatory in a minute, but I would say, just looking at the entirety of the business, I mean, this was a great start to the year. The forward indicators are very, very strong. The fundamentals of this business are great, growing internationally. I mean, concerts, their biggest segment was up 12%. Ticketing was reaccelerating. Nice on-sale activity there. And then we saw a lot of the Venue Nation investments flow through on the sponsorship line. So overall, great 1Q print. They feel very good about the supply and demand dynamics, but we'll have to see again how that litigation shakes out later in the year.
Have they changed the way they do business ever since the government began taking a much closer look at the Ticketmaster business and the ticketing business?
Yeah, they've been public about making some significant changes to Ticketmaster. Most notably, I would say, is on the secondary side. So secondary resale for Ticketmaster has always been a very small portion of their business historically. low teens % of their total transaction value. What they've seen, though, especially since the launch of the Bots Act recently, and then the FTC is suing them for supposedly violating that, they're making it much harder for brokers to sell large quantities of tickets, resell large quantities of tickets on their platform. So they see that business declining, but largely offset by growth in primary.
So ultimately, what's kind of the consensus out there about what Ticketmaster might have to do? Live Nation might have to do with its Ticketmaster business.
Yeah, so the states are going to be seeking a divestiture. We know that. We think it's going to be quite difficult. It seems the consensus is that it's going to be quite difficult for the judge to actually get that through, especially with the DOJ settlement that's still being looked at. But really, there could be other remedies that could increase competition in ticketing and in live concerts. So one thing that's been proposed that we're very seriously concerned about is if they would be forced to sell off any of their venues. So that's really the biggest growth vertical right now for them, is investing in venues, investing globally, and that's driving a lot of the profit, a lot of the
physical
margin
venues.
Expansion. Physical venues, yeah, from theaters to clubs to arenas, all the way up to partnering in some stadiums as well. It's been a great story. It's really helped the valuation, but if that isn't there anymore, that's a really, that's a big hit.
You mentioned them making some tweaks around secondary ticket sales, but it's the primary ticket sales that are the issue, right? If I want to buy tickets to a concert and I can't get it because the bots buy it up in the first 5 seconds, I'm out of luck. And then I have to go to the secondary market.
Yeah.
What is Ticketmaster doing to address the primary market problems?
Yeah, so you mentioned AI, and they said this on the call last night. They still see the chaotic, the stress of the on sale is really the biggest pain point for them right now in the ticketing business. They're working with, they've made a lot of hire, they're staffing up to build out their AI offerings, right? So they're using AI to hopefully better detect fraud. Ticketmaster is one of the most highly attacked websites on the internet,
Really?
bar none. But it's a challenge, right? And we've written about this. Even as they're investing in AI and trying to improve their fraud detection, trying to make it easier to make sure that tickets actually end up in the hands of fans, professional sellers are using the same tools to try to get around those verification tools. So it's really an arms race right now.
I see you also cover Sphere.
Yes.
Stock is ripped. Been amazing. Now,
Amazing
I was
story.
supposed to go there to see the Eagles, but I bought fraudulent tickets, so I didn't go.
Did you really?
Really?
Yes. And, yeah, and they're not cheap, by the way. And, I was going for the best.
You bought
they
this
had.
online?
Yes.
Ooh.
Day I was flying out there. Boy, those tickets aren't in my account.
Oh.
Yeah. So, anyway. I learned a lesson there at the age of 61.
Yeah, you did.
Talk to us about Sphere. It's been a great stock.
Yeah, absolutely. I mean, they've really proven out the business model in the last year, I would say. And the biggest difference has been the launch of this, what they call an original experience, the Wizard of Oz. It's gone from a concert venue where they were having a few shows a month to almost like a quasi movie theater where they're showing this program. They're charging $100+ a ticket multiple times a day. And then you stack a concert on top of that. It makes for a very profitable day.
And they're trying to replicate this around the world, right?
Yes.
There's going to be Spheres launched in other cities.
Yes, conversations are accelerating. They're actually furthest along with the pre-planning phase in Abu Dhabi. They were a little bit talking around in terms of, at the Middle East flag. We'll kind of delay that. We think it will. But the conversations are broadening, right? They're now a little bit further along with supposedly a new sphere coming in DC, a smaller sphere. We've heard reports that they're looking at Nashville, at Japan. So it seems like there's a lot of appetite.
And this was all the brainchild of James Dolan. I mean, when he first came up with it,
Yes.
there are a lot of doubters out there.
Completely. And the cost to build the initial venue it skyrocketed. I mean, the original estimate was like 1.5, went up to 1.9, then COVID happened. It ended up at $2.3 billion for this venue. So really, really.
I tell you, it's a great addition to the Vegas Strip skyline. And that's hard to do. Yeah. Because
it separates
Vegas
Vegas from, say, Atlantic City, right?
Yeah,
because
it's
Vegas
awesome.
is a destination where you can do things, see things, and Atlantic City is where you go play slots.
And the Exosphere is totally unique, right? And as they scale up, as they add new venues, that opens new opportunities for sponsorships.
Market cap, $5.2 billion Sphere. Stocks up 50% year to date, up 400% over the trailing 12 months. People have gotten this story, I guess. Kevin Neer, thanks so much for joining us. Good stuff. Obviously, well trained. And then whoever trained his trainer probably did a good job too. So
Paul
we'll see
Sweeney,
how
are we
that
looking
works.
at you?
That might be me. That might be. But Keith is like the smartest. Keith is like the smartest person in Bloomberg. Period. In the
And we'll
entire
get to talk
building.
to her next hour.
We'll talk to her next hour about what's going on at Disney there. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good hump day morning. This is Bloomberg Intelligence, streaming live on YouTube. Paul Sweeney and Scarlett Fu and Charlie Pellet reporting live from the Bloomberg Interactive Broker Studio in Midtown Manhattan. We are also available on Bloomberg.com/video, as well as streaming on Bloomberg Originals. So if you missed us here, you can find us in all kinds of places. Coming up on Hour 2 of Bloomberg Intelligence, we're going to check in with our Geetha Ranganathan to recap the latest results from Walt Disney. That stock is flying right now. Brian Egger, who covers our gaming and lodging companies, will join us to discuss Marriott's earnings. Plenty of people still paying up for hotels and paying up for traveling, despite all the geopolitical headwinds. RJ Gallo, who is Deputy CIO of the Global Fixed Income Group at Federated Hermes, will talk about the outlook for the overall markets as yields come in. And Kunjan Sobhani, Bloomberg Intelligence Senior Semiconductor Analyst, will give us the latest on AMD. That stock is on fire this morning as well. First, though, let's go to Charlie Pellet for a check of our Bloomberg Business Flash.
And we go right to the numbers. What a day on Wall Street. We've got the Dow, the S&P, NASDAQ all ripping higher. We are looking at records right now. Stocks are surging on hopes that the U.S. and Iran are nearing a deal to end the war right now. The S&P is at 7,347, up 88 points right now. That is a gain of 1.2%, and we are at the best level of the day. Dow Industrials up 660 right now, up by 1.3%. NASDAQ at a record up 363, up 1.4%. The NASDAQ 100 index up 1.5%. The SOX keeps on going, up by 2.6%. All of this with the VIX just above 17. And it's not just about Iran. From New York to London, Tokyo as well. Stronger risk appetite driving global shares towards records as corporate earnings continue to come in better than expected. Right now, we got the 10-year at 4.35%, with the 2-year 3.86%. Gold 4,700 even the ounce, up 3.2%. West Texas Intermediate crude with a 94 handle. Dramatic turnaround from this time yesterday. WTI down 7.2%. Barrel of Brent did dip below $100 a barrel. 101.81 right now on Brent. That is down by 7.3%. Also, sentiment around artificial intelligence after AMD's earnings last night. Lori Calvasine is head of U.S. equity strategy at RBC Capital Markets. And on surveillance this morning, she told us we are beginning to see green shoots beyond big tech as a result of AI implementation.
We are starting to actually see stats about maybe a particular productivity or efficiency initiative and how much that saved. We're seeing more stories of innovation, which I think is ultimately a link to revenues. So I think that we're actually starting to see some tangible results. We're probably a ways off from that really impacting the bottom line. But I do think that we've made important progress, and we've been so distracted by geopolitics this year. I think that story's really gotten lost this year.
AMD, by the way, after earnings up by 14.6%. Lori Calvasina with RBC Capital Markets on surveillance. NVIDIA has bought $500 million worth of rights for shares in the fiber optic cable maker Corning as part of a broader partnership between the two companies aimed at expanding AI infrastructure. NVIDIA up by 4%. Corning, GLW on the ticker, it is surging by 14.2%. And recapping, S&P up 1.2% at a record. Paul and Scarlett, that is a Bloomberg Business Flash.
Charlie Powell, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and at Bloomberg.com, as well as Charlie's just reporting. Stocks up across the board here today, north of 1% for the big indexes. Let's take a look at some of the stocks on the move today. We can do that with Christina Aquino, managing editor for Markets Live for Bloomberg News. Christine, what are you looking at today?
All right, we got to take a look at the AMD poll. I mean, that is a monster move on those shares. Ticker AMD up now nearly 15%. And get this, those shares are up nearly 90% year to date. So they've nearly doubled just in this time alone. And we're only into May. So imagine how much more it can go for the rest of the year. But again, the big story is very much the results that we got. So second quarter, and particularly actually their outlook, because now they're looking at second quarter revenue of about $11.2 billion, plus or minus $300 million, well above the average estimate of $10.5 billion. And so they're also looking at stronger, longer term growth, particularly when it comes to the CPU market for data centers. They're looking at growth of 35% or more than 35% annually, reaching more than $120 billion by 2030. Just in November, that rate that they were predicting for growth in the CPU market was just at 18%. And so it's increased a lot. And that's what investors are really responding to. Bloomberg Intelligence saying that, you know, their outlook really affirms rising demand across server CPUs and very much being driven by the ramp up in agentic AI and inferencing.
Yeah, AMD, by the way, the best performer in the NASDAQ 100 and the Philadelphia Semiconductor Index today. All right, what's number two?
Also taking a look at Corning this morning, Scar, just, you know, keeping with the AI infrastructure theme. So ticker GLW, those shares are up about 11%, or more than 11%, 13%. Now it's extending some of the earlier gains that we saw at the open, and that's set for the biggest gain since January. We know, of course, NVIDIA is the big news here. The company is going to be buying $500 million worth of rights for shares in Corning. So NVIDIA is getting as many as 3 million shares, and then they can buy as many as 15 million shares total. And the exercise price is going to be $180 under this deal. So Bloomberg Intelligence weighing in on this deal as well. They're saying that, you know, the scale-up opportunity probably won't start to ramp up until 2027, 2028, but the sales opportunity could be an additional $6 billion to $10 billion by 2030. So big deal for Corning there.
All right, very good. Arista Networks?
All right, Arista, one stock.
Arista, thank you.
Yeah, one stock.
It's Arista Records.
There you go.
Yeah.
So this is Arista Networks. So ticker ANET, that is one stock that is not in the green today, actually. It's down nearly 15% now, set for the biggest decline since January. So this is a good example of a company nearly meeting estimates, and that's not good enough in this sort of environment. So their first quarter results actually beat expectations, but then their outlook for the second quarter, particularly when it comes to revenue, was in line with estimates, $2.8 billion. And that was seen as too cautious, you know. So Bloomberg Intelligence saying that, you know, that outlook is underwhelming, especially given that they're looking at a 35% growth in a first quarter. And so what gives, right? What is up with the discrepancy between good first quarter performance and a more cautious second quarter outlook? And we're seeing that decline in the shares as a result of that.
All right, good stuff. Thank you so much, Christina Aquino. She is our managing editor for Bloomberg Markets Live. Arista Records, founded by Clive Davis, part of Sony Music.
Yep.
I'm trying to look at some of the musicians they had on their roster, and I'm showing my age because I don't recognize any of them.
There you go.
But I'm going to try to pronounce their names because I don't know what they are. All right, for more conversations like this, subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. Stock Movers is available on Apple Podcasts, Spotify, or anywhere you listen. All right, Disney had a blowout quarter. The results were certainly impressive because the stock is up right now about 7%. It's given back some of its advance because it was up quite a bit more before. Geetha Ranganathan is our Bloomberg Intelligence analyst on U.S. media. And Geetha, was there anything here that didn't deliver?
Not really, Scarlett. So I think people were really coming into this quarter. Everybody was really fearing whether they would lower guidance. They did the exact opposite. Raised guidance for EPS growth 16%. Consensus was expecting about 11%. And really, I mean, the biggest source of fear for this stock has been the theme parks business, just kind of given, the backdrop of rising oil prices as well as macroeconomic factors, geopolitical tensions. But again, management basically saying that theme park demand remains extremely strong, and you have the added benefits of a lot of new cruise ships coming on. So we're going to see an acceleration in that segment through the second half of fiscal 2026.
Geetha, another key driver for this company and this stock has been their streaming business. Talk to us about the profitability. It's finally turned profitable, and talk to us about the profitability now and maybe what are some targets.
So the profitability, they actually, for the quarter that they just reported, Paul, fiscal second quarter, they reported an 88% increase in profit. So definitely a fantastic turnaround from just a few years ago when they were reporting something like $4 billion in losses. So this year, we're going to look at about $2.6 billion in profit. That translates to a 10% operating margin. And really what investors are focused on for the next few years, at least, is that while theme parks is definitely the majority of earnings for Disney, 60% of earnings this year, the biggest earnings growth story is really going to come from the streaming business. So we're kind of looking for ways that how management can basically improve that margin right now, from 10% this year to 20, 25, 30%. And they have different levers in place. The most important one really being price increases as well as bundling, because we've seen them really, achieve a lot when it comes to reducing churn with their bundle, and they plan to do more.
Geetha, I wanted to also get your take on the big headline that we got in the past hour. Ted Turner, who, of course, founded CNN, passing away at the age of 87. Paul has talked a lot about how he is kind of the, walking and no longer walking, but the embodiment of the 21st century, 20th century media mogul. Tell us a little bit about how you see him influencing and affecting the media industry that you now cover in 2026.
Yeah, huge news. I mean, obviously a legend and the pioneer for the whole cable network business itself, and of course 24-hour news with CNN. We've kind of come full circle, Scarlett, if you just kind of look at it from a business perspective. I mean, obviously, Ted Turner, at the height of his career in the 1980s and 1990s, established the whole Turner network business, sold that business to Time Warner. And then we've seen that property kind of change hands over the years so many times, with a sale to AT&T and then a sale to Discovery. And finally, this year, potentially a sale to Paramount Skydance. So really kind of, shaping the media ecosystem in so many different ways. And, Paramount Skydance, as it kind of closes this year on this Warner Brothers Discovery transaction, along with, of course, those Turner networks, it will, I think, really reshape the media ecosystem in so many ways that, Ted Turner obviously set up. So I can't understate his role in definitely shaping the whole media narrative today.
Geetha, well said. Appreciate it. Geetha Ranganathan, she is the media analyst for Bloomberg Intelligence, joining us from Princeton. Some more earnings out there in the space of the hotel business. Marriott beats estimates as global travel demand stays strong. Brian Egger joins us here from Bloomberg Intelligence. He covers all the gaming and lodging companies, the casinos, all that kind of fun stuff, the theme parks. Talk to us about Marriott. What did you learn from Marriott? What are they saying about their business?
Their business overall is really quite strong, and it's strong globally. I think the one pressure on their business is the Middle East, obviously, in the war in Iran, both reflecting hotel stays in that region, but also as a kind of a global travel hub. It is affecting some visits to the other parts of the Asia Pacific region, but there's some good news as well. A lot of good news in terms of their overall business.
Like many other hotels, Marriott has embraced the asset-light business model. Mm-hmm. Is this a permanent shift where these big hotel operators don't actually own any of the properties and, they just license out their name and kind of oversee everything?
Yeah, I think that's an ongoing shift. I mean, it's really true of most of the major operators, Hyatt, Hilton, Marriott. There's still some owned hotel exposure among them, but it increasingly is an asset-light model, both for hotels and for parts of the gaming business too.
What's going on in China for Marriott and just for the industry in general? How's that going?
China, the outlook there, for at least for Marriott, is actually somewhat improved. They were going into this year, before this quarter, expecting kind of a flat performance there for revenue per room. Now it's actually up, we'll kind of call it low single digits. And I think some of that is visitors from other parts of the Asia region visiting China. Still kind of a lot of pressure on inbound travel, let's say, from North America or elsewhere. Certainly pressure on inbound travel from the Middle East now. But I think some of that travel demand has been better.
Have hotel operators like Marriott solved the Airbnb challenge? I mean, have they figured out how to hold their own against Airbnb?
I think the Airbnb business is a competitive factor for certain parts of the lodging segment, particularly kind of more price sensitive, remaining room inventory.
Or families even.
For families, sure. I think it is a reality. I don't think for the core part of the business as it relates to upscale business travel, conventions, and other types of independent travel, not an overall impact that's getting any more pronounced that I've seen.
So when we go skiing out west with the boys, we use like Verbo or something like that.
Right.
And, we want the hot tub. We want the nice condo.
You
and
want
all
the
that
kitchen too.
Yes, and so it kind of delivers. It fills a need there. Marriott, like a lot of the other big companies, has so many brands, Brian. They really carve up the market, segment the market here. Are there certain brands that are working better than others? Is it one of those K-shaped things, like the wealthier spending and maybe some of the more economically sensitive people?
Yeah, it's
less
interesting.
So?
In some 31 brands. I mean, I've heard the K-shaped terminology. Now, increasingly, what we're hearing is kind of the C-shaped terminology. C-shaped is a little different, where for a while, recently, luxury was outperforming. The limited service, more price sensitive, was a bit weaker, having recovered dramatically in the early parts of the pandemic, bounce back. Now what we're seeing is that, luxury is still strong, maybe tapering off a bit, but it's the mid-scale limited service segment that's actually coming back. And that's some good news that's driving franchise fee growth. So there's a little bit of recovery there compared to what we saw last year.
Brian, how big a player is Marriott in the credit card rewards game? I know that Ritz-Carlton and Chase have a card that is hard to get, and everyone talks about it, trying to be invited to that. But how big of a player are they compared to, say, Hyatt?
Yeah, branded credit card licensing fees, I can't quite compare head-to-head Hyatt and Marriott, but it is a important part of their fee structure. So it does aid fee growth, and it's been a good source of additional growth for that part of the business.
I'm obsessed with those credit cards, reward points and everything, and how to maximize them. Yeah. There's tons of Reddit threads on this, going back to the conversation we had last week.
I know, and one of my offspring, she just pinged me, I need your Amex number, because she's getting, Olivia Rodrigo, is that a singer?
Concert, yeah.
Yeah, concert tickets, but there's, for Amex, I guess there's you can get it early or something.
Yeah,
so I said, you don't have an Amex card? She said, no.
She just want to pay the annual fee.
Yeah, and not enough points. I get all I can get from all these.
Plus, you have it.
Yes, plus Dad has it. Yeah, so there you go. Brian Egger, thanks so much. Appreciate that. Brian Egger, Senior Gaming and Lodging Analyst for Bloomberg Intelligence. So I guess, playing that game, but you're aggressive on the credit card.
I'm not as aggressive as I could be. I'm just kind of trying to understand the landscape, right?
Okay.
The lay of the land and, what I can do with it. But they keep changing the rules along the way, too.
Yeah, because I think people will get good at it.
Yes.
And then they have to change it. And again, I hear from my daughter, she and all her friends, they're all into this. They went to Asia, like Charlie Pellet, and spent like $5 a day.
Yeah, so, Gen Z and millennials are super, super into all of this.
Yeah, they are. They're smart about it. I'm just like, throw my card down, I'm good. S&P, plus the scratch I got him, cash in the pocket. S&P up 80 points, that's 1.2%. The NASDAQ, it's up 360 points, 1.4%. So some big moves higher in the equity indexes today. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:20 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. S&P once again back at the best level of the day. And this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Stocks are pushing higher on hopes that the U.S. and Iran are nearing a deal to end the war that has jolted markets and clouded the economic outlook. Right now, the S&P is at 73.46, on track for a record close, another record, up 87 now, up by another 1.2%. The Dow also advancing 1.2%, up 618 points on the Dow. On NASDAQ is up 367 for the NASDAQ Composite Index. That is a gain of 1.4%. All of this with the VIX just above 17 now, the 10-year 4.34%, the 2-year 3.86%, and the 30-year back at 4.93%. Gold up $142 the ounce, surging 3.1%, $46.99 on the precious metal. West Texas Intermediate crude back with a $95 handle, down 7%. Barrel of Brent did dip below 100, right now 101.84. Brent down by 7.3%. Morgan Stanley is rolling out cryptocurrency trading on its E-Trade platform. The Wall Street Bank is charging clients 50 basis points on the dollar value for each crypto transaction, undercutting Coinbase Global, the biggest crypto exchange in the U.S., as well as Robinhood Markets and Charles Schwab. Again, recapping here, we do have the Dow, the S&P, NASDAQ all advancing. S&P right now up 86. That is a gain of 1.2%. Paul and Scarlett, that is a Bloomberg Business Flash.
All right, Charlie Powell, thank you so much. Appreciate that. Scarlett Phil and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. Looking at the 10-year Treasury yield, we're pulling in about 7 basis points, 4.35%. We were on 450 watch just a couple of days ago here, so we got yields pulling back a little bit, stocks moving higher here. RJ Gallo joins us here, Deputy CIO, Global Fixed Income at Federated Hermes out there in Pittsburgh. RJ, we got the 10-year again, kind of in that trading range, 4.5%. What's your call on kind of where the Treasury bond market is these days?
We seem to be pretty much trapped and subject to the latest news that's coming out with respect to the conflict in Iran. Today, obviously, the news is hopeful in terms of a potential off-ramp. Don't know whether or not this will hold. You know, for many, many weeks now, it's been back and forth with respect to oil prices. As oil prices go up, Treasury yields go up, and vice versa. Today, it's obviously the latter. Remains to be seen whether or not this will hold. We've been in a pretty narrow range. From a tactical standpoint, we felt if we get to 450, we would expect to see some buyers, and we might be even included in that. But at this point, you know, we got a little further away from it, and we're back towards the middle of the range over the last month. And it all depends on whether or not Iran and the U.S. can find a credible, lasting process to end this conflict. You know, the political ramifications are pretty significant. President Trump's net approval rating is at lows for his second administration. I think it's among the lows for both of his administrations. So he's feeling some political pressure. Iran also has plenty of pressure because they can't get goods in and out of their own ports. So it seems like negotiation is the only way out. We'll see if this sticks.
So it feels very much like the Treasury market is hostage to the oil price and how it moves.
Yes.
What gets people back to trading on fundamentals or looking at your traditional catalysts?
Oh, I think people would love to shift gears and talk about the change of leadership at the Fed and what does it mean to have Powell in the room during the FOMC, focus on the AI spend, the CapEx, which is obviously stimulative to the U.S. economy. But so long as there are, I think it's like 1,500 ships or something that are trapped in the Persian Gulf, and you know, roughly 20% of the world's oil is unable to flow through the Strait of Hormuz. It's sort of hard to look beyond that. What's interesting to me as a fixed income guy is how the equity market seems to be very much willing to look beyond that. And I think you could make the case that everybody agrees that this war is not going to go on for years. I don't think this is a Russia-Ukraine situation. But I think I am a little surprised that the risk assets markets, equities, lower quality bonds, their willingness to look through this to the point that I think they're almost underplaying the degree to which there are significant ramifications in terms of supply chain, oil, fossil fuel extraction, fossil fuel processing, fertilizers, and many other things that I think will be living with this disruption longer than just when the first boat flows through the Strait of Hormuz. And as a result, oil prices will likely be significantly elevated versus their ex-ante levels before the conflict began. And so inflation, how does the Fed deal with that? And what does that mean to broader macro performance? Those are all still to be worked out. And the stock market seems to be just focusing on AI, corporate profits, AI, corporate profits. These other things, I think, might be wrinkles that will matter.
Given that backdrop, RJ, how much credit risk do you want to take today?
So on a credit risk standpoint, we've been underweight high yield. Valuations there are just not as compelling. When you look at the earnings of U.S. corporations at the largest, say, 500 corporations, thinking the S&P 500, the story has been very, very strong. But when you get down into the U.S. high-yield corporate universe, you're not looking at the 500 largest companies. You're looking at some organizations that are meaningfully smaller than that, and the earnings picture is much more mixed. It wasn't that long ago that AI disruption was a major concern to both the equity markets and to the corporate bond markets. And that's a factor that I still think sort of resonates a little bit when you go down in credit quality in corporates. So we're underweight high yield corporates on valuations and seeing some of those other factors and how they'll evolve. We're basically equal weight to the universal index in our core plus strategies with respect to investment grade corporates. That's where you got the bigger corporate names and the earnings are very strong. And away from the key in index sectors, we're looking for other opportunities outside of the index where you might have some lower duration credit spread opportunities that can sort of complement the portfolio strategy.
RJ, thanks so much for joining us. We always appreciate getting a few minutes of your time. RJ Gallo, Deputy Chief Investment Officer, Global Fixed Income at Federated Hermes out there in Pittsburgh. Let's get back to tech because why not? We always go back to tech and there's always a lot happening there. AMD put out some numbers that really were really impressive to Wall Street, and the stock's just ripping here. We also want to talk about NVIDIA and their deal with Corning. We can do that with Kunjan Sabani, Bloomberg Intelligence Senior Semiconductor Analyst. Kunjan, AMD, the street likes what it heard. What did you hear and see with their most recent earnings?
Yeah, the star of the show was really the CPU story. I know for the past whole year, everyone, including media, has just been focused on the GPU. This is where they'll compete with NVIDIA. But over the last 2 quarters, we have been calling out that this is going to be the year of CPU for them, and it did pan out. What's really stood apart was they almost doubled, or actually exactly doubled the TAM for CPU in less than a year than what they had given the numbers just like 9 months ago. They also doubled the growth rate expectations that comes with this larger TAM, again, in less than a year ago, what they provided. So that is what is going to be really driving the growth for them this year. The GPU story, again, is just a 4Q26 or a 27 weighted phenomenon. So this is what is really driving past all the expectations that people had on the street in terms of revenue growth for their overall data center business.
The stock up 17% today, up 95% year to date, and up 325% on a trailing 12-month basis. Just a rip. Market cap $680 billion.
I'm so glad you bring that up because it has handily outperformed NVIDIA, which of course has become, kind of the benchmark for chip and AI. So when it comes down to that, Kunjan, is it fair to compare AMD to NVIDIA, or are investors kind of doing themselves a disservice by always using NVIDIA as the benchmark for AMD?
It is fair. I mean, look, that is the only number 2 GPU provider out there, right? So by default, you are going to compare to that. But what I think people were missing for the last 2-3 quarters, where the only focus was towards the GPUs and not towards the CPU, which is really AMD's bread and butter. This is where they have really made their name and competed against the past competitor of Intel, or the incumbent in that space. So we think need to focus on both those areas, especially right now when CPUs are having sort of resurgence in the AI server market.
Yeah, but also because of this recent surge in AMD, this outperformance over NVIDIA. The stock is really expensive. You look at the price earnings on a trailing basis, it's 144 times, and then on a forward earnings, a 59 multiple versus NVIDIA's 24 multiple, which, wow, Paul, that looks really, really cheap.
Yeah.
So, Kunjan, in terms of valuations, what needs to change for AMD, or can it continue trading at these lofty valuations?
Well, so remember, they are just starting with they will be just starting with their server level AI GPU solution shipping in second half, right? So when we compare the same stage when NVIDIA was also enjoying a very rich premium multiple. So I think as they start ramping these products, as we get into 27, 28, there would be some normalization expected.
Hey, Kunjan, also in your space today, NVIDIA has bought $500 million worth of rights for shares in Corning as part of a partnership to expand artificial intelligence infrastructure. What do you make of this deal?
Yeah, so this is not surprising. NVIDIA has actually been investing in the optical and the networking component and supply chain stack. They also made investments in Lumentum and Coherent a few months ago. And what is this is when we think about the scale-up networking, this is what you connect all the GPUs together. And this is where the pathway is. The more and more GPUs you can connect together so that they work as a single entity, the better ROI you get, especially when you think about low latency for inference, where most of the spending is going. So what NVIDIA has been doing is really investing in the supply chain stack, in the component provider stack, to make sure they have enough supply, because as we know, that's the biggest bottleneck right now. A few months ago, it was power. Right now, it's memory. So it could definitely come down to, optical components being supply constrained. So NVIDIA is just making investments in the right suppliers that they think they are going to work with, so that they have enough supply as they transition to CPU or optical or silicon photonics starting in 27, 28.
I mean, NVIDIA has a lot of cash to throw around.
Yes.
So $500 million would be a lot for a normal company, but not for an NVIDIA. How long can it continue doing this? Kind of throwing out $500 million there, $2 billion there, to companies within its ecosystem. Is there a natural limit to this?
There is a theoretical limit, but I don't think they're anywhere close to that. Look, they're generating so much cash, which, they are doing significant amount of buyback, but for a $4 trillion company, I mean, how much of a buyback can you keep doing to really move the needle, right? So this is, we think, a better use of cash, investing sort of in their customers, investing in the ecosystems, and broadening their reach across the ecosystem.
All right, Kunjan, thanks so much. Appreciate that. Kunjan Sobhani, senior analyst. He covers the semiconductors for Bloomberg Intelligence. He's based out there in our San Francisco office, Pier 3. In
fantastic
the
views.
Bay. Yeah, fantastic views there of the Bay Bridge. It's all very cool out there, right down there in downtown SF. Looking at the market here, just ripping 84 points higher on the S&P 500. That's 1.2%. The NASDAQ doing a little bit better, but about 370 points. That's 1.5%.
But you know what? The market rips, slowly, but it rips even when there isn't any kind of hope of an Iran peace deal.
Yes. So, we had some rhetoric this morning from both sides saying maybe we'll get something done. Maybe we're moving forward. Dial it back a little bit later on in the day, but that's the world we live in. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, all pushing higher right now. S&P at a record along with NASDAQ and the NASDAQ 100 index. Stocks are rallying. Oil retreating on hopes that the U.S. and Iran are nearing a deal to end the war. The S&P right now at 73.39, up 80 points. That is a gain of 1.1%. Dow Industrials up 556 right now, higher by 1.1%. The NASDAQ Composite Index up 367, up 1.5%. NASDAQ 100 Index up 1.5%, also trading at a record. The SOX keeps on going, up another 3.4%, with the VIX holding just above 17. 10-year 4.35%, with the 2-year 3.86%, the 30-year 4.94%. Gold at $46.92 the ounce. Spot gold up 3%. West Texas Intermediate crude $94.91 a barrel, down 7.2%. Barrel of Brent 101.87, down 7.3%. Cannot ignore Bitcoin. Little change right now. Bitcoin 81,503, down by 0.2%. So again, we've got the 10-year right now at 4.35%. R.J. Gallo is deputy CIO at Federated Hermes. Moments ago, right here on Bloomberg Intelligence, he told us, yes, he is focusing on geopolitics, specifically oil.
Today, obviously, the news is hopeful in terms of a potential off-ramp. Don't know whether or not this will hold. You know, for many, many weeks now, it's been back and forth with respect to oil prices. As oil prices go up, treasury yields go up, and vice versa. Today, it's obviously the latter. Remains to be seen whether or not this will hold.
R.J. Gallo of Federated Hermes. Solid quarter for Walt Disney Company. Right now, we do have Disney shares surging by 6.7% after earnings. And briefly, we are just learning that Sony Music said to be finalizing a deal to acquire a music catalog from Blackstone that includes the works of Justin Bieber and Neil Young. It is one of the largest such deals in music history. Again, recapping here, stocks higher. S&P right now up by 1.1%. Scarlett and Paul, that is a Bloomberg Business Flash.
All right, Charlie Pello, thank you so much. Appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. In just a moment, we're going to head out to Los Angeles to the Milken Conference. Joe Matthew and Carol Master from Bloomberg will be speaking with Kathy Wood, the ARK Invest CEO and CIO. So we'll bring that to you in a matter of a moment. Charlie was just with that cool news story about Sony to pay about $4 billion for Justin Bieber and Neil Young's catalog. Man, that's a big number.
I know it is. And of course, you know, this is music that'll continue to pay dividends. What's interesting is that it kind of runs the gamut because it includes works from Neil Young, who you know, to Justin Bieber. And when we saw the headline that said Bieber, I think you clarified that it was Justin Bieber.
Yeah, I needed the first name. But, you know, we've seen this from a lot of the older artists, older bands, who I think for state purposes, primarily, I'm guessing, are monetizing these things and getting the cash now, which is, I guess, a great estate planning move here. And the numbers we've seen are just massive. So the Neil Young kind of fits that. But if you're Justin Bieber, relatively young guy, but I guess he's already got an established, you know.
Yeah, I mean, he's been performing live and recording for a long time. I mean, he was kind of a preteen sensation. So there is that. He has a long career. But I don't know, maybe some of these artists need cash. I don't know if he does, but that's one way of getting it as well. Didn't David Bowie start this whole thing off?
First one, I was just thinking about 20, 25 years ago, Bowie bonds.
Yes.
And they were
and that
bonds,
was revolutionary at the time.
And they were issued, and you don't see that much anymore because now private equity will pay for the actual rights themselves, big numbers. But he issued bonds. The collateral of these bonds was the royalties from his catalog, and that was the way or a way to monetize, you know, your collection.
That's when people were buying records or cassettes or CDs.
Yeah, and I think now the with so much new media being created, you know, there's increasing demand for the rights for music.
Yeah.
And this is a way, you know, you never heard the Beatles stuff in commercials. Now you do. Because they licensed it away. And that's true for other folks as well. You're seeing it, you know, it used to be extraordinarily expensive to license like music for a TV show, and it still is for some people, but it's a lot less so now because the artist who historically did not want to license their or would only do it at a very steep price Now the financial guys own it. They're like, yeah,
Well, you can go one way or the other, right? You can go buy the music rights, or you can use AI to generate some kind of tune to go along with your TV show to set the mood and kind of advance the plot, right?
Yeah, so that'll be interesting. But again, what jumped out at me is, almost $4 billion for Neil Young and Justin Bieber. Just the numbers are just amazing out there. And I wonder, I can't wait to see the analysis. Maybe it's out there. Are these proving to be good investments?
I mean, they get the royalties, therefore, from the streaming royalties? Is that what happens?
They get everything, yeah.
But that doesn't add up to a whole lot.
Well, I think what they're going to say is now we're going to license these stuff out to everybody. I suppose the artist was probably a little bit more. All right, right now, we're going to head out to L.A., to Hollywood, Beverly Hills. Joe Matthew and Carol Masser, they're speaking with Cathie Wood. She is the CEO and CIO of ARK Investments, big technology investments, including Tesla. So we'll have to see what Cathie Wood has to say. Let's take a listen.
All right, Paul and Scarlett, thank you so much. We welcome everybody on Bloomberg Radio, Bloomberg TV, across Bloomberg platforms. Yes, indeed, Carol Masser, Joe Matthew here at the Milken Institute Global Conference. We have a special guest, and I feel like reading in this morning, the headlines were made. It's like they knew Cathie was going to join us. Cathie Wood, CEO, CIO, and of course the founder of ARK Invest. It's so nice to talk with you again. Thanks so much.
Delighted to be here. You gave me my big break in 2015. I'll never forget that.
Well, it's so funny because I want to talk Elon because you kind of put him, for me, on the radar. And I just feel like it was a time when so many people questioned what he was up to. Now everybody is so excited about the SpaceX IPO. We see increasingly how he's kind of melding his universe together. Tell us about kind of that bet. And even today we have that he's building a chip factory, at least $55 billion in investment, maybe as much as almost 120. And he's doing this chip factory, SpaceX with Tesla. How are you looking at Elon right now and what his next era is?
So this is why I founded ARK Invest. We knew that the seeds that were planted in the 20 years that ended in the bubble, they've been germinating for 20, 25 years, and now they're flourishing. And what we're seeing is 15 different technologies evolving, and they're all converging. And Elon, about 6 months ago, and we've been using the word convergence for a long time, he said, you know what? I think my companies are converging more than even I understood. And so we're seeing, of course, SpaceX, XAI, rumors about Tesla. And really, he believes that in the new world, or to create the new world, a company has to be vertically integrated. And so that's what's happening here. He is moving into incredible vertical integration as he moves data centers into space.
Is it all about our Bloomberg Intelligence? George Ferguson covers space, covers defense, but he said it's all about Elon controlling the supply chain, Cathie. But I do feel like globally we're seeing countries, companies really thinking about their supply chain. Is that part of his strategy?
Absolutely, absolutely. And also when a company is breaking new ground, literally in his case, and really inventing something, the supply chain doesn't exist very often, or not all parts of it exist. And I think also, as he's discussed how he's going to do it, he is getting